on some of these standards. A new version was launched in 2023. Actually, this is now free access. You no longer have to have a professional registration, so you can go in there and research these standards if you so desire. If you need late night reading material, is what I always joke about here. So there is a GAAP hierarchy. This really defines the relative authority of the different accounting principles and guidelines used to prepare the financial statements under GAAP. So you have your category A. These are the officially established accounting principles that consist of those GASB standards that I already talked about. And then from there, you move into GASB technical bulletins, implementation guides, and so forth. So if you don't find your answer in category A, then you move into category B and follow that order: technical bulletins, implementation guide. So if you don't find something in there, then I guess you just get to make up whatever you want. But in general, you should be able to find some sort of reference to what you're looking for.
Okay, so let's talk about some of the key environmental differences between governmental entities and just general businesses. You all probably know a lot of this already, but like Hillary said, we're going to run through a brief overview just to give some background as we set up for the remainder of our presentation. So I want to focus on 5 areas: organizational purpose, sources of revenue, potential for longevity, relationships with stakeholders, and the role of your budget. So organizational purpose, governments obviously exist primarily to serve the public interest. So they provide things like essential services to promote the welfare of their communities, whereas businesses, they typically operate to make money. And then sources of revenue, governments obviously rely heavily on taxes and grants and fees to fund their operations. And you all are typically subject to a lot more regulatory oversight than businesses are even. Businesses generate revenue, obviously, through sales and things like that, and they're a lot more driven by the market and competition. So when we talk about competition, that brings us to potential for longevity. And governments tend to have just a more stable existence. Oftentimes you'll see governments or counties, cities that have been around for decades or even centuries. And they're established just to meet those ongoing societal needs, but businesses, obviously, we see them fluctuate a lot more. And then in terms of relationships with stakeholders, governments are really accountable to the public, and you have to focus on transparency and community engagement, whereas businesses get to prioritize their own customers and their target audience. And then, of course, your budget differs significantly. So for governments, budget is a tool for allocating resources to really meet public needs and public priorities. And a lot of times that really reflects policy goals. And I think that you can all agree that we've seen a lot of changes in policy goals just over the last few months. And then businesses, they really can budget however they want to maximize their profits. So again, many of you hopefully are already aware of this, but we also wanted to explore the kind of financial reporting model and focus on some of those essential components that help contribute to your transparent and effective financial reporting. So let's talk about your basic financial statements. These are really the cornerstone of financial reporting, and they provide a comprehensive overview of an entity's financial position and performance. And so they're made up of several things. First, you have your fund financial statements. These statements focus on individual funds, which are separate fiscal and accounting entities, essentially. And so it's going to provide detailed information about the sources and uses of those financial resources. And it emphasizes the more short-term financial position and compliance with budgetary requirements. So fund financial statements are particularly important for counties, governments, because they demonstrate accountability for the use of public funds. When we talk about government-wide financial statements, they kind of are that overarching, broader perspective. So they're going to aggregate all of the governmental and business type activities and give us just a comprehensive overview of the overall financial status of your county. And then the notes to the financial statements, hopefully you're all aware of these, but they are really just integral to financial reporting and that financial reporting model. because they give us additional context. So they talk about some of the detail and the numbers presented, and they give us your significant accounting policies, explanations of specific line items, and then, of course, required disclosures about things like risks and uncertainties. And notes, I think, are somewhere that I typically start when I look at financial statements, because I like to see those details first and then roll back up, essentially. And then we've got a couple other things that are kind of floating out here. You've got your management's discussion and analysis. This is really a fairly critical element of financial reporting. But I've seen governments actually not even include an MD&A. I've seen that gap departure. But the MD&A kind of gives you the opportunity to highlight and narrate your key trends and significant changes and any future challenges you see. And so it gives the opportunity for management of your county to kind of communicate directly with stakeholders and explain some of those financial results. And then RSI, required supplementary information. This includes basically any additional information that's essentially required by your reporting entity in order to hopefully provide a more complete understanding of the financial statements, but it's not included in the basic financial statements themselves. So some examples of RSI are going to be your budgetary comparison schedules, and you might have information about like infrastructure assets. Those types of things are considered RSI.
And this is one area we see a lot of not just governmental agencies, but organizations in general needing assistance with, is the drafting of these financial statements. This is where, your new accounting standards come into place. Okay, how do they impact the statements? How do we update our disclosures? Those types of things. So we don't necessarily do a lot of compilation only engagements, but we can help draft financial statements in certain situations. But it is something that we help a lot of our attest clients or our audit clients. We do sometimes assist in that drafting, not typically MD&A since we're not management, but we can help, again, either draft or just provide some guidance. We obviously see a lot of financial statements, and so we just have a lot of great examples or thoughts on how things should be presented. Okay, so continuing on with financial reporting. So going back to GASB 34, this established the financial reporting requirements for state and local governments. There's obviously been several changes since. We're up to GASB 102 or 4 now. So lots of changes since, including GASB 63 and 65, which introduced that deferred inflow and deferred outflow terminology, as well as changed the measure to net position, and then just provided further clarification on how to apply that deferred inflow and outflow resources. Fund accounting, we're going to talk a bit more about this in some future slides, but this is the self-balancing set of accounts. As a reminder, there are two bases of accounting. So you have your economic resources, measurement focus, and accrual basis of accounting. And then you have your current financial resources, measurement focus, and modified accrual basis of accounting. It's really going to depend on what type of fund you're reporting under that will impact that type of, or that basis of accounting. Budgetary reporting, as Brooke mentioned, important part of your financial reporting. We're really not going to cover that here today. Not a significant area of expertise for us. Again, we have insights, but we will not be touching on that much today. All right, so jumping into the elements of the actual financial statements, shown here are your elements of your statement of financial position, balance sheet. That's a no-no word, right? But for our people in here who may be new to governmental accounting, similar to your balance sheet. So you have your assets, which are resources that present resources with present service capability that the government presently controls. As a reminder, a resource in the governmental context is an item that can be drawn on to provide services. You can think of like your taxing power there. Your liabilities are your current obligations that you have little or no discretion to avoid. And then we start getting into these deferred outflows and inflows. Again, still not a new concept, but just one that doesn't come naturally, I would say, to most people. So your deferred outflow, this is going to be your consumption of net assets that are applicable to a future reporting period. And then your deferred inflows are the acquisition of net assets applicable to a future reporting period. And then lastly, your net position, your equity. This is essentially the residual of all other elements that fall out. So what I don't have shown up here is your income statement or your resource flow statement. Essentially, it's your inflow and outflow of resources, so not deferred. So the consumption or acquisition of those net assets relevant to your reporting period, plus or minus your other financing sources, ultimately leads to your change in net position.
Okay, so building on what Hillary said, fund accounting, right? It provides the means to report financial activities based on these different legal and reporting requirements and operating objectives. So governments receive resources from a variety of sources for multiple purposes. This can include things like tax revenue, grants, fees, fines, and each source really typically has a very specific use, and that use reflects the diverse needs of your community and the various services that you provide. And it's important to note that governments may hold something called restricted resources. And these are going to be those funds that can be only used for designated purposes. Things like public safety, education, infrastructure. And understanding these restrictions is really crucial for ensuring that resources are allocated appropriately and in alignment with your legal requirements. Governments engage in a wide variety of activities. Again, you have so many different operating objectives that you're dealing with, and that can include things like public health and safety, education, and transportation. And each function requires tailored funding strategies and operational plans to really meet those specific community needs effectively. And in order to comply with these restrictions, governments really need to demonstrate compliance with legal and other restrictions placed on their resources. So accountability is really just essential for maintaining that public trust and ensuring that funds are used as intended. So regular reporting and things like audits really help ensure that governments adhere to these requirements. And I know that nobody wants to hear about their audit or how it's a requirement. Being audited is never fun, but as a formal external auditor, I tried to make it fun for my clients and tried to approach it in a helpful manner, but I know that sometimes that's not always the way it happens or the way it feels when you're on the other side of it. But it's really important to enhance that public trust and ensure that funds are used as they're intended. Governmental funds can be categorized into three main types. We have governmental funds, proprietary funds, and fiduciary funds. Again, hopefully you all are kind of familiar with some of this, and this is more of a review. We'll get into more of the meaty details later, but basically each type has a distinct purpose and is essential for effective financial management. So governmental funds primarily used to account for activities that are financed by taxes and other type of non-exchange revenues. And they focus on current financial resources and typically are used for things like day-to-day operations. Some key examples include your general fund, you might have special revenue funds, or capital projects. Governmental funds really just emphasize compliance with like budgetary and legal requirements. And then proprietary funds, these operate more like that business style that I was talking about earlier. And they're used to account for things that generate revenue through user fees. They focus on the flow of economic resources and actually include two main types. You have enterprise funds, which provide services to the public. So that's things like your water and sewer, internal service funds, things like that. And then proprietary funds are, and sorry, I said that wrong, which you have your enterprise funds and you have internal service funds. Internal service funds are what provide service to other government departments, and the enterprise funds provide services to the public. And then you have your fiduciary funds. Those are used to account for resources that governments hold in trustee or agency capacity for others. And those funds are not available for operations. They might include things like pension trust funds, investment trust funds, or agency funds. And they really emphasize stewardship and accountability to ensure that resources are managed in accordance with the trust placed in the government by the individuals or organizations. So understanding this kind of structure is really essential for grasping how you should manage your financial resources. And each fund type kind of plays a different role in ensuring that transparency and accountability for your constituents.
I always like to remind people, auditors are people too, right? We're people too. Okay, moving along to just some more financial reporting. This is just showing the different types of financial statements based on the type of fund. Note that your statement of cash flows is only for that proprietary fund. And then just the different naming. It's so confusing, but it's very important, the naming that you use based on the fund. So just a visual of those different types of funds and the statement names there. Okay, as mentioned previously, there are two methods of accounting under GAAP. You've got your modified accrual and your accrual basis. As I mentioned, it really depends on the type of fund. We will go over governmental and proprietary in more detail on the next slides. The basis of accounting is concerned with when a transaction or event is recognized in your accounting system. So it really does impact, and we say accounting system, but ultimately it's what ends up on your financial statements, right? There's going to be adjustments. There's going to be things that maybe you don't accrue for or do accrue for, but for financial statement reporting purposes, you do. But in essence, it's when these items are recorded in your accounting system. Per the state auditor's website, only approximately 20% of the local governments actually report financial information in accordance with GAAP. All others report on a cash basis as prescribed by the budgeting, accounting, and reporting support manual. So we realize that a lot of you or your people that you work with are reporting on a cash basis, but GAAP really is the authoritative guidance. So that's why we're trying to focus on that here. This is another area. As new standards come out, we have people, not me, that dive into these standards, learn them, and then they teach me and I pass it along. So this is another area that as new standards come out, or even old standards that you are struggling to understand, this is another area that you can ping us or reach out to us and we can probably provide some assistance. We don't like to provide an opinion on your position necessarily, but we can provide how we interpret the guidance and how we have seen it applied at other organizations. Okay. Brooke, is this me or you? Is this me?
I was muted. I think this is you. I think this is me, but you're welcome to take it if you have notes on it.
Oh, it scared me. I thought this was mine. Go ahead, Brooke.
Okay. So governmental funds are under the modified accrual basis. And under this accrual basis, and I would just add that even if you're reporting under cash basis, it's kind of important to understand your departures from GAAP and what you're not doing. So kind of having this basic level, like Hillary talked about, focusing on this and understanding this is great background, especially if you end up in a situation where you change the way you report. So under modified accrual basis, revenue is recognized when it's both measurable and available. So this means that the government, your county, can reasonably estimate the amount of revenue that is collectible within the current period or soon enough thereafter that it can be used to pay the liabilities of the current period. So this approach kind of ensures that revenue is recognized in a timely manner and appropriately reflects the government's financial position. When it comes to expenditures, they're recognized when incurred, but only if the transaction will require the use of current financial resources. So that means that governments record expenditures when they have that legal obligation to pay them, ensuring that they are managing their current financial resources effectively. And Hillary's mentioned this, but the measurement focus of the modified accrual basis is on current financial resources. So that just emphasizes that short-term financial position of the government and allows stakeholders to understand how available resources are being utilized to meet those immediate obligations. And there's a few types of governmental funds that I mentioned a few earlier, but your general fund, kind of your primary operating fund you use for day-to-day activities. A special revenue fund is used to account for specific revenue sources that are restricted for particular purposes. There's that restricted word. Capital projects funds, those are focused on resources used for the acquisition or construction of major capital assets. Debt service fund is used to account for resources that are set aside for your repayment of long-term debt. It's exactly what it sounds like, right? And then your permanent funds, these funds are used to report resources that are legally restricted to the extent that only earnings and not principal can be used for the purpose that supports government programs. So essentially, modified accrual basis of accounting is for governmental funds and provides a kind of clear framework for recognizing revenue and expenditures that focus on current financial resources. Next, we've got our accrual basis as it applies to proprietary funds. So this accounting method is really important for providing that comprehensive view of the financial performance of government-operated, businesses, essentially. So under the accrual basis, revenue is recognized when it's measurable and earned. So this means that revenue is recorded when the service has been provided or goods have been delivered. And that's regardless of when the cash is received. This is where you can think kind of like accounts receivable or accounts payable. That's when those kind of come into play. And this approach ensures that financial statements reflect the true economic activity of the entity. And when it comes to the expense side, they are recognized when incurred. And that means that expenses are recorded when the government has a legal obligation to pay, regardless of when the cash is actually dispersed. And that allows a more accurate representation of the costs associated with providing those goods or services. And again, we've talked about this, but that measurement focus for proprietary funds is on the flow of economic resources. So that perspective kind of emphasizes your overall financial position and your operational results of the entity or particular fund you're looking at, providing stakeholders with kind of insights into profitability and sustainability. And I talked about this earlier, but again, proprietary funds come in two main types. I won't get it wrong this time. Enterprise funds. These funds account for activities that provide goods or services to the public for a fee. So you can think of things like water and sewer. They operate, again, very similar to a private business, and they're really intended to be self-sustaining. And then your internal service funds, these are funds that are used to account for services provided by one government department to another. So they help in managing costs and improving efficiency. And a very common internal service fund you might see is like IT support or even things like fleet management. And so this accrual basis of accounting in proprietary funds is really kind of crucial for accurately reflecting those revenues and expenses and being able to focus on the flow of economic resources.
So moving into fund balance and more of the details on that, these are the 5 types. In the financial statements, government should disclose the policies and procedures around the classification for these different types. And then, so each type and then the policy and procedure kind of for what is in those different buckets. So making sure that that's pretty clearly disclosed in the footnotes. I would say I could mix these up very easily. So that's why it's really important for a reader to be able to go to your footnotes and know exactly what are in all these different buckets. So let's talk about the details of each one. So the first one, non-spendable. Not in a spendable form. Pretty straightforward, I'd like to think. But these are legally or contractually required to be maintained intact. Things like inventory, prepaids, long-term loans, and your permanent fund. Your restricted fund is going to be restricted for a specific purpose by either externally imposed creditors, grantors, contributions, or laws or regulations, or imposed by the law through enabling legislation. So these are things like your bond proceeds, the expendable portion of your permanent fund, legal settlements that have restrictions, transportation funds, and budget stabilization. The committed, these are amounts to be used for a specific purpose pursuant to formal action by those charged with governance. The example that I came up with was for higher education institutions. This would be tuition funds. Your assigned balance is constrained by the government's intent to be used for a specific purpose, but not restricted or committed. So that's helpful. But essentially, if it doesn't fall into one of those other restricted or committed buckets, it's going to end up in this assigned bucket. One example is your working capital. And then lastly is your unassigned. This is the residual balance of everything that doesn't fall within one of those other buckets. So again, that's why it's very important that the policies and procedures around how you determine what falls into each of these buckets is disclosed in your footnotes, because there's obviously some judgment and some maybe gray area in how exactly you should be applying that.
Okay, so you've heard fund balance. Now let's shift to net position. And the idea of net position is really just, in my opinion, a measure of overall government financial health. And it comes in three main components. You've got net investment in capital assets, restricted, and unrestricted. So first, let's think about net investment in capital assets. It's really exactly what it sounds like. It represents the value of a government's capital assets, such as land, buildings, and equipment. Let's see. Hillary, I think I'm still on the slide before. Sorry, I'm giving an overview, and then I'll jump into the detail on every one of them. So this one, it reflects really just the value of government's capital assets. You've got your land, buildings, and equipment, and then you take out any outstanding debt related to those assets. Next, you've got your restricted net position. That portion kind of comprises resources that are subject to external restrictions. Again, it's things that are imposed by your creditors, your grantors, or just laws and regulations. So example, funds received for specific purposes, such as public safety or infrastructure projects, those fall under this category. And then your unrestricted, that kind of includes resources that are not subject to any external restrictions. And really, this is kind of the catch-all bucket for everything that is not restricted or net investment in capital assets. And these kind of give the government more flexibility in use, because they can be used for general operations, funding like new initiatives, or kind of addressing any unforeseen financial challenges. And basically, understanding that position and these three areas is really important. So next I'll go into a little more detail on each area. So capital assets, net investment in capital assets, basically, and maybe this is obvious, it includes your capital assets. So it's going to include capital assets, but it's important to note that it's net of accumulated depreciation. And capital assets, again, you should kind of have an idea of what these are, but it includes things like land, buildings, machinery, and your infrastructure. And by subtracting out your accumulated depreciation, we kind of arrive at the current value of those assets, and that is reflective of their wear and tear over time, right? That's what depreciation is supposed to represent. Next, you take out any outstanding debt. So you might have bonds, mortgages, notes, or other borrowings, and it's only those that are specifically attributable to the acquisition, construction, or improvement of those capital assets. So you take out debt, but it's debt that is specific to your capital assets. And that debt represents those financial obligations that the government has incurred in order to finance those assets. And so it's essential to account for that to determine the true net investment. Another thing that I just want to mention is that it's important to consider leases. If a government has entered into a lease agreement for capital assets, the liabilities associated with those leases should be included in that outstanding balance. And then if there are any significant unspent debt proceeds or deferred inflows of resources at the end of the reporting period, that portion of debt or deferred inflows attributable to the unspent amounts should not be included in the net investment calculation. I know that's a lot, but essentially, you want to get to the bottom line of your capital assets. So what is the current value and what do you currently owe on those, and take that out. So you know that what you have reported is the most representative of your current value. And then let's talk about, oh, go ahead, Hillary.
Elise's word. I hope we didn't make anyone shudder too much. We won't bring up spit, so we'll go ahead and just say that once and get it out there and get everyone's fear off the table now.
I was really scared to say that word. I was like, maybe I should just skip over that. Nobody wants to hear it. Okay, so net position component known as restricted net position. This measure is really essential for just understanding how those certain resources are earmarked for specific purposes. You're going to hear me say that multiple times, but it just means that you can't use it for anything except its intended purpose. Restricted net position, again, obviously, you begin with your restricted assets. So these are those resources that have limitations placed on their use. A lot of times this is cash. But some other examples are going to be like, well, it's all still cash, but typically from grants, donations, or specific taxes that are intended for particular projects or services. So if you have taxes coming in for a particular bond or like public safety, infrastructure improvements, things like that, that's restricted for that purpose. And then, of course, you subtract any liabilities or deferred inflows that are related to those restricted assets. That can include any obligations that you've incurred in connection with those resources. It can mean accounts payable or unearned revenue. And by accounting for those, you can determine that net amount, that bottom line of restricted resources that are available for their intended purpose. And restricted net position is reported when constraints are placed on net position. Again, that's either externally or internally, but very specifically, external constraints come from those creditors, grantors, laws and regulations, and they're dictating how those funds can be used. Internal constraints are a little bit more rare, but you might see those imposed by certain legislation that establishes specific requirements for how certain resources have to be allocated. And so kind of this understanding restricted assets and the associated liabilities help your stakeholders gain an insight into how effective you are at managing your resources and fulfilling your obligations to fund those designated programs.
So this rounds out our kind of GASB overview. I have a few more slides on supplanting. I had to make sure, I said it so much over the past few days, I had to Google to hear it again and make sure I wasn't saying it wrong. But before I jump into this, are there any questions or comments on what we just covered?
And feel free to put questions in the chat too. I'm happy to monitor those there for those of you online.
And we'll be sure to leave contact information. So if you want to get a hold of us, that's, as I mentioned, totally welcome. Okay, so supplanting versus supplementing. If I mess this up, I'm sorry, y'all. You'll just have to try to stick with me. So supplementing. This occurs when the federal funds are used to enhance the existing state or local funds for that program activity or activities. Supplanting is reducing those state or local funds for an activity specifically because the federal funds are available. As a reminder, federal funds are not permitted to be used to take the place of or replace state and local funds used to offer those programs. Therefore, federal funds must only be used to supplement existing state, local, or tribal funds for those program activities. So again, your federal funds can supplement, they cannot supplant or replace them. So here's a quick scenario. Organization X received federal funding to purchase 4 vehicles outlined in one of their target areas. Organization X adjusted its local budget, which had originally allocated to pay for vehicles, and shifted that local funding, which it budgeted to purchase the 4 vehicles, to other target area purposes. This is supplanting. Again, the organization had already budgeted in their original budget to purchase these vehicles. They received federal funding for it, that's fine, but you can't then shift that state and local money already allocated to something else. It still would have to stay with the purchase of those vehicles. So really tricky, but just trying to keep track of what has already been budgeted and allocated, and making sure that you aren't shifting that money around, even though you receive resources for it. A few tips on how to avoid this. A lot of this is in theory. It's a matter of putting it into practice. So you'll hear us say throughout the presentation, documentation, documentation, documentation. So the biggest thing is documenting, obviously, and keeping really clear records on what's federal, what's allocated, how are we going to spend this, and just keeping that documentation for your purposes, to protect yourself, to protect others within the organization, but also to educate, people coming after you and the general public. Education is always important, ensuring that everyone in your office or that you interact with that needs to know how to understand the difference between the two. That's always kind of step one. You can see there's a variety of other tips up here. I think we'll be able to share these slides if they haven't already, so that you will have access to this as well.
I always tell my clients that if it's not documented, that means it's not done. If your auditor comes in and asks for information and you say, well, I remember I did this. If you didn't write it down, then how do they know? You have to be able to prove that you did it, and documentation is the best way to do it. So making sure that you're documenting everything is really important, not just for supplanting, but just in general.
We talk a lot about institutional knowledge, right? A lot of you have probably been in your positions for many years. You know it, it's all up here, but what about the next person that comes along? It's no longer there. Really hard to go back and try to write it all down at once. So we're always telling our clients, write it down as you're doing it. Start keeping a list, even if it's just, notes or something. Start it now. It's a lot easier to put that all together at the end than trying to, be on your way out the door and then try to have to document it all. Okay, so with the end of this section, we're going to move into GASB updates. Do I switch it or?
Can I ask a question about supplanting?
Absolutely.
So sorry. I think to us, it not only involves that use of federal funds, but the use of some of the restricted funds that we have. And governmental entities, a lot of our revenue streams are decreasing, but yet we have the Safer Criminal Justice sake. For example, we have bargaining units that keep giving them increases every year, and the general fund or the funds set aside committed by the general fund can't always keep up with that. But then there's this, well, you really can't pull it from the criminal justice sales tax funds, because there's a clause in the RCW that says no supplanting. So, it's a slippery slope, because either you start laying people off because you can't make your budget commitment, or you use some of these funds. What are your suggestions on that when the money that is used for that simply isn't enough, but you have all these other funds building?
So I can give a brief example of this. I actually have a client who is they're governmental, but they're a college, and they had almost the exact same scenario that you're referencing, where what happened actually is they had donor funds for building a new building. And unfortunately, they were facing some hardships on the just general fund side, where they were having to make layoffs. So what they started doing is actually pulling in funds from these restricted funds and using them to support the other side, which obviously, again, not allowed. And it actually went all the way up to their board, and their board actually approved it. And obviously, again, still illegal, unfortunately, even if the board approves it. And something that they did is they took a really hard look at their budgeting. I wish I had a, bright solution for you that would make it really easy. But unfortunately, they ended up just having to pay back those funds to the restricted fund and obviously, I guess, and they also did have to end up making some cuts. So we just live in a world that sometimes it's really not fair the way we have to make these decisions and these cuts. Something that I do on the consulting side is come in and help kind of with process improvement and process flow to try and make things as efficient as possible so that potentially we can find ways to save money in certain areas. But yeah, unfortunately, it's really frustrating to see certain areas building and building when you know that you could use that money for so much, maybe not better purposes isn't the right word, but to keep other areas afloat. So I don't know about you, Hillary. I wish I had a better answer for it, but that's kind of the reality that we live in.
Yeah, I would just add, if you're continuously seeing this issue, it may come back to taking a really hard look at your budgeting process and say, okay, the past 5 years, we've had this problem where we're got an excess of funds here and not here. Maybe there's something we need to be looking at in our budgeting process to right side that, look for efficiencies in other areas. So yeah, unfortunately, we don't have a great answer for that. I know it's a tough area, and you think, well, just don't give me the other money then, right? Or can you put it over here? Unfortunately, it's not quite that easy. So good question.
So could you potentially move some of your expenditures over to that area? Is that a better option? So let's say if it was criminal justice, you would move a couple positions over to that fund and move the expenditures rather than moving the revenue, move the expenditures. Is that like robbing Peter to pay Paul just to, or would that work?
I know off the top of my head specifically, Brooke, I don't know if you've seen this in practice.
Essentially, if you move positions in there, they really should be supporting that fund. So there's potential that you could shift things around, absolutely, but you would still have to be able to justify how they support that fund and how that expenditure relates to those specific revenues. Again, I know it's not exactly what you want to hear. I wish there was an easy answer to fix that. We need an easy button for this because it's something that all governments face.
Excuse me. I've wondered many years if I have a position in 2024 and I'm not going to have the funds for it in 2025 to budget it, but I do have a grant now that I can get. I would have had to lay that person off. Now I could keep them. Would they consider that supplanting as long as I documented it? To me, that seems like I'm not supplanting. I was going to lay that position off.
Yeah, I think it comes down to documentation, absolutely, there in your budget process, knowing, hey, we're going to lay this person off, but now we actually have a grant specifically for this. I think the documentation is key, but yeah, I would say that that's probably appropriate. Brooke, thoughts?
Absolutely agree. I think that as long as you're not replacing funds you already had. So if you didn't have the funds and you were going to have to lay somebody off, then absolutely, I think that that's an appropriate use of those funds.
Okay, I wasn't going to ask my spicy question, but Heidi's close on me. So isn't the difference between supplanting and supplementing sort of a matter of timing too? So I'll give a scenario that I'm not saying I've seen locally, but maybe I've heard about. Department comes to commissioners in the budget process and says, we're going to do this thing, or we're going to hire these positions, and we have grant money coming, right? And then the grant money does not materialize. So first quarter budget amendment, we fund it with local, right? We find money in the general fund or in one of the restricted funds that apply to those purposes, and then fund those positions or that programming. And we do this every single year. Is that sort of supplementing? I mean, it wasn't ever adopted. It wasn't ever committed. It's just conversational. What are your guys' opinions on that?
I think you're walking a fine line.
Okay. I'm not walking any line.
Not you.
I've heard about these things in state government. Never counties.
Your best friend. I realize this. I think you're walking a fine line, but I do agree with your comment on timing. We talk to clients a lot about single audit. We'll talk about uniform guidance here later. We talk about, okay, the threshold for a single audit is $750,000 currently. Oh, anyway, we're always like, well, you know, I'm not saying to shift money around, but do you have to spend that extra $100,000 this year? If you don't, you're going to fall under that threshold or whatnot. So I think that's kind of a similar thought is, are there ways, again, you're not inappropriately shifting expenses or reporting things in the wrong period, but from a strategic standpoint, is there a way to hold off on approving some of these things or budgeting these positions? I know that's really hard, but there is a little bit of an element of a timing issue. I would agree with that. And I think there could be some strategic approach to it.
I think for me, the best way I think about this is that I'm not replacing something. So I've seen, this was not a county. Let's just say none of these scenarios are counties. Let's just put that out there. Counties that do everything perfectly, right? I had a client who actually had budgeted for, with just general funds, 4 new positions in a certain area. They later received a grant, and instead a grant specific to these positions. And unfortunately, instead of adding another 4 positions, so they would have ended up with 8 positions, they just replaced the funds they had originally budgeted for and moved them somewhere else. And I think, again, a lot of this is timing. If they had not originally budgeted for that year, then it really wouldn't have been supplanting, right? Because they wouldn't have had a plan to put those positions in place that year. And they could have rearranged their budget for the following year based on the grant funds. So yeah, I absolutely think timing is a huge piece of it. And just, again, documenting exactly why you did something and the reason you did it and the reasons you believe that you are supplementing, not supplanting. Any other questions on that? I know it's a big topic.
I would be interested in asking the state auditors during their time about their testing process for supplanting and identifying and, confirming a supplant and the ramifications. Is it always payback, or are there other options?
I think that's a great point. In the state of Washington, obviously you all are audited by your state auditors. In the state of Oregon, they actually do it a little bit differently, where municipalities have an external auditor that is not the state. So I've had the opportunity to participate in those types of audits. And the way I don't want to, this is not at Moss Adams, this is at my former firm. We didn't actually have a really solid way of looking for that. So I would be really curious to hear what the State Auditors Association says about that.
Okay. So we are going to move into GASB updates. I hope some of this is relevant. If nothing else, it's probably just good to have a basic understanding of what's going on with the accounting standards currently. Okay, so we've broken 100. We're up to GASB statement number 100. This is accounting changes and corrections. Oops, okay. This may have already been implemented, is effective 6/30, 9/30, and 12/31/2024. This made a few updates from existing guidance that was actually brought over from FASB. The changes in accounting principles will follow the transition guidance in the new standards, or if the change is related to existing guidance, it should be reported as a restatement to prior periods presented if practicable. We'll dive into that a little bit more. Changes in accounting estimates are reported prospectively by recognizing the change in the current year flows. No change from current guidance with respect to that. For changes to the reporting entity, these are adjusted by reported by adjusting the beginning of period balances, so beginning of period net position, fund balance, etc. And finally, the changes that are a result of a correction of an error are reported as a restatement to prior periods presented. Show you an example as well how that would look. So overall, really didn't result in any significant change to existing practice, but it did provide some further clarification on some situations. There's quite a bit of gray area on exactly how to apply this. So this standard's really just trying to clarify that. Do we see this impacting a lot of organizations? Hopefully not. No corrections of an error. Maybe a change in reporting entity, but overall, hopefully we don't see too much of this impacting people. So how does this impact RSI and SI, your required supplementary information and supplementary information? So the one clarification that was made in this statement has to do with how restatements that are a result of a change in accounting principle or a correction of error should also be reflected in your RSI and SI. Again, if the restatement is due to a change in accounting principle, like adoption of a new standard, then the change should only be presented in the periods presented in the basic financial statements. Therefore, this would not be an update to your required supplementary or supplementary information, except for the fiscal years covered in your financial statement. So if they're comparative, you would have to show it for both years. Correction of an error, however, the restatement would be reflected for all periods impacted in the RSI and the SI. So your required supplementary information that shows up to 10 years of information, if you have a correction of an error, that would have to flow through all the way through all of those schedules that are shown in your financial statements. Few examples of where a change in reporting entity might occur. Not going to go through these. Again, I don't really anticipate this having a huge impact on too many of you all. This example is the opinion of Moss Adams. This is not an approved GASB version of how this would be reported. But again, you can see here that you show it as an impact. You've got your original beginning balance adjustment with the changes within the reporting entity and the fund balance as adjusted. The reporting entity should be reported by adjusting beginning net position and fund balance effect as if occurred at the beginning of the period on the face of the financial statements, which means, again, your balance sheet, income statement. Sorry, I'm using the wrong terms here. But on the face of your financial statements, not in the footnotes. That's where that change has to occur. So you could see that this is really going to expand your financial statements if this were to happen. You think, oh, one more column, no big deal. But that's one more column in an already big financial statement. So that's a little bit of a weird piece of this statement, is just seeing that correction is going to flow through there. Statement 100 also includes presentation and disclosure requirements. We've talked a lot about the presentation already. However, additionally, the notes to the financial statements should also include information about the nature of the change of the error, reasons for any changes in accounting principles or estimates, and then utilize a tabular format to show, again, how those changes impact your beginning amounts. The disclosure requirements are fairly consistent with what we're seeing today. It's really that presentation change that I showed on that previous slide. Okay, 101. This one we do think will probably have an impact on quite a few organizations. This is called compensated absences. This is effective for 12/31/24, 6/30/25, and 9/30/25. So you may be hearing of this being adopted or in progress right now. So this standard now requires that liabilities for compensated absences be recognized for leave that has not been used and leave that has been used but not yet paid in cash. So that first bullet point is kind of the kicker here, is now that it's leave that has not been used. So this is attributable to services already rendered. It accumulates, can be used for time off or otherwise paid or settled in a future period. And the last one is key, is more likely than not to be used for time off or otherwise paid in cash or settled through non-cash means, more than a 50% likelihood of being used. So again, this is going to take quite a bit of judgment and thought on how it's going to impact exactly all of the leave that is out there. So some leave that would not be recognized under this standard, if it's already covered in your post-employment liabilities, it's not another liability that needs to be recorded. If it only impacts a small amount of employees, such as jury duty, family leave, military leave, excuse me, and then unlimited leave in certain holidays. If it's unlimited, you really have no way of estimating it, so almost impossible to account for it. But anything that falls outside of this would fall under 101. Okay, moving into a little bit more of the details. So what the standard says is that at the date that you are accruing the liability, so as of your fiscal year end, you use the pay rate in effect at that date. Even if you know tomorrow you're going to implement a pay raise, that is not the rate that you should be using. You need to be using the rate as of the date of the financial statements. Certain salary related payments that are directly and incrementally associated with the payment for leave also needs to be included. I think this is also a piece that people may overlook. So employer share of taxes, required contributions to certain retirement plans, that all has to be factored into this liability now. On the positive side, because there's always a positive with GASB standards, there's no new disclosure requirements. So it's really just in practice adjusting this calculation. The biggest impact is expected for governments that have more traditional sick leave policies that were only accrued for based on expected termination payouts. Now these will be required to accrue for balances for sick leave that are expected to be used in a future period. So some other considerations, as I mentioned, in terms of the impact of this standard, it's going to probably take quite a bit of work to read through all of the policies and make sure you're really thinking about, have we captured every type of compensated absence that we offer to our employees? So a deep dive into each program is really going to be necessary in order to really fully understand the impact of this standard. Sick leave programs in particular will need careful review. Although sick leave may not be paid out at termination, in reality, sick leave is earned and it is expected to be used in a future period while employed. I remember when the GASB representative, when this first came out, I think it was 2 or 3 years ago, they were talking about it. The whole room was up in arms about this. They're saying, well, why would I accrue for, what if that person quits tomorrow or whatnot? And they said, it doesn't matter if they've earned it and it's expected to be used. So it's up to your judgment to decide how, what's the 50% more likelihood, then it has to be accrued. So, yeah.
Okay, so I want to clarify this with you. So we have been beat over the head with this, I feel like, a lot, but we couldn't figure out what was different. But the way you're saying it, if we have a sick leave policy that we pay out 240 hours, but somebody has 320 hours, we were only showing the 240 hours that we'd actually pay out in cash if somebody were to leave that day. But what you're saying is we should really be doing maybe not the whole 320 because they probably won't take 120 hours of sick leave, but we got to figure out some kind of area of what they might use next year using trends.
Correct. And historical use, you can disaggregate your population if that helps to say, okay, these types of employees are this percentage, these types of employees are this percentage. So yes, it is more of a expected to be used. I don't know, Brooke, maybe you can provide some insight. I don't know that you would have to go over, if you're only going to pay out 240 though, I don't think you would have to look at the full 320. But now that that's a good
question. So I'm trying to think. Sick leave would be recorded to the extent it's probable the employer would compensate the employee on termination or retirement. So I think it would only be to the amount you would pay out.
I think so too, but we'll circle back on that and confirm.
Yeah.
Yeah, so you'd still look at, okay, it's still at 240. What's the likelihood that person is going to use that 240 and how much of the 240 are they going to use?
So I just wanted to say I got some clarification from Stacy Tellers yesterday because I was a little confused about the same thing you're talking about. And what she described was that we do the trend of what they're going to use in the coming, year, what they're going to use, subtract that from their total sick leave. And then we use 25% payout at termination. And then we take 25% of that total. And that's what we report for the liability in cash basis. This is cash basis. So that is a little bit different, I think, maybe. I don't know if that's saying exactly what you're saying there.
It is
saying the same thing? Okay.
Yeah. And that's
Yeah.
where it gets tricky, looking at those policies that say, okay, employees 0 to 5 years, you're going to get this much. Oh, and a percentage of this. So looking at those policies and really understanding what we actually expected to pay, not even pay out, what is earned and potentially able to be paid out.
And so for those that use it as they receive it, no issue, right? You know, a lot of earn and burn. Yeah. So because they don't really have an accumulated balance or they might have 10 hours or something. So those
I think you would still need to evaluate what they would be expected to take in the next year, even if it's earn and burn.
Yes.
Yeah, I just pulled this up. So to qualify for the liability, the leave has to be attributable to services already rendered. It has to accumulate, and it has to be more likely than not to be used or settled through cash or non-cash means, is what it says. And the more likely than not threshold is in accordance with your own employment policies related to leave, historical information about use, payment, and forfeiture, and then information that would indicate historical information may not be representative of future trends. So it sounds like it's kind of one of those things where it's just an analysis you have to do based on that information.
My question is regarding last year when we had the training on this, it sounded like the trend was overall, but this sounds like we have to do each person's trend individually.
You don't have to. I think that would be actually quite painful. But I'm saying if you want to disaggregate, if you know your management team tends to take less compensated absences, okay, maybe you segregate them and look at them as one population and apply a percentage. Or you look at it holistically, you could do that too. There's just varying options on how to do that. I do want to remind everyone too, there is materiality. I know you probably may not know what your materiality is, but if as management you think this just can't impact us that much, always keep materiality in mind. Discuss with your auditors before you head down a rabbit hole on how to apply this new standard. So always want to remind people of that too. Did I mention the plus side? There's no new disclosure requirements. Just had to throw it out there again. Okay.
I think really the moral of the story is that it's a little bit confusing and it's almost individualized to each organization. So in your case, in each county, you kind of have to do your own assessment, and there's not like, oh, this is an assessment you can apply across the board, because it's dependent on your own policies.
Typically, we have whole hour-long training on how to implement this standard. So this is just a really quick high-level overview. But again, happy to answer questions. Let's follow up here. Okay, recently issued. I'm going to kind of speed through these. I'm not sure that this one may. GASB 102, certain risk disclosures. This is a disclosure only update that's focused on identifying concentrations or constraints within the government and assessing if the government's vulnerable to the risk of a substantial impact related to those concentrations or constraints. So if certain criteria are met, the government would have to include disclosures related to these risks. If anyone's ever reported under FASB, this is pretty standard language to consider constraints and concentrations. So identifying the risk, although 102 is primarily disclosure only update, it does require governments to assess if they have known concentrations or constraints. If a concentration or constraint is identified that makes a government vulnerable to a risk of substantial impact, then you will need to assess in the event that they may have substantial impact have occurred, have begun to occur, or are more likely than not to occur within 12 months of the date of the financial statements are to be issued. And again, consider those appropriate disclosures. So it's really looking at, are you vulnerable or open to any sort of constraints or concentrations? If so, make sure that gets disclosed. The most basic concentration that we see a lot, again, I work with a lot of higher education institutions. Is there a big concentration in a particular type of student, geographical location? If you get a bunch of contributions, is there one person that's giving a lot of those contributions? So those are some examples of specific concentrations. Disclosures would include information about the concentration and or constraint, the event associated with that concentration or constraint, and then the actions being taken to mitigate risk. Again, you're just trying to inform the reader that, hey, we've identified this, here's what we're doing, here's what's happening. This will take quite a bit of judgment. What you think is a concentration and constraint, maybe I don't think it is. So again, I think this will take some opinions of yourself, your management team, and then your auditors. As always, I would recommend that you start thinking about this now, though, right? When you're up against the wall trying to think of everything, like, no, there's nothing out there. Whereas if you have a runway to think about it, things might start coming to you. So again, this one isn't quite effective yet. So important to start considering if it will have an impact. Financial reporting model improvements. This is upcoming, effective after June 2025. I'm not sure this will have a very big impact. This is just related to financial reporting improvements. This ended up being a very scaled down version from the original exposure draft. So yay there. See, look at all this positivity I'm showing you all this morning, okay? Areas impacted. The big one that we've been focusing on is MD&A. Again, I'm not sure that would have a big impact to this group, but just enhancing that, making sure that it is a really valuable, usable document, a good way to communicate information about your financial statements and events during the year for the reader. Also, there's unusual or infrequent items. Statement 62 defines these items, which is still how unusual. It's still how they are defined, so not much change there. However, any items identified as unusual or infrequent should be presented as inflows and outflows as the last item prior to net change in resource flows in government-wide, government fund, and proprietary fund. So they just want to make sure that it's being called out specifically if those items do occur. Budgetary comparison information. This should be presented as RSI for the general fund and each major special revenue fund that has a legally adopted annual budget. Separate columns for the variances between original and final budget, and actual are required to be presented. Lastly, major component units. You should report each major component unit separately in statements if it does not reduce the readability of the statements. If it impacts the readability, then combining statements of major component units. So a little bit of flexibility on that standard, or that piece of the standard, I should say. So I talked about enhancing the MD&A. This is really just trying to make sure it's a usable informational document. I think in certain instances, the MD&A has become a bit of a boilerplate template that just update your current changes and percentages and isn't necessarily providing the information that the standard would like to see. So again, really just trying to make this a more usable, important document. As I mentioned, proprietary fund changes. Here is one example. This is one of the bigger changes related to the presentation of the proprietary fund, statement of revenues, expenses, and changes in net position. The updates start more in the middle, but the creation of a definition of flows that are considered subsidies. Overall, the impact of these changes may vary, but for everyone, the structure and words within the statement will need to be updated. And since this will require retroactive implementation, this means governments need to start thinking about that now in case it could impact your financial statements. That was a really quick overview of current standards. There are as always, more GASB projects on the horizon. So these are some of the current, current projects now. I realize some of this stuff is a little old, so current maybe not the right term here. Some post-implementation review reports. This is to provide feedback to improve the standard setting process. So just some information on the standards themselves. And with that, that wraps up a very quick GASB update. Any other questions at this time? I once heard you're supposed to wait 9 seconds. That's how long it takes someone to get the courage to ask a question. I think I've made it to 5 once, and then I start panicking and talking. So at this time, we're going to go ahead and take a break, and then we'll come back, and we've got basically 2 more sections to cover. So I think 15 minutes, and then we'll be back at 10:03.
All right, we are going to get started again. So if everybody could find their seats or their standing place. Just a quick reminder too, for those who want CPE, don't forget at the end of the session to sign out so you get your credit. And also Derek wanted to tell me, or wanted me to tell you guys that there was some problems with the bacon. So they're going to be switching the bacon out tomorrow. And I said, wait a minute, I thought everything was better with bacon. So we're going to do bacon tomorrow.
Okay, Hillary, part 2.
Great. So you got to listen to me yammer on all during the last session. So I'm going to actually turn it over to Brooke. This is kind of her area of expertise. Listen to that. All right. I swear it's just coffee over here. But we're going to hand it over to Brooke to talk through some of these. I think this can be a very open conversation. We technically have one more section that we want to cover after this, but if we don't get to it, it's uniform guidance updates. I can get some things out quickly on that. So please, if you have questions or want to talk more about any of this, please don't hesitate to raise your hand or enter online a question there. And Brooke, I'll let you take it away.
Awesome. Thanks, Hillary. So this section of our presentation is really just going to focus more on internal controls, understanding audit findings and responses to audit findings, or how we respond to those audit findings. Do you have control of the, okay, perfect. So I know that you all don't need polls for your CPE, but I wanted to just throw this question out there and ask about the state of policies and procedures in your county. So there's different sections here. Maybe raise your hand as I read each one, and Hillary can be my eyes. So do you have comprehensive and useful policies and procedures in place?
Oh, yeah. All right. We got a few hands. Okay. I'm not sure what that means, but we got a shake there. Most.
Do you have some useful PMPs, but you need more?
Yeah. Got a few there.
You have PMPs that are not comprehensive, or maybe they're outdated.
Yeah.
And then my favorite, counties have policies and procedures, which don't be ashamed if that's you, because I do see that with clients quite a bit. And those of you online, feel free to drop your answer in the chat as we go through this. I'm always curious to hear from people. Okay, so some basic learning objectives from today. I want to focus on the nature of audit findings. So, like what constitutes an audit finding, what are the implications of it, and they can really range from compliance issues to operational inefficiencies. So we're going to talk about that. We're also going to talk about effective response strategies and kind of how you should respond to those findings beyond just, filling out your response in the letter that you have to do. And then third, I want to talk to you about how to implement strong internal controls and why they're so important for financial and operational integrity. So we're going to talk about things like segregation of duties, proper documentation, that word documentation again, policies and procedures, your ongoing monitoring. All of those things can help kind of prevent issues before they come up. And then really just the importance of fostering this culture of continuous improvement, right? Let's take a mindset that encourages learning and adaptation instead of more of a punitive environment, right? Let's try and encourage that. So next slide, I'm throwing another question at you right off the bat. Which of these areas are you really most interested in? That'll help me kind of tailor what we talk about. I know we're limited on time. So first is understanding audit findings.
No hands.
No hands. Okay. Nobody wants to know about their audit findings. Implementing strong internal controls.
Yep. Interest. Lots of interest.
And then developing some continuous improvement strategies.
Yep. Majority.
Okay. Or, all of the above, of course, is an option. I see a lot of C in the chat too, so I appreciate those responses. Okay. So I'm still going to talk about your audit findings really quickly. I'll move through these fast. Audit findings, unfortunately, kind of crucial for your government to understand. They really help ensure that counties can be accountable for your financial practices, your operations. These findings can help provide transparency to your stakeholders, your taxpayers, regulatory bodies. Obviously, nobody wants a finding, right? Because really, findings are kind of identifying weaknesses, and you don't want to have any weaknesses. But it really helps highlight your compliance with regulations. It helps you improve your financial management and even enhance your operational efficiency. So a finding can actually be used as a starting point to guide the approach we take when we're looking at internal controls, when we're building out policies and procedures, when we're working on all of these things in order to help build public trust. So when you can respond effectively to an audit finding, it really demonstrates a commitment to good governance and ethical practices. And even these audit findings can help facilitate that continuous improvement that we all were interested in. So audit findings can serve as a catalyst for that improvement. And by fostering a culture that values that feedback and kind of learning from past experiences, you can adapt and evolve your practices to meet those changing needs and challenges. And then really, it even helps with risk management. So audit findings can help identify and assess risks that could impact your county's financial health and your operating effectiveness.
Yeah, I always tell my clients, blame the auditor, right? I'm the easiest scapegoat. If you have an audit finding, you blame that audit finding, you blame the auditor. Hey, we got this as an audit finding, because sometimes it's hard to implement change. People are resistant. Change is hard, whether it's good or bad, right? So I always tell my clients, I'm like, just blame me. I'm fine with that. You know, I gave it to you. Go ahead and use that as, like Brooke said, a catalyst to make that change or to have continuous improvement. So I don't know how your state auditor would feel about that, but you could blame me. I'm okay with that. That's fine.
Say Moss Adams told me I could blame them. They have nothing to do with our audit, but we're still blaming them. No, that's honestly my approach as an external auditor was always like, I would ask that question, what do you want to see change? And even now from the more internal audit consulting side, that's something we ask every client is, what do you want to see change? And that's something we can put into our report in a way that doesn't place blame, but does help kind of initiate that change. So maybe you're trying to push something through, and I don't know, I assume you all have like county commissioners or some sort of governing board, and trying to get things through them sometimes can be difficult. So having that backing can really be supportive. Okay, so quickly, how to respond to these findings. Improvement, not judgment. I don't know about the auditors you all have, but that's always been my approach as an external auditor. I want to help. And it can be really difficult for counties of any size, but particularly smaller counties, when you are very limited with staff, it's hard to implement segregation of duties. Like, hopefully these findings are helping you improve, and you can take it as that, as not a judgment, but as a way for you to kind of foster this actionable plan that can help enhance your operations and compliance. Consider it constructive feedback. We all hate getting feedback, right? Our annual reviews come around at Moss Adams, and I swear I am sweating bullets every time. But that constructive feedback can really be important for providing some insights into processes and controls. As kind of a side note, when I first started in public accounting, I'm not going to tell you how long ago it was, but it's been quite a few years. I had just moved up to like kind of a more management senior level role, and I had a partner tell me in an evaluation that I wasn't being patient enough with the staff. And let me tell you, I took that very hard. I don't like constructive feedback. I don't like any feedback, apparently, but it was really important for me to get that feedback and implement it going forward and kind of recognize that about myself. And I think it's the same when it comes to audit findings. Yeah, it's really stinky to get that feedback, but it's important to kind of analyze your findings and engage with your auditors to understand, like, what are the recommendations to move forward with this. how can we fix it so we don't get that same finding next year? And then just a cooperative approach with your regulators. That's really essential. Building that positive relationship can help facilitate some open communication. Again, trying not to take things personal. It can be really hard with audit findings, and hopefully they're finding ways to have a conversation with you about it before, and there's no surprises. But that's really the best way you can approach it. And then realizing that it just supports your organization, your county's integrity. So responding to effectively to audit findings really is a way that we can be taken seriously and show that we're willing to act upon these findings and improve our commitment and reinforce our commitment to ethical practices and accountability. And then fostering that continuous improvement. You're going to hear me harp on this a bit, but really just addressing those audit findings is a way to foster a culture of continuous improvement within your county. Implementing changes based on feedback creates a cycle of learning and adaptation. And it really encourages innovation, helps us stay responsive to evolving needs of our county, and then any challenges we face. I mean, we have lived through some very turbulent times over the last 5-6 years. If you consider the impact of the COVID-19 pandemic and everything like that, I mean, it's just had a huge impact on every organization, government, not-for-profit, for-profit. Every organization has seen changes. So I want to jump to some common findings that we see. Deficiencies in internal control over financial reporting. Those are typically outdated policies, or the cause of that is typically outdated policies and procedures. You might have inadequate segregation of duties, like I mentioned earlier, can be really difficult when you have a small staff, or just insufficient documentation. We've talked about documentation throughout this presentation. It's so important. Single audit findings, obviously nobody wants to get those, but it happens. These are typically, your non-compliance with your grant requirements, inadequate internal controls, or a cause of this a lot of times is inadequate training. So especially with the COVID pandemic, we saw, a lot of funding coming in from that. And I'm trying to be careful how I say this, but there wasn't a lot of time or energy put into training on those grants. And it was more because the federal government just had this influx of money all at once. And so all of a sudden, this money is just being passed down, and you all get the money, and you're like, whoa, what do we do with this? What are our reporting requirements? So that was actually a really common cause that we saw come out of COVID-19 related to single audit findings. And then management letter findings or comments, these aren't something that typically gets reported out, but it's just something that comes to you internally. And this is going to show you, this is typically some sort of operational inefficiency the auditor might see. Lack of strategic planning can be a common cause, or even just failure to embrace best practices. So on the next slide, we'll talk a little bit more about, or the next few slides. I'm going to do this quickly because I know this wasn't an area that you all wanted me to focus on, but I still think it's important. Deficiencies in internal control, again, segregation of duties. That lack of separation between responsibility for authorizing, processing, and reviewing transactions, that can really lead to errors or fraud. And something that I do with a lot of my clients is talk about how can we implement segregation of duties when we have a small staff. I've worked with a significant number of small organizations that maybe don't have, or one of my most recent clients that was a county actually only had 3 staff in the accounting division, including their treasurer. Okay, so you're looking at a very small staff, and they're trying to figure out ways to implement segregation of duties so they don't get in trouble with their audit. Documentation, talked about that. Hopefully by now you've got the idea. Make sure you maintain proper documentation. Weaknesses in your financial reporting process, that's just really ineffective processes for preparing your financial statements. This can be a lack of review and oversight. It can be a lack of appropriate training. Employees might not be adequately trained on not only financial reporting, but just internal controls in general. And this can lead to non-compliance that isn't intentional. Failure to monitor controls, again, can lead to those undetected errors. And this is a big one that over the last, I would say 6 months even, I've seen a huge influx of engagements, client engagements, that are policy and procedure specific. For some reason, there's a big focus in the audit realm right now. Maybe not for some reason. These are important, but there's a big focus on policies and procedures right now. And I have numerous ongoing engagements helping clients update their policies and procedures to reflect not only current regulations, but also best practices that can help them avoid compliance issues. On the next slide, single audit findings. These ones, again, pretty obvious, but your non-compliance with your grants, insufficient documentation, inadequate internal controls is obviously a huge one when it comes to your grant management process. Failure to conduct risk assessments. Performing regular risk assessments related to your federal funding can really give you a lot of kind of unaddressed compliance risks. And this is another area that I help my clients with, is just how do we, what are we missing, right? Like, everyone might think, oh, we have the best policies, we have the best approach. But until you have that external factor, somebody coming in and doing a risk assessment and saying, well, actually, here's some areas that you might want to consider. That's something I've been doing for clients lately as well. And then communication and coordination. This is something I've seen. I had a client, they're a city, but their payroll department and their HR department, man, they do not like to talk. And I felt like the entirety of my engagement was really more conflict management. And that's okay sometimes. So helping build out that communication between departments can really be helpful. And then just, again, training on federal regulations. You have those uniform guidance updates that hopefully we'll have a little bit of time for Hillary to get to at the end. And then last here, management letter comments. These are more areas that the auditor typically finds that they think you could improve, but they're not going to rise to the level of a finding. And so these are ways that you can get ahead of the curve and avoid a finding, right? So you have these management letter comments that typically relate to operational inefficiencies or insufficient performance metrics is an area we see. Limited stakeholder engagement is another thing that I've seen come across there. So if you don't engage with your stakeholders, this can actually result in missed insights and opportunities for improvement. And so that's kind of a critical area.
Yeah, these really arise because, again, we're seeing so many different organizations. We're auditing them. We're seeing all layers and levels of impact of these. So these are really a result of our industry experience. These are what we call best practice comments. These are things that we say, hey, this is an area for improvement. You choose if it's a risky area or if it's something you want to change. If not, fine. But here's what we see out in the industry. So to Brooke's point, this is a really valuable area with your auditors or consultants that you bring in, because again, with that industry experience, you can get examples of oh, here's what someone else has done or not. So we almost every audit ends up with a management letter comment of some kind. No one's perfect out there. And I think that's just really where the value comes in for having external third parties come in and look at your operations and audits.
So one of the areas that I kind of specialize in now, I've mentioned it, but policy and procedure work. And policies and procedures are really just essential for establishing a framework that's going to guide your operations. It helps enhance accountability, and it ensures effective governance. And I have an example from a client. I'm going to give you way too many client stories, and I know I'm going to hit time on this. But I have a client who they had an issue in AP, and essentially boiled down to the point that they wanted to fire the person that had committed this situation. I don't want to give too many details, but they basically got in legal trouble and were told that, you really can't use this as a reason to fire this person. because it's not documented anywhere that they're supposed to follow this process. And so policies and procedures have more than just an impact on your audit or everything, but it also comes down to how policies and procedures can help establish consistent processes and required processes. So by defining standard practices, your norms, your consistent processes, you can ensure that all of your employees understand their roles and responsibilities. And this consistency not only improves efficiency, but also reduces the risk of errors and misunderstandings. And I know that we're all constantly looking for ways to be more efficient. Especially governmental is just, it's a tough world to be in. Funding's always limited, or, like we talked about earlier, funding is great for one area, but we're limited in other areas. So finding efficiencies is really important. Policies and procedures help support continuity, and they can provide stability. Whether, times are changing, whether due to personnel shifts, budget adjustments, external pressures. Hillary talked about earlier, like, you probably have a lot of institutional knowledge that's built into somebody's head. Let's get this documented so that if they win the lottery, I used to say if they get hit by a bus, somebody told me that's not the best way to say it. So I've changed what I say now. If somebody wins the lottery and quits tomorrow, are you going to be able to replace their role and have documented understanding of what they do? That kind of feeds into that, facilitating clear communication of expectations and just making the implicit explicit. So what we're seeing, counties across the United States, I have clients all over the US, and counties are rethinking their manual processes. A lot's changed over the last several years, and with the influx of remote and hybrid work, it's just been really important to kind of review current practices. We still have some clients that are in that weird phase of like paper-based, but also hybrid kind of, and increasing automation can obviously be a really powerful way to enhance your efficiency in processes. But the transitional period, you really still need to focus on the internal controls. So include documentation of approvals and system access in your system. It can be really exciting to be able to reduce a process, that takes normally 3 weeks because you're passing paper around, down to 3 days because everyone's just able to do it right in your system. And we want to make sure that you're applying a lens of thinking through the internal control implications of that shift. We've also seen a lot of changes in the way counties are purchasing items, and even getting items has been, it's a little better now, but coming out of COVID, it was kind of difficult. Sometimes there were things that had really long lead times for necessary items. I'm thinking like even vehicles, right? So we've been finding an increase in the number and price tag of purchases that are being made on P cards, as well as like a lot of additional vendor accounts being created to get supplies. And this is just another area you really want to focus on, those internal controls, making sure everything's entered correctly, approvals are documented. I talked a little bit already about the change related to the way grant money was coming in during the pandemic. So all of a sudden you have all of this additional grants and different kinds of grants that you have to properly account for and establish reporting processes. And I know that a lot of counties and governments in general struggled with those reporting requirements and saw some findings come out of that. And so with so much change going on in all of these processes, policies and procedures are a way that I see people or organizations kind of implement some semblance of, I don't want to say control. You never have complete control of a situation, right? But some semblance of documentation and documenting those processes to reduce reliance on sole contributors of information.
The absolute the absolute number one area that we see fraud, sometimes unintentional, purchase cards. We always are looking at purchase cards. We inevitably maybe we don't find something, but we almost always see something that there could be an improvement. There's not appropriate review. It's not happening timely. You don't have the right policy in place to enforce. If you don't have the receipts, how do you get? So anyway, if you have a lot of purchase cards or any purchase cards, this is absolutely an area that you can focus on and really hone in on. Again, this is something that we see across the board. Almost every year there's something. We don't always catch it. A lot of times our clients are catching it. But again, purchase cards, it's like a 4-letter word in our works.
And that actually leads, my next slide's about fraud risk. And that's exactly what I was going to talk about. You know, fraud risk is just ever evolving. Vendor confirmation, cybersecurity, employee ethics, and internal controls are some ways we can help prevent this fraud. I had a client who's a county, and they actually had a situation where somebody had hacked their email system and sent an email telling their CFO essentially to wire about $50,000 to a certain place. And it was not something that was super out of the ordinary for this county. It's been about 6 or 7 years since this happened. And they went ahead and did it without confirming with anyone. And it was fraud. And that is something that has just become a huge, huge risk for people. So on top of P cards, which is something that as auditors we're always looking at, it's just important to also be aware of those types of cybersecurity controls and system access controls as well. So on that note, I want to talk about some of those high risk control areas. And the first one is purchasing. Purchasing is critical because it involves procurement of goods and services. We talked about P cards a little bit already. I'm going to get into each of these areas on their own slide, so I'm not going to spend too much time, but just, again, a very important area. Grant management is another area I love to see documented policies and procedures for, because counties often rely on grant funds to support their various programs and initiatives. So this is really a particularly high risk area. And then personnel is one that I don't think people think about a lot. But this area kind of encompasses hiring, training, and employee management. And some of those high risk factors include, weak hiring, weak onboarding processes, and it can result in hiring individuals who might not align with the ethical standards. And even just not providing training, appropriate training, can lead to performance evaluation issues. All of those things you want to document. And it's not all bad. Promotional opportunities should also be documented so that it's clear how employees can move up. Because otherwise you can get kind of a low morale, high turnover because people don't see opportunities for growth. And then crisis management. This is an area I love to talk about. I'm going to try and be quick, but man, especially after COVID or even wildfires that we've seen across the West, just those types of things, key risks that insufficient emergency response plans and a lack of crisis communication strategies can really just impact your county. So to get into some detail, procurement, purchasing, bidding processes. You want to have a well-defined bidding process to ensure transparency and fairness in your procurement. Vendor verification. Before entering into contracts, it's really crucial to verify credentials and reliability of potential vendors. This can include things like checking references, reviewing financial stability, and even comparing or complying with certain relevant regulations. Suspension and debarment, you might want to check sam.gov for things like that, particularly if you're looking at grant funds. And then contract management. Obviously vital to ensuring that all parties fulfill their obligations. You want to make sure that things are very clear. Change order approvals is another area I see left out of policies and procedures a lot because maybe you don't think it happens very much. But a lot of times change orders happen more than you think. So it's important to kind of outline that process for requesting and reviewing and approving change orders. And then payment processing. Obviously, transparent payment processing is really essential for that timely and accurate payment to your vendors. And then grant management. This should really focus on kind of 7 key areas here: grant proposals and application process. Again, well-defined process for developing and submitting grant proposals. And obviously each one might have a little bit of nuance, but outlining roles and responsibilities can be really important in kind of setting up everyone for success. Indirect cost proposals and agreements. It's important to understand how to allocate your indirect costs effectively so that you're not in non-compliance with federal guidelines or things like that. Awarding and contracting, again, standard process for accepting and managing grant awards, really crucial. And let's see, what else do I want to talk about? Obviously, cost reimbursement versus forward funded grant procedures. It's important to kind of have that difference. Grant closeout, you want to make sure you have a very structured process for grant closeout. And it's kind of important, maybe not kind of, it's very important for identifying individuals responsible for each of these areas. And then last, of course, your CEFA preparation. Who's responsible for that? And understanding which grants are included, deferred revenue tracking. It's really a critical piece that I know Hillary sees a lot, but it kind of helps facilitate your audits because you already have that documentation in place for how we're going to prepare it, who's preparing it, who's responsible for each area, that type of thing. Personnel obviously plays a really critical role for governments, and hiring processes, onboarding, ethics, promotional opportunities, remote work, defining what's allowed and what isn't, especially as you've seen, we've seen policy changes with the current administration related to remote work. Does that flow down, making sure that you're just aware of the environment that you're in and how remote work plays into that. And then, of course, compensation. Everyone wants to know the importance of compensation and what that's going to look like. So having all of those things documented in policies and procedures is really important. And then last area that I'm going to cover quickly, crisis response policies and procedures. You want to focus on sick leave and coverage, emergency response, and crisis communication. So these are areas, again, that I think people don't consider. I want to especially mention emergency response. A well-defined emergency response policy is really just vital for preparing a county, any organization, to handle unexpected situations effectively. So you want to include things like natural disasters, workplace violence, health crises. And I wouldn't have had health crises prior to the pandemic. But that's just another area in the world we're living in. So outlining roles and responsibilities for staff during those events.
Brooke, I'm going to
Okay.
skip the polling question.
Yep, please do. Okay, really quickly, I'm going to talk about kind of some implementation, maintenance best practices. This helps with your ongoing understanding. So develop your policies and procedures. Get agreement across the board. You need leadership agreement, stakeholder agreement. You want to involve your staff in these development of your policies and procedures. Obviously, implementing them. You want to make sure you're monitoring and reviewing them. You want to constantly be assessing how well everything's working, if it's being followed, and if they're having the desired outcome. And then, of course, the update phase based on that monitoring and review. So you want to establish clear communication channels, assign accountability and oversight, and just encourage this culture of compliance. Let's go ahead and skip forward another slide. Okay, so how do you prioritize what you should be focusing on? Obviously, if you get an audit finding related to a particular area, it's great to focus on that area, develop policies and procedures in that area so it's very clearly documented what should and shouldn't be done. You can do this via an inventory, so analyze what you currently have. Something that I do a lot for clients is a gap analysis. So basically, once you have an inventory in place, what's missing? I go through and look at policies and procedures and figure out, okay, this is what's missing, this is what we can do, this is what you should implement, this is best practice, that sort of thing. And then updating and development is another area that I help clients with a lot. and we work through basically creating a document that's specific to your county, your organization, and works for your situation. Like I mentioned, some counties might be really small, have a very small staff, and making sure the policies are in line with that. Okay, go ahead and skip the next poll too. You can skip that as well. So how can we help? I think that's really what I want to focus on now. Moss Adams does a variety of things. You don't have to come to Moss Adams for any of this. We would love to have you all as clients, but it's not a requirement that you come to us. But just know that there are organizations, entities out there that can provide you with these opportunities, these solutions, helping you enhance your efficiency and transparency. We have a lot of solutions and options for that. Go ahead and skip to the next slide. Benefits of internal audit. That's kind of my team. The title of my team is Grants Compliance and Internal Audit. And so one of the things that we do is help with enterprise risk assessments, entity-wide internal controls review. We might focus on specific areas, and we just look for those key outcomes to help identify risks prior to a major issue and enhance that transparency. On the next slide, some focus areas, procurement, payroll, and timekeeping, all of these things that I've already talked about. But we do offer, fully outsourced internal audit services if that's something you were looking for. But we also help in just individual areas. So right now I'm doing an assessment for a city on their accounts receivable processes. There's just different ways that we can help clients and hopefully make sure that we eliminate any risk of, well, you can never eliminate a risk of having an audit finding, but hopefully we help you find those risks and kind of put procedures in place to help with those. So this is kind of a summary of what we've learned. I know we're short on time, so go ahead and skip one more slide. This is a QR code that takes you to Moss Adams government internal audit website. So if you want to take a look at some of the areas that we have as opportunities, then feel free to do that. Okay, Hillary, I know I took more time than I should have, but I'm gonna switch it back over to you.
2-minute uniform guidance update. This update is effective as of 10:43 on March 26th. I do not know if legislation has changed since I checked this morning. Uniform guidance drives your single audits, federal expenditure awards. That was revised April of 2024, effective for awards 10/1/24 and after. That is a general rule. Agencies have the opportunity to apply that differently amongst their awards. So it's going to be very important that you go check with your federal agency or your cognizant agency as to when that will be effective. Biggest change is the trigger for a single audit went up from $750,000 to $1 million. And the change for indirect rate went from a de minimis of 10% to 15%. That is an area that could be changing. National Institution of Health, NIH, as I don't know if everyone's heard that, but the administration came down and said they're limiting the NIH indirect rate. So this is an area that could be changing. So I just want to say that there's lots of change. We have not seen the compliance supplement for this year, which is what drives our audit procedures. It will be very interesting to see when that comes out and what is in there. We've reviewed drafts here at Moss Adams, but we have not seen the final issued guidance. So again, as you all know, things are changing, but just be aware that there are changes in the federal compliance area as far as audit procedures and requirements at the levels of people receiving funding. With that, I will open it up for questions. We've got just a couple minutes.
So we just recently implemented a automated system where if we're going to do an ACH payment, there's an email sent out ahead of time saying it's coming. And I think I get my travel reimbursed that way. So I think I got the first one like a month or two ago. And my accounting staff just told me this week that we had somebody spoofing a vendor come in and wanted to change from checks to ACH, and we had gone ahead and set it up without verifying, and then we shot that out. Vendor replied back, "No, we didn't ask for that," and so we caught it and obviously didn't lose any money. But so what I'm talking about is automating as much as you can. So this was an automated ping, So I think that's a good lesson that in today's world, automate as much as you can of those policies and procedures that allow you to, be safe.
And don't ever think you're being too cautious, I would say, right? They're very good at what they do. Man, if they put that energy into something else, it'd be amazing what they could solve. But don't ever think you're being too cautious is what I would say.
Absolutely. So common. And even if that, don't be hard on yourselves if you fall for it, because it happens.
But again, I just really want to thank all of you. Really appreciate you allowing Brooke and I to be here today. I'll leave a couple business cards, but Derek has my contact information as well. Happy to facilitate conversation or questions after this. You can go to our website. We've got webcasts and articles and alerts, and we've got more information than I think you could ever want to deal with. You can even go down by industry, get specifically to state and local governments. But again, thank you so much for having us today. Really appreciate this opportunity and hope you all have a wonderful rest of your day.
Thank you, everyone.
Thank you so much, Hillary and Brooke, for that great presentation. And just a little shout out to Moss Adams. You can sign up for free CPE. They do some great webinars. You can hone it down all the way to government. And they do some great webinars. And you get free CPE. So in case you needed that. We're going to take a 15-minute break. So we'll see you back here in what? Oh, yes. Don't forget to see your vendors during break and network. Just know, it's just not about going to the bathroom and getting more coffee.
Check, check. Check, check.
Check, check.
All right, if everyone could please find their seats, we're going to get started here in about a minute. Please get to your seats.
Maybe we should get started. Yeah, I think so. Okay, so it'll be there.
All right, we're ready to get started. And just a couple things I want to remind you of. If you need CPE, remember to sign up at the end of the session. There will be a place you sign out. If you're online for CPE, they are tracking your attendance, so you are good there. Also, today's lunch, because I know we're getting close, so everybody's concerned. It's going to be plated, so you will need to make some room on your table for them to put your lunch on there, and it will be in here, so don't run away. All right, our next presentation.
We are so excited and so grateful to have with us today two treasurers from the Washington State Treasurers Association. Well, we have three.
Well, I believe we have three treasurers.
Person and one is
No, one in person.
Oh, one in person. Yeah. Oh, you're us. Oh, gosh. Okay. One in person. Anyway, we are so excited to have a collaboration because the Schedule 6 has requires a lot of collaboration between the auditor and the treasurer. And so we are here to find out how we can help. How does this process work? What is this schedule all about? So I am so excited to have Stacy Prada here with us today, the Honorable Stacy Prada, and online we have Pam Johnson, Okanogan County Treasurer, and Stacy is the Jefferson County Treasurer. We have Judy Shepard, Finance Director from Jefferson County, Jill Shacklett, and Nicole Dice, Honorable Nicole Dice, Pend Oreille County Treasurer, that will be joining us online. And please take an opportunity to thank these ladies for coming. I mean, this is so amazing. Going to be a great session. Do not be afraid to ask questions afterwards.
Okay, I'm sorry, Zach, but it's not forwarding.
Oh, there you go. Just these two.
Okay. Okay, you need to press it with intention. All right. So, thanks everyone for coming. Delighted to have the auditors asking the treasurers to come, and I hope we can add some value and actually meet your needs for this. So, whoops. That's why. All right, we have 6 panelists. Stacy Prada, I'm from Jefferson County, and I have Judy Shepard, she's our finance director. We have Jill Shacklett, the financial manager for Pend Oreille County, here with us. And then we have Nicole Dice online. And from Okanogan County, we have Pam Johnson and Carrie Hall. All right. So, because, let me get this read completely. You're coming expecting a session on understanding and preparing a Schedule 6 with a well-coordinated approach between the auditor and treasurer's office that can streamline the process and improve accuracy. It'll include a breakdown Schedule 6, outlining key responsibilities, common errors, and best practices for collaboration. Attendees will gain insights into reconciling cash and investment balances, ensuring compliance, and optimizing workflow efficiency. And we have 54 minutes to do that. So what we would really like to do is get a little Q&A. What are you really here for? what would make this a successful session for you? So what would you like to learn? You know, it's a large topic. I do think maybe this could be the first of a series. But let's say, is there anyone who has something you would like to focus on today?
Well, I'll jump in. I would like to know when you treasurers gather and maybe you grumble together about what you wish your auditor would do for you to help you better prepare this schedule. What are the things that you would like to see happen and us to have provided to you?
Great. So in the group, just a show of hands, how many are cash counties? Is there anyone here who's not? Okay, so we got a few. How many do a 13th month? Okay, good mix. How many are on the same financial system, auditor, treasurer? How many aren't? Yeah, I've been there. And how many are on an ERP with cash management in it? Okay. So we're all different, which means the answers to most of these questions on the Schedule 6 are going to be different. Okay. So Washington State counties, cash or gap? I'd like to note this chart. First, the data is from information I pulled in 2023, so it may not be current. I know Mason County was talking about going to gap. I don't know where they are now. Also note, the chart shows an auto scale on the left. So the difference is only 3 counties, but it looks like a lot because the axis doesn't start at 0. So one thing about this is one of the resources are the other counties that do it the way you do it. So find your similar counties. All right. The slide deck had a quote page, so I decided to grab one. It's not the mistake that matters. It's how you deal with it, what you learn from it, and how you apply that lesson to your life. It had a whole bunch of places posted, no source, but just really, we're going to make mistakes. How do we deal with them? All right. So on to collaboration. Whose job is it anyway? And it depends. So in the session description, you know, it'd be who has the key responsibilities and what are the best practices. It really does depend on your systems and people. So I'll just start and then we'll go to each of the panelists. For collaboration, we've evolved quite a bit in Jefferson County. You know, it used to be the Schedule 11 and we just put information out there and the person in the auditor's office just did the annual report. It was kind of a black box. We didn't understand how they were using the information we provided. When we went to the Schedule 6, we kept doing the Schedule 11 and we haven't gotten rid of things because we're not quite solid on where we want to land, but we keep doing all this stuff, putting it together, and started off as we we did the top part, handed it off to the auditor's office, and we had some of the reconciling, they did some of it, then they put stuff in, and then we'd go back and forth on, well, what's this, what's that, and then we moved to last year, the treasurer's kind of the keeper of the Schedule 6, and so the auditor will provide information that we then put in there. So maybe coming from the same county, Jefferson, Judy, you could talk a little bit about your perspective on collaboration.
Oh, okay. Thank you. So collaboration is really important. When I first started at the county, I was chief accountant in the auditor's office, and we were on 2 different financial softwares. And so information was imported from the treasurer software AS400 into GEMS. Most of you don't know what that is. It's not that important. But then that was the keeper of the GL. And so the challenge with that is I had no clue what the treasurer was doing. So when I first started at the county, the only way I could figure that out is to walk down the hall and have a conversation with the chief deputy and start understanding what their transactions are, how they work. And actually, I feel like because of my lack of understanding what they did, and I'm one of these people that just can ask questions, and I'm not afraid to ask the hard questions also. And so I would just keep asking questions until I understood. And that forged the relationship. It opened the door for a relationship between the treasurer and the auditor. And the thing that I want to say here in collaboration, we have silos, I believe, in our governments. And there's ownership of certain areas of the work we do, right? However, the success of being able to balance and do that Schedule 6 is paramount to have collaboration between the two offices and the staff of those departments. Being able to communicate with one another and talk to one another and discuss and understand what each office is doing. That's the only way, I'm going to just say it, that you're going to have success with this schedule. It's paramount.
So maybe because Jill's here, we could also get Nicole up so they could talk from Pend Oreille County's perspective. Great. Hi, Nicole. Thanks for being here.
I'm Nicole Dice for the people out there who don't know me. And I agree with what was just said about collaboration. And in our county, I start the Schedule 6 and then Jill finishes it, but we work together on the bottom piece. And I think for us, I'm still not real comfortable and thrilled with the Schedule 6, but it's getting better every year. And it just took a collaboration and even Jill and I just sitting down, re-looking at how we process things through our financial system. And we did change the way of how we manage our bond payments. I think that really helped the Schedule 6 and just other things that you kind of learn every year. Just having those conversations and working together, I think has really helped improve how we do it. And I'll let Jill talk about her portion.
Well,
Talking about the collaboration part, before we had Schedule 6, our auditors would sit in my office to do the audit. And they did their Schedule 11 up in the treasurer's office, and the state auditors would try to do the reconciliation. We did not have to do it. They didn't have any part. But I heard them having trouble with transfers, and it dawned on me that transfers meant something different to them than it did to our treasurers. So I went up and I would ask Nicole a lot of questions, and then they're talking about two different things. That's why they couldn't. So that put a light on me, and talking about those kind of things with Nicole and asking her a lot of questions helped us with Schedule 6. Once it started, she provides all of this data, more data than I probably need. But that I'd rather have all of that to make me think about, how does this touch this? How does this touch this? And so the communication part was definitely very important for us too.
Great. You both bring up really great points about fund transfers and bank transfers and payroll and going to payroll tax bank accounts and other things, and how we really would think of those as transfers. Or, if you issue a warrant and it gets deposited there, it's an in and out. Where does it go on there? And then the other point you brought up about debt and changing how you book the debt payments. So tailoring your general ledger transactions to match what you need it to do on the Schedule 6 easier. Both great points. So back to, let's see, we've got Pam and Carrie from Okanogan County. If we could get you both up, maybe you could mention something about collaboration in your experience.
Hello, this is Pam Johnson, the Okanogan County Treasurer, and Carrie Hall, the Okanogan County Auditor, is sitting here with me in my office. It takes a ton of collaboration. We could not do it without each other. Actually, we still do Schedule 11. And I have probably learned more than I wanted to about C4, C5 on, but that truly is that I start out with doing the top with all the bank statements and stuff, and then the deposits in transit and what's outstanding. I do that part, but then everything else from there on is her and I working together, trying to determine what's on the GL, what's not on the GL, and things like that. So that's where we got to really work together and try to figure out. We are on 2 separate type of systems. I do export my stuff into right now it's Eden. We're going to be moving to Munis, into the auditor's office and stuff. So that's where we got to figure that out. We feel that some of our problems that we have has to do with junior districts and the way things are done through junior districts and on the C5 of how it lumps things together compared to what's lumped together in C4s. But we're still trying to work on it and figure it out. Yeah, every year it gets a little bit easier and a little better. Someday we'll get it completely balanced, but we're still having problems we can always get our beginning and ending to balance. It's the stuff in the middle we can't get balanced, but we're still working on it.
That's great, Pam. Agreed. It is the ins and outs that seem to be the challenge. And, bringing up just who's the subject matter expert on each of those components and really leveraging that for compiling it. So really, what is the Schedule 6? Well, it's reconciliation. The treasurers are doing bank reconciliation daily, monthly, annually. The money's there. Then reconciling it to the general fund. Well, the auditor and the treasurer make entries to the general ledger, not general fund, sorry. So we're all subject matter experts on different things. And then it's reconciling it to the annual report, the C4, C5. And so it's really just breaking it down on which component is it and who is the subject matter expert on that. And then what systems are you using? I know personally we use, bank reconciliation in our ERP. We use Quicken. We have Simpro for our debt and our investments. There's a whole lot of source documentation that goes into things. Oh, I'm sorry, I was one off all right. So many thanks to Nicole and Jill at Pend Oreille County. Did I get that wrong? No, I got that right. Nicole and Jill at Pend Oreille County, because they were willing to share an example. So from 2023, so the work behind the final Schedule 6 needs documentation, like Brooke and Hillary brought up at Moss Adams. It's the documentation. So the worksheets with name tabs in the workbook, they really help organize and document the work that goes into creating it. Explaining why things are included or not helps for subsequent reports. And really, it's make it your own, because every county is dealing with a lot of different transactions in a different way. And so this really just shows the bottom tabs to really show how they're organizing it. So on to bank statements. So this is really the treasurer side of things. And please know, if this is more elementary than the level you're at, it's not because I don't think you know anything, it's just kind of going over the basics. So, the bank statements, the beginning balance and ending balance, they're directly from the bank statements. The deposits with the receipts and interbank transfers in, the deposit amount as a whole comes directly from the statements, but those two add up to that. And then on the withdrawals, the withdrawal amount is directly from those statements, and the disbursements and interbank transfers out are on there. So really a big part of this is when's your expenditure? when's your revenue? So when a revenue comes in on the DOL account, it's the revenue. It's a transfer when it gets deposited with the treasurer. And the same with an expenditure going out. Well, it's a transfer from in our bank accounting. When we pay a warrant, it comes out of the warrant account. That's the expenditure. It's a transfer from our main account when the money goes from the treasurer's main checking and backfills the zero balance account at the warrant account. So it's really getting in the weeds on each transaction. All right. And for us, having an ERP helps a lot with the cash balancing. So maybe we'll go with Nicole and Pam, if you'd like to talk a little bit about the upper portion.
Yeah, this is Nicole. So like I said, the upper portion, you know, I don't really fill in the Schedule 6 until after we get December's bank statement, but I have a tab that I create different tabs to figure out what is a transfer and what is actually a deposit. And I do that monthly as we get the bank statements. And then I create a separate spreadsheet for all the bank statements that we get. Everything that's listed on the top portion of the Schedule 6, I have the bank statements for. And so I created a spreadsheet for that. And then when I'm all done with it, you know, usually probably in February, I will save it so that way Jill has access to it, because she might know things that are done as a warrant, but they're actually a transfer between funds. And so then she will, you know, adjust some things, but then she can have access to what actually the bank statements show. So we make sure that the accuracy of the bank statement stays intact.
Terrific. Pam, would you like to say anything?
We kind of do the same thing. I mean, I have my accounts listed out that I have there, and then I try to figure out what is an actual receipt or what will be considered a transfer. And especially because I have like, what is it, 20 some warrant accounts and stuff, and go into the consolidated. So when is that true expenditure hitting? And then the other part would be a transfer. And then that is, I just have my accounts of what's a transfer, and because we will take a warrant and deposit it in and then move the money over into the other account. So we have to account for all of that also.
Excellent.
And that's about it. I do get from, in our county, the auditor's office tracks the outside accounts from the other, like district court and the clerk's office and stuff like that. So I do get a list from Carrie then on those accounts to add to my top part.
That's a great point, Pam. In my county, we do the same. And I believe in Nicole's, she enters everything from all of the bank accounts. So I do receive the annual reconciliation from Noemi in our county for all of the other bank accounts that are not treasurer managed. And I then enter them at the top section. So we'll move into reconciling items. And I'll just say there's a few things beginning, the deposits in transit and other things like NSF checks that I'm entering. Then there's, cancellation of unredeemed checks and warrants. Well, we kept putting those in there and kept being off. And it's because our general ledger system addresses them. So if we cancel a warrant, it goes back into the fund it was in, and the net amount that ends up on the C4 doesn't include an in and out. And if it was never cashed, it never touched the bank. So if it didn't touch either one, or it was already addressed in one, you don't have to reconcile it. So you do want to learn where the instructions on the Schedule 6 don't apply to you, and make notes. Don't put them in here, even though you want to. So how about Judy? You had some points on this.
Hello, Kitty. Oh, it's already on. Okay. So year-end outstanding and open period items. This is going to be all your outstanding warrants, including payroll and your open period transactions. If you have a ERP system that is tracking your open period, we have a 13th month already built into our general ledger. And so all those transactions happen in the 13th month. So we didn't have this before in our legacy system. So it was really helpful to know what was actually hitting the 13th month. And this also includes all the journal entry adjustments that you do in the 13th month when you're preparing your annual report, because there are journal entries you have to do. There's corrections you have to make. So you have to make sure you're accounting for these also on your Schedule 6. And that's where you would do that in the year-end outstanding and open period items. We talked about NSF. We talked about cancellation of unredeemed checks and warrants. So interfund transaction, this is kind of a black hole. This is an area where when you start looking at your GL, we have the health department, for instance, that has 4 distinct departments within their fund, and they're actually transferring fiscal fees to the administration section, their administration department, from their other 3 departments. And so when we landed on that, well, now we're doing it actually as a transfer. They were doing it as a warrant. And so we've cleaned that up, but we realized we had to delete all of that out because it was a netted transaction. I think I got ahead of myself. That's a netted transaction. The other thing is all your 397, 597s all have to be reported here in this line for interfund. Any transfer that's between a county fund and another fund, those are transfers that are not hitting the bank. So therefore, they have to be accounted for in this section. Netted transactions, I talked a little bit about that. Also, prior period, which prior period is not an issue anymore, but all your current refunds of expenditures, those don't hit the bank. They're only hitting the revenue side. They're not hitting the expenditure side at the bank. So therefore, that has to be accounted for in this section as well. So can I just say, when we first started the Schedule 6, I embraced it when I heard about it. And when we didn't even have it as required, because we had 2 financial softwares. We had Treasurers and the Auditor's systems. When we first started doing this middle section, it was throwing a number at it to see if it would stick and resolve the balance at the bottom. I'm just telling on myself, okay? Because we didn't really understand, we didn't have the guidance from the SAO either at that point to really identify what it is we should be looking for. And so now now we actually know, okay, we're going to put this number here, we're going to put that number there. If you're not there yet, that's okay, because fortunately, this is just a tool the state auditor uses, right? You have to upload the Schedule 6. So it's required, but it's not going to, they're still going to do their own reconciliation, their own balancing. So I just wanted to share that because it was a challenge. Just say it was a challenge. Also, your authorized revolving petty cash change funds, that's pretty straightforward, should balance to your resolution that you do every year usually. And then other reconciling items, anything that is rolled into a management fund, make sure you're getting rid of those interfund transfers between those management areas. We roll into management funds for the annual report, so that's a good area to definitely look at. We also roll to the general fund those funds that are not meaning that 20% threshold of revenue from an outside source. We roll those to the general fund also if it's been progressive for a number of years and we just end up having to do it in our annual report. So that's another area you just really have to pay attention to. And I think That's all I had. Did you have anything you'd like to add?
Well, if I could
Okay.
just piggyback on that, absolutely. The theory of the Schedule 6, I embraced it, but we weren't getting it right. It all made sense. And I'm like, well, we have to do this. We've always just been balancing our deposits, the revenue, and the bank transactions. We were never coming back to the GL. And to me, the big point, well, when the SAO and the auditors would come to me and say, well, why is that there? And I'm like, okay, well, I know what happened at the bank. I know what went in and went out, but I have no idea when you created the C4 and the C5, what did you do to it before it got to those numbers? And that's the black box part that the treasurers have of trying to say, I don't know what goes in the reconciliation part because number one, I wasn't even on the same system. And number two, it's really being good at explaining what you're doing, knowing what you're doing, and the impact it has. So please, Jill
Well,
and Nicole. Yeah.
when
So you're talking about a lot of data that's going to hit in the 13th month, and you're trying to put all this together. And I don't know if I can even ask this question intelligently because I don't do the work, but are there some best practices to get at this information month by month in terms of the reconciliations that are done by the treasurer with your bank account and reconciling back and accruing this information month by month and cross-checking as you go so that in the 13th month, we're not all scrambling trying to put the whole year together? Is that an intelligent question? I don't know.
It's a very intelligent question. And I will say I would love to do that. And I kept going to the general ledger and pulling the numbers of the ins and the outs and the beginning and ending. Well, it doesn't work because the work to go from the general ledger to the C4, C5 isn't done. So if the auditors were creating a C4, C5 every month, then we could do it. But the other is there's certain things that flesh out over the course of a year. So I'm not doing it every month that way. So maybe if someone was, they could lobby for that.
So basically, talking about staying in your lane kind of a thing. So basically, all you can do as a treasurer, just making sure you reconcile monthly as you go through with
Yes.
all your bank statements and everything. And then, just making sure you're current on that and you've got your data that way. And
Right.
then you
Right.
collaborate.
Yeah.
Okay.
Well, that's kind of what Nicole discovered after that first year. Oh, she had to do all those ins and outs at the end of the year for every bank account, so that she started tracking that monthly. And I'm sure that's what you were saying you do too. The only part about the reconciliation that I was going to add is because the state auditors asked for my help that day they were sitting in my office, I had the form that they used to reconcile, and it had this instruction on it, which never was on our Schedule 6 instructions. It says, if warrants/checks are written for interfund transactions, then don't include these as reconciling items, because in such cases, the transactions would have a bank effect. Auditors could confirm their inquiry by comparing total amounts charged to these BARS accounts per the warrant register to the financial statement total. When I started to get confused, I would read that every time. But at the bottom of my form, I think about it like that. Is this affecting my financial? Is this affecting the bank? Or is at one point C5? I had to go to C5, and I think that's her next section. So I won't talk about that yet.
Okay. Nicole, did you have anything to add on the reconciling items?
No, but yeah, like Jill said, I think every year you kind of figure out, how to do things a little bit better. And the very first year I realized I needed to start inputting the data monthly instead of trying to do it after an entire year.
Great. Pam, did you have anything to add?
I just kind of have a question, actually. So like you said, the cancellations, we don't include them, which Carrie and I are agreeing with because it hits the GL and stuff already. However, in our county, schools and hospitals are not running through the GL. So do you guys do your schools different, or how do you do your schools and hospitals?
When we void ours in the system, they treat the same way that ours do. So we haven't been doing something different than what we do for us.
Okay, so you have schools and hospitals running through your GL there in your auditor's
We
office.
enter everything in a payee positive pay.
Okay. All right, thanks.
Yeah. Carrie, did you have anything to add?
No, Pam asked the questions that we were just talking about, so thank you.
Great. So this is a good endorsement of being on a panel. You get to ask the questions first. So we'll go to the third section from the general ledger. And so I've got up there, basically you're reconciling to the C4 plus the C5. So what are your beginning, ending? What are your ins and outs? And so I will ask, let's start with maybe Pam and Carrie. Do you want to say anything about this section? Did we lose you?
No. From the general ledger, just taking her C4, C5 totals. And then we just come up with what our options are, and we try to figure out from there where to go.
This is in my opinion, the biggest part that requires really good collaboration, because the auditors for C4, C5 were required to do it a certain way. And it doesn't always match up to bank statement reconciliation stuff. So what Pam and I have found is this is the section where we do the most collaborating and talking. I have learned so much from Pam over the last couple of years about what treasurers do, and we're trying to remember that if it's on a bank statement, then we need to ask ourselves, is it somehow reflected in the C4, C5? If it's not, then we know it's got to be reconciled somewhere. And the same for vice versa. If I've got it on my C4, C5, but it doesn't have a bank statement, how did it get there, and do we need to reconcile it? This, I think, is one of the largest parts that we talk about a lot.
Mm-hmm.
So true. And so then when you come up with something, you go, oh, okay, maybe that needs to be up in the reconciling section.
Yeah, and we're still, like Pam said, our beginning and ending balance is always balanced. It's the ins and the outs that we are still working on. We're still, every year we'll think of something new and we'll try and see if that helps. I'm not gonna lie, we're not there. Our ins and outs still don't balance out. We know we balance because we balance on a monthly basis to everything. But it's just getting it on this form that has been kind of a struggle for us. But we know we balance. It's just getting it in this form in the proper cells to make it balanced too.
So true. Nicole and Jill, would you like to talk about the last section?
Yeah, I'll let Jill talk about it since she's the one who does the C4 and C5, and I give her credit for putting it all together. And if she has questions, she asks me. But we do have the same financial system, which helps. We don't have a 13th month, which I think is also beneficial. And then we balance weekly to each other. So I think that that helps too. So I'll let Jill speak to how she puts it all together.
All of those points are helpful that Nicole made, and she does provide some of the information on the C5 about all of her investments, which is the part that I struggle with how that works. And so we do talk about that, but the C5 is where I struggled with at first and realized in between, because the treasurer's doing most of that for their transfers, in between some of their funds. Like the school district has a building fund and this, and they were transferring. Well, I was just taking the total that was on there, not realizing that all of this was happening when I realized that. So now I have made a new spreadsheet, and each of those funds are separate. And then I put their transfers in there that I'm going to take off, and that helped a lot.
Yeah, definitely one of the causes of the big ins and outs. Judy.
So I think I have to say this is the scariest part for me. Because you want it to balance. We're still, I mean, our beginning and ending balance is really strong, and usually pretty close to right on. It's the ins and outs for us also. The revenue and the expenditures, they're way off. And the auditor state auditor doesn't necessarily worry about that because all the information is it's all there. It's just how it's being treated. And so honestly, if anybody is getting there with their revenue and expenditures, I would love to talk to you because we're not there yet on that part. And it's how whether it's how the bank side is handling the transactions or how the reconciling items are handling the transactions, and then how the C4 and C5 are handling the transactions and the GL. It's just, I'm not 100% sure where the problem is. So I would be happy to talk to any of you about that. Like, we don't have all the answers sitting up here, let me tell you.
But I think you talked about Schedule 11. Nicole still creates Schedule 11 too. That helps me with the transfers that they're doing up there that I don't know about. I go through all of our GL adjustments that we make in our office, go through all those and put all those on there too, and see how they affect everything. I think that's what I wanted to add.
Great. So I will add that we went live with our ERP in June of 2021. We weren't ready, but we'd already delayed because of COVID, and it was like, we just got to go. And so I still have a laundry list of things I want to implement. Among them is looking how Jill and Nicole are doing their debt payments and modify our general ledger to track it in a way that we can pull it from the system, is my hope. Okay, so we've got resources, templates, instructions, training, best practices. I'm not going to spend a lot of time on this, just to point these out, and if this is sent out to attendees, the links are live. The links are live and you can use them, but these are, really, it's kind of like when you're confused, you said you read that statement, you just go back to what it says. What are the tools? What are my resources? Where can I find them? And so I'm actually going to go to the next one and then go back. So treasurers, we were really frustrated with the Schedule 6 and trying to work with the state on how to get it right. Most of the jurisdictions doing this are not counties, and they are not the bank for junior taxing districts. So it's a completely different thing. And there's only 39 counties. There's 21 that are cash basis that are doing this. We just don't have the economies of scale of so many people working on it. We're a small part with the SAO. So at the Treasurers Conference, we created this WASAC SAO Schedule 6 training group, and we worked with the state auditors, and they ended up creating a training that came out in December that they posted online for working on the Schedule 6. It was for everyone doing the Schedule 6. So, it's a little different for certain things for counties. In talking with them and making sure I had the resources correct, they also mentioned that they are currently in the process of working with WFOA to schedule a Schedule 6 class in the fall of 2025. So watch for that. And then the training on the left, that's the one that I mentioned. and then also the best practices for bank reconciliation. So these are really the universe of resources that you can get your hands on and maybe do on your own time. And so I'm going to actually go back and say, we'll go through the panel. Do you have any things you want to follow up on and closing? So Judy?
I would just say give yourself a little grace and just work through it. And if it's not 100% perfect, it's okay. We'll figure it out. And, you know, that's what accounting people do. We try to, they're just numbers. We'll figure it out. We'll understand how our transactions work. And you'll continue to grow as you continue to look at all that information. We have by no means arrived, but we're getting closer every day.
And I do believe at some point we will
arrive.
We'll get it right. So I'm thinking like maybe 3 years would be my hope.
Oh, okay.
Jill, would you like to? Okay. Nicole, Pam, and Carrie, would you like to say anything?
No, I'm good. I agree with what was just said. Give yourself grace.
And the people you're working with. Okay.
I would just agree with the same thing. It drives us nuts that we don't balance, but after a while, like we've done what we can, and we do the best that we can. We know we balance. It's just putting it onto this form, and then and I'm just so grateful that Carrie and I can work together so well and be able to work on this together.
Agreed.
And that just thanks for her, and that we'll just keep trying.
Agreed. I think there's the different roles of the different offices. There's also the physical separation. Are you near each other? We're in different buildings. And then there's when the state auditor is looking at things. Are they talking to both of you? Or are you hearing it kind of like the game of telephone, second hand, third hand on the question? And so it's really helpful during the state audit to be included on those things. And really it's at the auditor's discretion to say, please include the treasurer on your inquiries and what you're asking for and what you're explaining. So I would say what's a big one for me in just being more just very clear. I really wanted to hear it firsthand, not so that I could control it, but so I could hopefully save some angst when they're going through things and I know the answer right away. Heidi, ask your question again, what you wanted out of this session.
Oh, so my question to you is, how can the county auditors help you? Or when you gather in a group and you kind of grumble, and I know we all do that, what is your wish list for what the county auditors or the auditor's office can do for you in preparation for the Schedule 6?
So for me personally, it's helping to demystify the black box of those reconciling items, how you're adjusting the general ledger to be the file that spits out to the C4, C5. What are those things? So then I can go back and go, well, did they touch the general ledger? Did they not? And where does that, how does that affect what we've done? And is that maybe where we're off a little bit? I think, there's 21 counties doing this. There's probably 300 or more ways to do this. So it's really going to be, who are your subject matter experts? How does your general ledger work? And who needs what? And also, for me, it's share what you're doing. We'll share what we're doing. And then how do we collaborate to put it in there? And really, for me, it's owning the work I've done. And when it gets changed before it goes uploaded, I'm like, well, I don't know what you did, and I don't know if I agree or not. And so really a lot of it is, can I replicate the number you got? And that really helps me. And it's not for me about getting in the auditor's lane. It's about confirming my understanding of what I'm doing is right compared to what you're doing. And so I think it's not just what can you do to help us? It's, what can we do and explain to help you? Because it's understandable. We're the subject matter experts on the banking transactions, and the fact that there's, 12 different bank accounts and how they work. And we're doing bank transfers, not fund transfers. And so we've got a question.
Hi, no, maybe more of a comment. One of the things that we've found in Pacific County, the auditor, and I'm from the treasurer's office, so we work very closely, and we can describe our Schedule 6 to anybody, but the auditors themselves, educating them on how you do transfers between bank accounts and what they really should be looking for so that they know that that's a transfer between the bank accounts, because we find that a lot of times they don't understand the verbiage that we're putting down in the reference. So they're assuming that something is an expenditure or a deposit when in reality it's a transfer. And then making sure that your staff stays true to form and they're using that same verbiage every single time they are transferring anything will really help your auditor's office too, as they're working with the state auditor's office on those financials.
So true. We talked at one point about how we really needed a dictionary, a terms listing, and use it the same way. We went around and around. I think you were here at the time, but treasurer's cash, and and also working with the not just maybe the chief deputy or the accountant in the treasurer's office, but I really try to work hard as a team with my treasurer's team, because if I can explain something to them and they can ask questions, I can sometimes make it better on how I'm explaining it to someone else, or, really just trying to get it to the point of, can you explain it at an 8th grade level that makes sense, and then make sure you're using the same terms.
A question for you. You said that your middle section, you're having a hard time, but your auditor, they're making me get within a percentage on all of them. No?
The ins and outs so we talk about the top section, middle section, bottom section. And so when we said the middle on this one, and I know you know this, I want to make sure we're all talking about the same things, the actual disbursements, those center items, we're overstating them right now. And we're getting closer, but I'm assuming some of it might be the debt. Some of it is still working with Judy on how she's netting things for the C5 would be where we're going to look next.
So the amounts are similar.
Yeah.
So it's
Yeah, the reconciling item total at the bottom.
Right.
The bottom.
So basically 20 and 21.
23.
Yeah, so 23, those variances, but really it's the columns, the 20 and the 21 where we're overstating it. And yeah, and so the 1%, we talk about the ending cash and investment balance of what they say is okay to be within. We were really good on there, and then the state auditor came in and she got us within $370, but I'm still trying to recreate it. Any other questions? Okay. Anyone online? Nicole, Pam, Carrie?
Nope. Thank you. Thanks, Stacy, for running the show. I appreciate it.
Whoops. There we go. All right. Well, you can find us all via Google search or talk to us after. But thank you so much for inviting us. And really helping me to really sort out how I think about it. It was really helpful for me as well. So hope you all have a great day.
Thank you so much for joining us today. This was so helpful. Thank you.
Thank you, everyone.
Thank you.
Okay. Okay, so before we break for lunch, we are going to hear a little bit from our sponsors. Justin with Court Funds is actually going to do a presentation a little bit later, so he's going to save that for then. But Doug from CoFile, if you want to come up and tell us a little bit about yourself, and thank you for sponsoring.
Thank you. I always love jumping in right before lunch, so I'll make this brief. First off, thank you for allowing me to be part of this. I've been with CoFile actually 4 months, and so just learning. And I mentioned to a few folks yesterday that my aptitude might already hit the ceiling when the state auditors hit about the 20th minute. So I started taking notes, and then I was like, I'll just ask other people questions. So this has been great for me. I think some of you might be aware who CoFile is. And we work with some of you in some of the different counties. CoFile is all about preservation and digitization of critical records. So marriage license, deeds, financial, operational, vital records that have a permanent retention. Our job is to preserve those in a way that is, I guess what I would say, allows you to continue the usage of the material. As you all know, there is a large push for moving to the cloud, more digitization. We do the imaging and those, but we'll notice the preservation of actually the books and how we do that. We have a lab in Dallas that is about 4 of these rooms that go through, and there's a person that works on taking the glue off a document so it can be preserved, and how we spray it, and then we put it in patented Mylar. And I could go on with a 30-slide presentation if you like on that, but it's if you and your county have questions in regards to preservation or imaging your records or any digitization need, we can help you and we can help support that. And I'll just say that I got totally lapped by my new best friend and his giveaways, so I'll get better at that next time. But I don't know, someone, I think it was over here, did mention that I had these books, and I was like complaining earlier that they were small, and they said they were great for passwords and different things, and I was like, I'm now rebranding those, so thank you for that, whoever said that. So any questions for me, I can talk about it now or offline. I'll be here tomorrow as well. So thanks again.
Thank you very much. And in case you're wondering, all of our sponsors are platinum. So they all came in at the platinum level. So I think we're ready for lunch. It'll be an hour, and we'll meet back here at 1. Well, obviously you're not going anywhere. So we'll just maybe stand up and sit back down at around 1. Thank you.
Check. Also, everybody remember it is plated lunch, so you're going to want to clear some space on your table if you got a bunch of materials in front of you.
Quick announcement. Anybody whose health department, integrated health services, had to return money to the Department of Health, and they were wondering how to code that on their financials, how to do the the transaction, I have the state auditor help desk answer that has bars codes and how to account for that if anybody wants it. And I will just go ahead and leave that up with Megan and Derek so you guys can pick it up if you want.
Makes sense. Are there three on this day? Shoot. What are these expenses? Expenses are recorded when incurred. Slash expense. Use tax and vouchers paid. This is actually due to other governments. Just for reporting. So I do have to reverse it.
I'll send you that. I guess I'll come back. It's like, I got a genius way of doing something. What? Oh. No. 9 out of 10 times? Or what's the 100? He says a different amount, though. It's not. Yeah.
Yeah.
Black Panther or something.
Yeah.
Sex Panther Club.
Oh, that's what it was? Yeah.
60% of the time it works every time.
It's like, that doesn't even make sense. expense will be deducted. Right. Oh, poop. And then what becomes payable? Oh, shoot. What is the where's the check right here? All right. That's weird. Damn. Doesn't even exist. So I have to get the calculator. Oh, this is the right. And then reverse all this. 900. There's only 4. Oh, that's definitely what is it then? Okay, so how do I request a location?
Just a really quick reminder, we are going to remove the coffee and hot water over there for the afternoon, but there will be sodas coming this afternoon. So if you want to get some coffee for the afternoon, now is your chance to do that. Spin it, DJ. We'll be meeting again in about 2 minutes. All right, well, we're going to get started on our second half of our sessions. Just a reminder, if you're a coffee drinker or hot water, our coffee and hot water is going away. So fill up your cup before it leaves, but don't be too worried. There will be soda in the afternoon for your caffeine kick. Oh, okay, just a reminder, these sessions are being recorded, and we will make sure that everybody who is in attendance gets the slide decks from all the presenters. So you don't have to worry about that. And now we're going to get started with Justin from Court Funds. We are very excited for Justin. There's several counties who use his cards. He is the one person that I can say affirmatively made my life so much better, and I appreciate that. So I will let you introduce yourself. Thank you.
Thank you. I appreciate it, and it's wonderful to be here today. I think I came the farthest anyone coming from Utah. So if anybody came farther away, feel free to raise your hand and say so. I wander a lot while I talk, so hopefully that's okay. Hopefully it's not too distracting. I'm still trying to get my 10,000 steps in for the day. I'm at like 7,000, so I might hit the rest while I'm up here. But since we just ate lunch, I want to do an activity with everybody really, really fast. I hope it's okay. I always do this anytime I'm presenting after lunch. So can everybody stand up for just a minute? Just to wake up, we're going to shake and wiggle and stretch so you can touch their toes. Now stretch your arm. Yep, got the right idea. Raise your hands all the way up. While the arms are up, do some sort of yodel. I'm not going to do it into the microphone, but okay, now that I know everybody can raise their hand and talk and ask questions, we can move forward. So I did bring some candy today. I have 2 bags. So these are for people that ask a question or even just say, my goodness, Justin, you're tall. That will work too. That's why I played basketball, not football or baseball. So I do like to introduce myself a little bit, just because you are going to have to listen to me for the next 40 minutes, hour, whatever the case may be. So I am from Utah. I grew up in Arizona. I ended up moving to Utah because I wanted to play basketball at Utah State. It was always my goal. My dad played football at Utah State, so I wanted to go play basketball. He was shorter, stockier. I'm the only one in my family over 6 feet, and I'm 6'7". So I really wanted to go play basketball at Utah State. So I moved up there, went to school, ended up walking on at Utah State for 2 years. The first year we played in the NCAA tournament in San Diego against Washington and Brandon Roy, just a throwback on names a little bit. I also got to play against Louisiana Tech and Paul Millsap quite a few times because they were in the same conference as us. So a couple names you may know. The second year we played in the NIT against Michigan and lost. So that's my claim to fame. Don't go looking me up since I walked on. I didn't actually play in any of those games except for the exhibitions. But it was wonderful and a great time. So currently, my wife of 15 years and I have 3 kids. My son is almost 11, turns 11 on April 10th. This is his first year playing competitive basketball, and he's loving it. He is 5'3" and already has a 20-inch vertical leap. So he's already beating me in that category. And 2 daughters, one just turned 9 and one that's 5. And the 5-year-old made sure that we didn't have any other kids because she has all the sass in the world. So she keeps us going for sure. My wife called me this morning on the walk around as I was coming here and said, I can't get Gentry to go to school. Can you talk to her? So I had to be mean dad, which happens every so often with kids, just giving him the look. So, but it is wonderful to be here with you today and to be able to talk about what we do. I'm passionate about it because I've been doing it for 15 years. The job that I had before this was actually part of why our company got started. So our company was founded in 2005, actually as an officials payment option. Our founder was a banker, but he also officiated basketball games at night and said, there has to be a better way for us to receive payment from all these schools. I'm filling out a vendor form every school I'm going to for every district. It's taking me months to receive all these payments. And I just had my house TP'd because my information was sitting on the scores table and they thought that I didn't do a good enough job. So he called the Utah High School Activities Association and said, you guys need to come up with something better to protect my data and pay me faster. They said, you're a banker and an entrepreneur. Why don't you come up with something? So he founded a company called RefPay, now called Arbiter Pay, that the NCAA purchased from him. You're shaking your head. Are you an official? Oh, okay. Okay. There's thousands of officials that use it across the country for high school, youth, and NCAA purchases at all the colleges. So it was very widely used. In some states, like Massachusetts, the township is actually over those school contracts. So they came back to him and said, hey, we love what you're doing to help all of our official payments, doing all of these digitally. We have these other issues when we're paying out commissary funds to all of these inmates. How can you help us with that? So he came up with a solution called Release Pay. That's one of our programs that allows you to load money onto cards to digitally disperse money to the residents as they're being released from the facility with any of their leftover funds. It's always interesting to me doing presentations like this and getting to the end and showing everybody the list of people that are using us. And sometimes your county jail may be using us and you may not even know, because the process is just that seamless and that easy for all of those funds to be transferred. From there, people came back to him again and said, you're cutting out all of the fraud that we have with writing checks at the jail level. We also have all of these court payments that we're making, but they have other issues besides fraud. Can you do the same type of thing on the court side? So that's really kind of how we came about as a company and where our vision has always been, trying to make the disbursement process easier as you're making those payments out. So I was introduced as Justin from Court Funds. 2.5 years ago, we were purchased by Tyler Technologies. We haven't noticed any changes from our side at all. We still have our own IT department, our own call center that's still handling any support requests. Our own IT team, if there's ever any issues, they can jump in. So Tyler, I know some people may hear that word and cringe. Tyler for us has been wonderful. They've always been more than forthright, being willing to help us become better and just enhancing our tool rather than bogging it down. So you may have heard of us either as Rapid, Court Funds, Release Pay, now Tyler or Tyler Disbursements. So just like when I was younger, I answer to anything. So you can call us any of those and I'll know that you're talking about me. So Tyler is around in a lot of different areas. To be honest, since we've only been around for about 2 years with them, I don't know everything that Tyler does. People talk to me about different systems that they use within Tyler, but I have no idea what some of the systems even do. I only focus on the disbursement world where we're helping you pay people out and sending money out to the community. And our division is actually this digital solutions division right there. But Tyler, as you know, is huge and has a lot of different software opportunities for you. So some of the things that we're going to be talking about today, you can see kind of an agenda there and what we're going to be going through. So hopefully we can get all of your questions answered during that. Feel free to cut me off if you have any questions, or if you just want a piece of candy, want to say, man, Justin, you're tall. Or you can ask the questions at the end. Feel free to do whatever works best. So really what we do at Tyler Disbursements is we take all of the hassle out of any of the disbursements that you're doing. You can see some of the numbers up there of what we already handle and how we help people. So we process over 10 million disbursements a year. Billions of dollars are flowing through our system. So we handle a lot of different types of disbursements beyond what I'll even just talk about today. We do partner with a ton of different people to make sure that our product and our service is the best and helping you the best. So all of our cards are MasterCard branded cards, but we still partner with Visa and different banks out there to make sure that all the processes are running smoothly. So I know I'm speaking to people that already know all of this, but I like to go through this part anyway. So the problem with paper checks, and we hear about this all the time, all these different scenarios. Check fraud is big. I talked about it a little bit for the jail side because that's mostly where we've run into it, but I'm actually starting to run into it on the court side as well. I cover a large territory, bless my wife and all the time that she has alone with 3 kids. But I was helping a county in Missouri get started with us because they actually had a juror take a picture of a check of their jury service, and they're paid $12. So they took a picture of it, posted it on Twitter, Instagram, Facebook, and jokingly said, "Thank you, such and such county. I'm glad I came and served you. Now I can go to Hawaii with this $12. Just trying to be funny. The bank started receiving fraudulent hits against that account almost immediately because people now had access to the bank account, routing number, everything like that. That county was then required to shut down the account, cancel all the outstanding checks, reissue checks. They came to me and said, how fast can we get started? Because we need something different for our process here. So we think about fraud, you think about it as, oh, it's only people that are trying to do bad things. It pops up in a lot of different ways and in a lot of different circumstances. And the numbers don't lie there either with how much fraud is out there. The USPS has also started warning people not to send checks through the mail because of some of the different things that are going on. As far as theft, not getting to the actual person that you're trying to send it to, there's a lot of different reasons that people are starting to push against that side as well. This is interesting too. In one case, a man mailed a $42 check to pay a phone bill and was shocked when it was cashed for $7,000. So, fraudulent that way as well. Anytime you have a wrong address or someone rejects the mail and having that returned can be pretty demoralizing for your staff. Well, for you and for your staff. Because a lot of times you're putting in all this hard effort, hard work, sending out the money to the individuals that you think want to be paid, and then that's being sent back to you. And you're trying to call this person, get a new address, trying to figure out how to actually communicate and get that money to the people that actually deserve it, rather than just letting it go to unclaimed property through the state. We talked a little bit about lost and stolen checks already, but I do want to talk about this this top bullet point right there first. So if you do issue disbursements through us, we do handle any of the unclaimed property completely. So once you make that disbursement out, we follow all of the applicable state laws through the sponsor banks that we have that I showed you all of our partnerships on. Just for them to keep their FDIC issuance, they're required to track all of that and send it back to the state. So if we do have any of those cases of unclaimed property, we send it back to the state of Washington. And forgive me if I'm wrong, I think it's a year here, isn't it? Yeah, okay. Every state's a little different, so I wanted to make sure I was getting that right. Another big thing on here is customer service issues. So and Heidi can attest to this, she'll talk a little bit later about her process and what she's used us for already. But once you make that disbursement out, your job is completely done. Our support staff then takes on any questions or any help that they're needing at that point.
You're welcome.
And won't return them back to you.
Thank you.
In some cases, they lose their card or however they're receiving their disbursement from you. And we have a lot of different ways that we can talk through. But if they don't know who issued them the card, they may call you and say, how do I get a hold of these people? Can you give us their phone number? So that would be the only thing that you may have to do is give them a phone number for them to call in. So we talked about unclaimed property. We're actually starting to work with the state treasurers in some states as well to help push money out, doing it digitally rather than writing checks that way. But that's a very large number of money that's just sitting out there. Every state that I visit, the highest percentage of that $3 billion is probably juror payments. I don't know if you would agree. I'm getting a lot of head shakes. But that's one of the things that we actually help with is juror disbursements and making sure that that unclaimed property isn't going unclaimed and being tracked by you for that full year. So more about us. So we can do disbursements in a lot of different ways. I talked about the card. We can also do a email option where we're emailing the payment to them with just a link. If you collect an email address, if they have a cell phone number, then we can do similarly, send them a link where they go in and select how they want to receive payment, and I'll go through all of the different options on how they can receive that payment. But there's tons of different ways to do it too. We are a white label program, so we could care less how you collect that information or how it's posted on your website. A lot of this PowerPoint was done for the state of Utah, and I actually sent it to Zach with the wrong name on it. So we had to work on it this morning to list state of Washington on that first slide for me. Thank you again, Zach. For the state of Utah, all of their jurors go and check in at a single spot. right at the beginning when they're going in and filling out all that information. At the same time, they're actually using our APIs to pass all of that information from the state to us to say this person wants to receive payment this way after they serve. So however you're wanting to send money out, we can help. Even if it's on your website, we can just embed there and go that route. Then obviously digital wallets, instant pay options, mass payouts, or even just doing it in a single payout option. And then different compliance issues that pop up, we help with that as well. Any questions at this point?
I might be jumping ahead, but I am curious. So, oh, thanks. How does it work with the juror pay when the juror has to submit that payment to their employer?
So typically they'll just hand them that debit card that they've used.
And what would the employer do with it?
They can then just go and cash it.
Oh, okay.
The card can be used as a cash advance option. So they can just take it into any bank without a fee and pull
Okay.
a cash advance off of that card.
Okay.
So what happens if that payment needs separated? So they get jury pay, but they get travel pay. They get to keep travel. Jury pay needs to go back to the employer.
In those cases, the juror will actually go pull the money off and then hand their work the amount that needs to be given to them instead.
And they could probably even cash the whole card,
Yep.
take the money, and then go return the dollars to their employer.
Yeah, exactly. Great question. Thank you for the reminder.
We have a question online that says, is this through EERP?
We are still working on getting all of those combined. So we are owned by Tyler, but we haven't fully embedded in all of those different things. So that is coming later this year, though, or it will be added that way. It's been a long process. So some of the things that people mostly use us for, you can see listed up there. So jury payments, child support, restitution. I know the state uses Odyssey, so that is something that I'm working on with a couple counties, is trying to figure out how we can wrap it into Odyssey and actually do restitution disbursements. Bond reimbursements, witness fees. I know election workers is done differently here as well, so that probably isn't one that you would use. But we do have people that use us for other things. Chandra over here came up to me, probably 2 years ago, 2 years, and said, hey, our fare premiums are a real pain in our county. And I said to her, what is a fare premium? I didn't even know what it was. So we talked about it, and finally I figured out what that actually meant. So we came up with a program that would work for her county to actually disperse money onto the cards for fare premiums. So really, whatever you're sending money out that's a pain and a nuisance, we're happy to help you come up with a solution, even if it's not listed here. And I know we'll talk about it later, but some people, yeah, just grab that.
On fare premiums, would it matter if the person getting the premium is under 18? Are there any rules?
No,
I mean,
there's
we have
not with the,
5-year-olds getting premiums.
yeah, there's not any rules with the debit cards that they have to be a certain age. Did you want to add anything to that?
I would just say that for some of the parents really liked it, so they just took their kids to a store and used the cards. It was super simple for them. It was much easier than the warrants because none of these kiddos had checking accounts, so they couldn't put it into checking accounts. So it worked much better to do the cards, actually.
Yeah. So really anything that you're thinking of, we can help come up with a program. And like I said, we'll talk about even more later because Benton County uses us for something interesting as well that we'll have them talk about. So we do partner, even though we're owned by Tyler, we do partner with all the different commissary providers. So everybody that your jail could be linked into, as well as all the different jury management softwares. So anything that your court could be linked into. So even if they aren't using Tyler, we can definitely help come up with a process and actually have it working and flowing through their software. For any of those other payments, this is what the process looks like. So here's a video. This is my friend Zach down here in the bottom left corner. That's what the card carrier looks like that he just held up. So we have an example right back here. So the card is actually in a pamphlet that explains to the recipient exactly how to use the money. We do only require this account number, which is a number scanned on the back of the card. It's not the actual card number, so you're not storing that data at all. And then the amount and first and last name. Everything else is just kind of nice to have for our support, just to verify who that individual is, but isn't required. One other thing on that spreadsheet is if you do give us a email address or cell phone number, it does text them or email them a notification. Hey, this county paid you $72. Go ahead and use the money now. So then he logs into our system, uploads the file, and it's really quick and easy, as you can see. But it's just verifying one last time. Once he hits process, it turns green. Everybody's been paid instantly. And if they do have that information, or we do have the email or text, then it will automatically send that to them. And we do have reports and everything available. He's just going through what the view only option looks like. We do also have PDF and Excel. The system does also have the opportunity to send you an email each day that you disperse money out with a report. And Heidi does that, where she actually receives an email saying, here's everybody that you paid today. That way you have a report to back up what was just dispersed onto the cards or dispersed out digitally. So really fast, really easy. We do have an implementation team that walks through exactly how you're going to do it, whether it's through a partner or through this spreadsheet. So we're not going to leave you in the lurch. In some cases, we don't charge for it. I'll actually come and be there the first time that you're dispersing money to make sure that you are comfortable with it, or we'll be available online to help you. I was actually, last month, I was in Oakland County, Michigan, which is the second largest county there. I think it's 1.3 million people. They were handing out cards to 400 people the first day, and they didn't get a single question. And they were just kind of in shock and awe that everybody's just used to this process already on day one. So everybody's used to receiving money this way. The younger generation doesn't know what a check is anymore. So once you pay them out, whether that's through a card or digitally, they have tons of different options to receive that money. As you can see here, we do have an instant bank transfer. Similar to Venmo and PayPal, there is a fee associated with that one. So it's 1.75% of the total transaction that they're sending. That's the only one that we charge a fee for. So all the others that you can see on the screen are free. So if they want instant access to it, that's probably the best option. The standard bank transfer is 2 to 3 business days. That one's free. We have gift cards that they can purchase. The cool thing about the gift card option is they can say, here's my $35. Let me purchase this gift card for $50. So it actually gives them access to even more money if they have certain places that they like to shop or want to buy those from. We partner with PayPal. Not listed on here is Venmo. So we do partner with Venmo as well. We're still working on Cash App. So there's a lot of different digital options. So if they don't want to give us their banking information, but they still want to send it to their bank, they can just transfer it to one of those for free and then send it to their bank. We have charities that we donate to on your behalf. So we do have national ones, but if you have specific ones in your county that you want to utilize, we can definitely sign up with them to send that that notification of a donation. We do that once a quarter, so it allows them to send that money. We have a physical check option. So if it is an older person that's living there that wants a physical check, we mail that out from our offices. So you're still not writing checks. And then obviously we talked about the actual card. They can just walk into a bank and put it down in front of the teller and say, just pull a cash advance off of here. And there's no fee for doing that either. So tons of different options. The people receiving money love it now because they can come in and select all of these different options. They can do it online. They can call into our support staff. We have a mobile app that they can log into and transfer the money. The people that download the mobile app are more people that are receiving recurring payments like restitution, because they can actually log in and say, anytime I receive money, just send it directly to this bank account. I know we're still working on trying to get restitution set up here, but something interesting, I was actually working with Kittitas and getting them started on jury. So they loaded their first file yesterday for jury. And I had, yeah, it's easy, huh? Yeah. So I was telling them, I have other people that are interested in doing it for restitution, and they said, well, let's partner with them and see if we can get the AOC to move over this direction. One point I made to them with restitution is the victims feel like every time they receive a check, it's bringing up that recollection of why they're receiving that check. And through our process where they can say, send me my money to my bank account, it just hits their bank account and they don't even really notice it, and it's not bringing up that recollection anymore. At least that's what we've been told in different places that are using restitution heavily. So they can go online and create that access, or they can even just continue as a guest. So they can either create an account or just go through the motions and say, this is how I want to receive their money or my money. So how we save you money, and I'll tell you upfront our cost. So our cost right now is 73 cents for jury, just the same cost as a stamp. Any other type of use case that you want to use this for is $1.99. So the cost for using us greatly reduces the amount of what you're paying currently. That includes like the stamp, the envelope, the paper, the printer toner that you're using to print those checks, all the time to reconcile any that are returned or uncashed. Any time like that goes out the window. So you can focus on projects that are more important or that matter more, where we can help there. The Aberdeen group did a study. This was in 2018. They said the cost of writing a check was $7.78. Bank of America has come out more recently and said it's probably closer to $20. Anybody that uses us, have you ever done a cost analysis? Did you do one before you stopped writing checks? No. I think the lowest I've ever seen is $4.17, up to about 17. So just the ones that have been shared with me at least. So it's a lot more expensive than what we're trying to help you with. I do like to be forthright too about how we make our money, because people are saying, you're charging 73 cents. How do you actually have a business model that runs off of this? So the way we make our money is off of that interchange fee. So we partner with MasterCard. Anytime somebody swipes that MasterCard at Walmart or Target or at a gas station or wherever they may be, MasterCard charges that business 3 or 4%. We collect that fee. So that's how we make our money, is off of that interchange fee. So the individuals aren't being charged. Your fee is really just for shipping and support and everything like that.
Shit.
If you do want to do it digitally, we can look at it differently. And some people even like to do it as a SaaS model rather than a cost per load that we typically go through. So we can definitely look at different pricing options, but this is really how we look at that and making sure that we get the right pricing for you so you're saving money and for us as well. So these are the counties in the state that are currently using us. Sorry, it's kind of small. I probably should have split it into a couple different slides for you. The release pay option is that jail option. So I said at the beginning, there might be some counties that are like, I didn't know we actually used you. So here's, Heidi's already shaking her head. So we do have some people that don't even know they're using us, even through the release pay option. So release pay is that jail option as they're being released from prison. They're handed a card with their money. And then some of these others, I listed some of the jury partners here just to remind myself again, we do partner with all these different people. So whatever your system is, we can come up with a solution on how it all works together and how it all functions together, whether it's through APIs or with that company or whatever the case may be. I may have just stole your thunder listing the travel cards up here, but any questions for me before I turn it over to some of these counties that are using us to talk about that experience?
Oh, here we go.
Are you mailing the cards? Are the cards mailed, or how do people get the card?
So if it's for jury, they're handing them out to them as they're checking in for their service. Any of the others, you're more than welcome to mail them out. And that's how Heidi actually does her jury payments, is she's mailing them out rather than having them receive the card at the time of check-in. And everybody, so I should say, everybody uses us differently. So all of these examples that I've given you today, don't feel like you have to fit within that. We give you the tools. How you use those tools is completely up to you.
Okay, so maybe I'm jumping the gun on this again, but maybe Heidi will answer to this because I know our clerk is not receptive to change and isn't willing to take on any more responsibility. So you're mailing these just to the jurors? Do you just make labels for their? Okay.
I'll make sure that it's answered. Yes, I'll answer that.
Yeah,
now?
Go ahead.
Okay. So when we decided to explore this option, first of all, let me tell you, uncashed warrants, unclaimed property, that's game changer. Another game changer is entering all the gosh darn vendors and trying to read their handwriting half the time. So number one, we're not entering all these vendors into our financial software. Number two, we're not tracking them and making sure they get their checks or making sure they cash their checks. In fact, Courtney was telling me on the way here that we had a juror who served in 2022 on a jury trial. And we have reissued that check 3 times because every time that that the treasurer's office calls around and says, you have an uncashed warrant or sends them a letter, he's like, oh yeah, I do want that money. And so we're on to the 4th time now. So we're going to issue him a card and we're never going to hear from him again. Just to let you know. So when we first explored this option, and part of it comes with the years that I've been in, where I've been with the county for 30 years, I just went to the clerk and to the judges and said, by the way, we will no longer be issuing warrants, issuing checks for your jurors' payments. And they're like, well, what do you mean? I said, we will be issuing them payment cards. And they didn't question me, but if they would have, I would have said, then you need to find a way to pay them yourself. No, I didn't. I mean, maybe I had to, but I didn't. I also informed them. It all came as a very informational meeting where I came and I told them what we were going to do. Now, if they had real heartburn, and did not want to do it. I'm sure they would have expressed that, and then we would have visited. But I found that going to them.
I did go through my board.
She's a good.
And they were against it until I showed them all the outstanding warrants. And then I also showed them the pamphlet because one person was like, oh, there's no way nobody's going to be able to do this. And I said, no, really, read the pamphlet. And when they read the pamphlet, they were like, oh, this is really easy. I said, yes. Again, you have to read the pamphlet. That is a kicker.
So then the one thing is, so when the jury process happens, everybody comes to the clerk's office and they check in. And ideally, the clerk's office would scan the card and hand it to them and say, when the jury has been completed or at a certain point in time, the card will be loaded. You will receive a notification by email or text. My clerk did not want to deal with us being in that office, and she did not want any more work for her staff because they're very busy. So anyway, so I said, okay, well, that doesn't change the fact that we're not paying them by check anymore. We're not. So now they submit the paperwork to our office. We put it in a spreadsheet. We scan the card, load the card, mail the card. What we have is a label with their name and the total amount on the card. This is all done through mail merge. It's very easy through the same Excel process that you use for the upload to them. And we even had a little letter that said, because of the way fraud is these days, on my letterhead that said, enclosed you will find a card. This is your payment for your recent juror service. And then we end it with a thank you for continuing your willingness to serve. And I have not had one negative comment at all from anybody. And it's been great.
I was just going to say, something that used to take us like all day for AP, it takes her maybe 30 minutes from the time she's inputting everything in to getting the cards mailed out. 30 minutes, 40 tops.
So that sounds glorious.
It's amazing.
I have a question with the United States Postal Service and situation with mail. When you have one of the people that have served on a jury call and say, I didn't receive my payment, what is the process?
You just give them the number that they provide you, and then they call them. You don't even have to do anything.
If the card has been used or not.
Yeah. At that point, our support staff is trained to say, we can mail you out another card, but would you prefer to receive the money to your Venmo account, to your bank account? Do you want one of these other options so you can get it faster? Yep. Yeah.
And let me also say, like, for example, one of the first times that we used the system was right before Christmas. And there had been, 3 jury trials that we were waiting on. Our court isn't very good at getting these lists to us in a timely manner. So our thought was, why would people want to serve on a jury if they have to wait months and months to get paid? And so we got together, Courtney and I said, you know what, let's put this card in people's pockets before Christmas. I want them to take this and use this for their turkey, for all of their gifts, their whatevers. And so, truly it will help encourage people to serve if they are paid in a timely manner in a format that they can use.
Can I mention one more thing before you start? So in that light, I had a court in Arizona get started, and they ended up paying someone a couple days early. So they'd served 3 days on jury. Their car broke down and they needed a new battery. They loaded their card once with the money that they'd earned so far so they could buy a new battery to come back and serve on jury before loading the rest of their money on the card at the end of the trial. So we can work with you on any situation that's going on to make sure it works for you, for anybody that's serving your county, anything like that. Sorry, go ahead.
So Brenda from Benton County, we also have the juror pay, and our clerk does, they give them a blank card and it's loaded later, and it's worked great. But we actually started, the first program we had was our for per diem meal cards for travel, and it has worked very well. This is my per diem meal card that I got for this trip. and it has $102 on it. So for years and years, the board had a policy that it was substantiated meal expenses, meaning you traveled, sometimes use a P card or your own card. And then when you came back, you had to turn in the receipts and we had to audit that. And then if you went over, then we had to, take money from your paycheck or whatever the case may be. And so we convinced the board that the best thing to do was to switch to per diem and to implement the pay card program. One of the things that importantly that we did was we right off the bat established a set of policies and procedures that outline the use of those cards. They are only for per diem meals. So you can use a P card. We discourage it because it's extra work on our part. You can also ask for, pay for it yourself. The difference is if you don't use the pay card, they are still substantiated expenses. So we really, really encourage the use of the pay card. One of the big things is we pre-audit. So you have to turn in your supporting documentation before you travel. So we audit it in advance. These are the meals that are provided by the conference. And then we load your card, we send you away. And then the card and the funds on the card become the property of the traveler. We don't ever have to worry about it again. They can use the card for whatever they want. So I'm really bad about using my card when I'm actually on the trip. I probably won't use this card at all. And then it'll sit in my wallet for 2 months. And then I'll be like, oh, I'm going through McDonald's. I'm going to get myself an ice cream cone. We've had people, they're at Northern Quest Casino and they go down and get money out of the cash machine and go gambling or whatever. The key is that really becomes the property of the traveler at that time. Let's see, what else am I missing? Grace?
Quick question.
Yeah.
So if you have people that maybe don't need to use it as a card, do you give them the option to do it electronically so they can go to Venmo or to their bank or whatever?
I took all kinds of notes as Justin was talking about that and kept hitting race. And I'm like, next time I want mine on my Venmo account so I don't have to worry about. But there are options like Race. Before he left town to come up here, he walked into the bank and cashed out the card for cash. Lorene, I don't know what Lorene, you usually transfer yours into your bank account. Yeah. So everybody's different. But I really want to explore the Venmo option. I really like that option.
They can do whatever they want with it.
Yeah, the card is the vehicle for the money, and then whoever has the card can select whatever option they want to receive the money.
Right. Once it's out of our hands, we have it set up to where the departments load the card. So they either have a hand scanner that they can scan the barcode on the card, or they can log into, is it called Rapid Pay anymore? They can log into Tyler and load the card themselves. Same day travel, that topic came up yesterday in some other respect, but it is subject to taxation. So we do, add that amount to a paycheck and then subtract it back out for taxation purposes. The department, because we're decentralized, the department keys the vouchers, and then they have to turn in the supporting documentation, a travel expense report and agenda, the typical stuff that you would do for a voucher. And that's pretty much it. It's been great. I mean, we haven't not had any significant complaints from departments.
We do have a fee. Our fee isn't 73 cents. It's actually $4.95. So just under $5, but we've looked at all the costs and everything. It saves us a lot more time with all the headaches with travel and everything, everybody auditing.
Where do
you keep your documentation? Like, who's keeping that when they are auditing it and stuff? Are you still turning it into the voucher people?
Documentation to do the travel?
Correct.
So all the documentation when the travel forms are actually done, this all goes out of a separate bank account that we worked with our treasurers to take out of. The revolving fund. So all the documentation is in AP because everybody needs to replenish that revolving fund. So it's all in AP. So if we don't have that, then we won't accept the card yet.
So Brenda, I'd love to see your procedures, but you mentioned you're pre-auditing the travel plan and they receive it in advance. Is it a two-touch? Then the documentation is submitted and you verify they actually completed the travel? Went to the training?
You know, they're signing. No, they're certifying. There's an approval process. So there's the traveler, there's the authorizing individual in their department. It has to be a separate person. Authorizing individual can't authorize their own travel. So they're certifying that travel is going to occur. And then, you know, it may be audited later, but we don't audit every single one because we're auditing in advance and somebody's certifying that they're doing that travel. So it is in the policies and procedures that if plans change, they're required to notify us so that we can reverse that. And it's happened to me. I had a family emergency come up and they loaded my card and they reversed it. And the one last thing I wanted to add, and I'll let you, is on the jury pay that came up, and you guys were talking about. Well, what do you do if how do they turn in their pay? Our commission, I was so happy that they did that. Was we approached our commission and said, listen, most of these people are getting like $10, $15 and maybe a little bit of mileage. So we, in every one of our collective bargaining agreements, our non-bargaining policies, we eliminated that. You just get to keep your jury pay now, and their mileage. And we calculated the man hours that were going into, like, you know, turning that in and receiving it in and trying to keep track of, you know, Lorene lives in Umatilla, Oregon, and does she have to turn in her travel pay and all that? It was one of the best decisions we made. Just not a very lean process at all. So.
I was going to touch base back on yours is we actually do departments get ahead, right? And they key something in a month in advance. And so I have my staff actually sit on that because it sends my staff documentation saying you need to review this and make sure this travel's good. So in our policy, it says we actually won't accept that card until 3 to 5 business days before they travel. So it can sit there for a month. They can key it in as far as they want. In AP, we're just going to ignore that AP for a month if we want. So because you said plans changed and then we don't have to load the card, we can deny the card and just delete the AP invoice and it's done. And so the card actually has nothing. They can turn that in. And I also made sure every department that keys that in, they have a safe or lockbox or something that they're holding it. They're not giving it straight to the employee yet. They're supposed to give it to the employee 3 to 5 days before. Once it's approved, then they can give it to the employee. So we have had some cases where we've approved it because they say, hey, my employee's leaving a week before on vacation, so I actually need to give it to them 10 days before. We have done that, and then they come back and obviously they're sick, something happens, and they don't travel. So the AP, I make sure my AP payment isn't paid until the week after they travel because a lot of the times we have enough in our revolving fund to actually cover that. But a lot of times they will come back and say, hey, this guy didn't actually travel. So AP didn't get sent, but Rapid Solutions or the funds did. So I just reach out to customer service and talk to them saying, we still have the card, they didn't go, and they actually reverse the money and the money comes back to us with the $4.95 fee. But I just talked to customer service, easy to work with, and they just confirm that. Once they confirm that, we can tell the department that it's good to go.
And we make the department responsible for the load fee, which apparently we need to renegotiate because it's a little higher there.
Was there a question for Brenda though?
That's okay.
Did you want to ask Brenda? Go ahead.
Okay, so in addition to you said that that's only applicable for per diem. So what about the ferry or the mileage?
All other travel expenses,
are they separate?
Are separate, yeah. We may add on some additional, but we just did a whole financial system conversion and payroll conversion. We have too many other things on our plate right now to adopt other aspects.
So during the Moss Adams presentation, when they were looking at risk, one of the areas of growing risk was P cards during their presentation. So it appears to me from this process that you've really mitigated the risk at the end user misusing a check, right? Or getting intercepted or something. So why are they saying that? Is it because of an inside job where you've got employees is that where the risk is? Where's the risk?
Where's the
That, are
risk?
you asking where the risk in use of the P card is, or use of these pay cards? Use of these cards or use of the P card?
The P card.
Oh,
Card is like personal expenses on a card. That's a credit card. This is a prepaid debit. I mean, maybe I don't understand your question. Oh, Chandra will answer.
So that we have a lot of issues with our P card for per diem because people like to use their P card and then they go over. And then we have to collect that money because you only had $31 and your meal came to $35. So guess what? Now you owe us money. So this would take care of that. And for what I know people don't want to use their own accounts and then get reimbursed because it's kind of the slow train. So this would really help. Would you share your policies and procedures with the group?
yeah. In fact, Derek already has it because I asked him to print this for me so he can send that out to the group.
Not working?
Hello?
Oh yeah, that's working.
Hey, this is for Justin. Actually, just curious on the prices. They mentioned it was closer to $5 for that specific per diem one versus 73 cents for jury. I'm guessing it's just jury's a lot simpler, is my guess. But
Yeah, and some of the risk behind the money too, that the sponsor banks are taking on. So that's where some of that price variance is. Any of them that you saw listed are $1.99. So some of the other programs that we come up with, like travel cards, may be a little bit higher. Yeah.
There you go. So we're the first county, or at least what we've been told for the travel cars. So they had no idea, and so they said, "How about $4.95?"
Yeah.
So we went with that, looking at what work we put in, departments, auditing, all that stuff. Then they did say after a year, maybe 2 years, we can revisit that to see if we can lower your fee. Just like Justin said, they get their money a certain way if everybody actually charges it. But if they notice that everybody uses their travel cards and just goes to the bank and cashes it like I do, then they're not getting a fee, or they're not actually getting so much. They actually might lower the fee a little bit. So I guess it just depends. So we actually need to revisit that every year, every 2 years. We need to revisit with the company and see if we can get that fee. But they had no idea where to start. So.
Yeah.
So I was going to talk about a little bit about the misses because we have learned a lot from this. So the first one that we did was we sent out over 200 cards for fare premiums at one time, and we mailed them out because we couldn't be there to hand things out at the time. So we mailed them out. I, as the auditor, covered the expense for the postage, covered the expense for the fee of the card, because it's still cheaper than us having to pay for warrants and outstanding warrants and all the letters. So it's such an easy process that we put 215 people in, and we funded the cards, and then we mailed the cards. And we got about 75 phone calls. About 75 phone calls of people going, "Hey, I just got this text, or I just got this email that I got this funded card. Is this fraud? Are you guys frauding me? Like, is Lincoln County, like, what is wrong with Lincoln County?" And I was like, oh my gosh. So note to self, if you're going to mail them, mail the cards first, wait a few days, and then fund the cards, because the cards get funded instantaneously, and instantaneously those emails and texts go out. So since we've changed our process just a little bit, we've saved a lot of phone calls and also a lot of complaints. And in the beginning, we did have a few complaints that people just, in all honesty, did not read the pamphlet. So we put a lot of information in the letter to read the pamphlet, and then people didn't read the letter. So we do get a phone call now and again, but we tell them that if you look in your pamphlet, you can take it to a bank. You can, I mean, there's so many options you can do with the card. So it's gotten much better.
One thing is we also used the card for election worker payments, and that was wonderful because not specifically for our ballot box workers, because we're paying them less than $100, you know, including mileage and, you know, $25 to do the box and all of that. So, and we were having to reissue those checks all the time too, because you get a $25 check and you carry it around, pretty soon it's gone, you don't know where it's at. So we did those election workers. And one thing that I've always kind of wanted to talk to Justin about, and one thing that we had to be mindful of, is we have kind of a full-time election workers that will earn more than $600 throughout the year. We held those, and those are the ones that we pay by warrant, because we will have to flag them for a 1099. Yeah, I said that right.
Yeah.
So anyway, but it was wonderful because those ballot box workers, we weren't writing checks for those. We weren't bogging down our system with additional vendors that may never do that again.
Yeah. Well, stuff like that, feel free to talk to us, because
I just kind of
we do all of the PRCA rodeo payments, and we handle all their 1099s. So we already have a system that handles 1099s if you ever want us to help with those.
Life-changing.
There's a fee for it, but it's something that we can definitely do and work on for you.
That's great. And I just want to add something super quick. Okay, I made it sound like I shoved this down everybody's throat. You know, sometimes your county government doesn't react and move forward progressively, and that is Adams County. And that's why the approach that I normally take is I do all the research and I sell it to them, but more in a statement than an ask. And so clearly, if my board or my clerk would have had a serious issue with it, we would have spoken. But it's the best approach for me, and it works. Yeah, passive aggressive, whatever you want to call it. Yeah.
I did have somebody whisper a question to me about whether or not we reload the cards. You can reload the cards. We have chosen not to, because every time I travel, I ask Race, can I reload my card from last time? And he tells me no, because just kind of trying to manage who's got a reloadable card, who doesn't have a reloadable card, when most of the time you don't travel enough and trying to make sure that the employee keeps track of the card. So we just give them a new card. I am not going to lie. There was one time I had like 6 cards, because you know how the auditors like to go to conferences and things. I had like 6 cards, and then I'm on the phone trying to figure out how much is on, and then I put a little Post-it note on each one. But I have successfully spent all the money on all of those cards, but now I have another one.
And if you do want to reload too, let's have a conversation, because all of our card types are different. So if you're reloading a card that isn't necessarily meant for being reloaded, like a jury card, then you're going to get hit with fees that we're going to have to help you reverse at that point. So let's have conversations before you do that, for sure. Yeah.
Sorry, fascinating topic. Do they expire? And if they have lost their card, the communication is speak to them. Is that correct?
Yeah. Speak to us if they've lost the card. So you'll just have our support staff phone number.
But your amount that's loaded on the card is there forever? Or
so the card expires after 5 years.
5 years.
But after a year, we will send that money back to the state if it goes unclaimed still. So really, after a year, there's not going to be any money on that card either way. Correct. After it's activated.
This has been truly life-changing for us. And especially when you look at it from the perspective of, we expect jurors and we expect them, they are commanded to appear. And so why not, reward them by paying them in a timely manner in a form that they can use. And the same with our election workers. You know, they're here helping us. So this has been a really easy process. And I know Justin said he would be there for the first time we used it. We didn't need him there. They send out a video, and I think I may have called you and said, this is way too easy because I don't know if I did it right. And you said, you're good. So this is an actual amazing process. Very easy.
And we did have one time where we had a little bit of a hiccup. It was user error. We were copy pasting. You don't copy paste. Don't copy paste. And when we called, they helped us immediately. It was very easy.
Yeah. Our support staff is great.
Excellent customer service.
I will add one more thing because we actually did funding the cards 2 different ways. And for smaller counties that don't do ACH or anything like that, we funded it the first time by mailing a check to Justin's company, and then they would deposit it in our account, and then we would fund the cards. Then we realized, well, that takes a long time, and sometimes USPS isn't all that reliable. So now what we do is we cut a warrant, we deposit it into a bank account that the treasurer allowed them to have access, and then they draw those funds from there when we need them. Yep. So it works much better. So
yes.
And in that scenario, we actually front load our own money. So you're loading the cards immediately, and then we're pulling it from that account that you give us the next business day.
And the fee from the card, so that, and then we run a voucher from, like, say, Superior Court, and so they pay the entire fee for the juror, the entire jury, mileage and service time, plus the card fee, and so the fund pays for all of that. So the only thing the auditor's office paid for is to mail the card out, and we mail the jurors' checks out too. So to us, it was like even. Stephen, did you have a question? Oh, okay, sorry. Oh.
Okay. Well, again, thank you for your time, and thank you for inviting me up here. I always love coming to these conferences. So I'll be here the rest of the day. If you have any more questions for me, come grab my business card. I'd love to set up a time to talk with you and your county about specifically how you do it and how you're thinking about doing it. We have a saying in our office: once you've worked with one county, you've worked with one county, because everybody does things a little differently. So we can definitely talk through your circumstances and see if we'd be a good fit. So thank you again.
okay, so we're going to take a quick 10-minute break. So we'll meet back here at like 2:18.
Yeah, you know what I'm talking about though, right? The ground. If it tells, it was just bad one. I'll see you in a minute.
Check. Check.
Where's the
Okay, I think we're ready to get rolling again. Hi, Niles. Are they coming in? I am so pleased to have Niles Kostick and Brad White here with us to talk about common audit findings and resources to help. And Niles is going to talk to us about how to manage our data and the things that the center is doing. All things center. Or is that what you're doing?
I can do that.
Okay, do it all. We want to hear it all, and hopefully we'll have lots of questions for you. But we so appreciate you coming, and because you're such a great resource for us, and we appreciate your support. Thank you.
All right, is this on? Yes. All right, so thank you for the introduction, Heidi, and inviting us both out to the conference. This is beautiful location. I've enjoyed being here the last couple of days. I found out Niles has actually been here before, so he knows what a great location this is. So my name's Brad White. I'm the county program manager for the state auditor's office. My main job that I do most of the time is I'm the audit manager for Team Spokane. So I'm based out of the Spokane area. We have 4 cash basis counties and 1 gap county. So I've been with the state auditor's office since 2010. So almost 15 years coming up in August. What I did prior to that is I worked for a federal program for the community colleges of Spokane. So I think for me, it kind of helps give me the unique perspective that I used to be audited myself. So I know what all of you go through. Niles and I were kind of joking just a few minutes ago. Nobody likes the auditors. I get that. We're coming in, you're worried about it. What I try to tell my team, and I hope the other teams statewide also do, is we're really there. We're not trying to find problems. If we find an issue, we do have to report on it, but hoping to partner with you, hoping to, find ways to help you out. And Niles is going to give you a lot of great resources today. So I'll let him introduce himself.
Yeah, thanks, Brad. Also appreciate the 2 p.m. time slot. I was able to get 18 holes in this morning, so thanks for the invite out here. No, I'm kidding. I hear there's still snow on the 3rd hole out here, so they aren't opening for another couple of weeks. But still a good location. We're happy to be here. Name Niles Kostick. I help manage a team at the state auditor's office called the Center for Government Innovation, and we're a team that's separately funded from all of the audit costs, which go into fund our audit teams and all the services that they provide. Instead, we're funded by some I-900 money that was voter approved about a decade ago, if not more. And our whole goal is to help provide resources, tools, kind of supplement the other side of the office and support all of you in different ways to try to help you perform more effectively, more efficiently. And so I'm going to complement all the audit topics here today that Brad's going to talk about with some ways that you might be able to get some resources that are free, easy to use, things like that. So I guess I've been with the auditor's office for about 11 years now. So just short of what Brad's been here for, on a variety of different teams. I like to say that I've done just about everything at the auditor's office, even IT for all the folks that have computer issues. Being one of the younger people that joined the office, the young person is always the IT person. I've been an auditor. I've been a technical researcher on some of the teams that do a lot of the accounting and reporting guidance, and now get to support this fantastic team that provides resources. So I'm happy to be here to talk to y'all today.
All right, we'll get going into the presentation. So for today's agenda, we'll look at some of the common audit issues for fiscal year 23. So we're always auditing backwards. So basically, we just got through 23. Hopefully your audit's been completed. We'll be coming up on 24. You're working on your annual report. I know you've talked about that quite a bit. But so we're looking back on what issues happened in the prior year to sort of help you maybe avoid those this year or even in the future. We'll also look at required risk to assess. So I'll explain a little bit about what that means when I go through those. We'll look at some different emerging issues. And then as Niles mentioned, he'll be filtering in some helpful resources. Then he has a bunch at the end, and then he has another presentation after this one. If we do run long, we'll just finish up in the next hour. So if you have questions, we want to hear those. So don't worry if we run a little bit long on this one. Okay, so going into the audit issues by category. So when I looked at it, I'm just looking at management letters and findings. So we have lots of exit items, but we're just looking at the bigger issues. So I categorized it by financial statement, single audit, and then accountability. So if you look at it for financial, it's the most amount, but there's a little bit of a difference in that we put everything into one pot. So it's all in a financial statement prep issue versus, as you can see with the single audit and accountability, it's broken out by area. So we had 7 management letters, 7 findings for financial. Single audit, procurement, 2 management letters, 3 findings, 4 findings for subrecipient monitoring. Unfortunately, suspension and debarment, 8 findings. It seems like that's the big one every year. So when I go through those slides, I'll try to kind of give you some tips and tricks of how to avoid that one. It's one of those, I hate having to write those because a lot of times there's something we can do to avoid that in the future. Then we had 2 findings for reporting, 1 for allowable activities. And then going into accountability, the first one is electronic funds transfer, or EFT. So that's something I'll cover in emerging issues. Unfortunately, we still have a lot of fraud happening with that. Even this year, I've had quite a few on my team. The fraudsters look for different ways to get that money, and so we're going to try to help you prevent that. Also, we have procurement for accountability audits. Niles has a whole bunch of slides on procurement, so that's going to help you with accountability or a single audit. And then we had some contract issues, just one small and attractive, one P card and one OPMA. All right, so kind of going into the ones I'll go a little bit deeper into is federal procurement, suspension and debarment, subrecipient monitoring, and then a little bit on financial statement prep. So looking at procurement, so there's lots of issues that can happen with procurement. It's one of those things, it's difficult to audit. It's one of the things I work with my team on a lot, and I know it's difficult for you all to do because there's a lot of different regulations on it, how you're going to procure something. When it comes to single audit, the thing that we've had to write management letters and findings on, which, you know, is really frustrating, I know for you, is the policy. The feds are super nitpicky about this. So they have really specific things you have to have in that policy. So they want to make sure that when you're using federal funding, it's the most restrictive of state, local, and federal. So in the beginning, when we started auditing this a few years ago, when the policy was something that was required, sometimes there just wasn't a policy and procedure in place. I'm happy to say I think everyone has a policy and procedure in place. Most people have gotten where they needed to be, but the few management letters I've been seeing lately, it's still with those missing thresholds that are in the policy. So what'll happen is a county or a city or whoever it might be, you might say, hey, we're going to reference the RCW. And if you went to that RCW, you would see the thresholds. The feds say that's not good enough. You have to actually have the specific threshold for your county in that policy. It's one of the things that Felicia, who's our single audit specialist, so she vets these things with the feds, make sure we're reporting on it correctly. So it's one of those things that when we're doing a single audit, so we're doing it essentially on behalf of the federal government. So we don't have the discretion to say, we're okay with it. We have to go with what they say. So this is one of those, you know, hoping to get fixed up so we don't have any more issues moving forward. Now I'm going to hand it over to Niles. He'll go through some resources with you.
All right, so what you're not going to get today from me is a complete breakdown on exactly everything that goes into federal procurement or non-federal procurement, because there are way too many requirements for me to go through step by step. I think a lot of what Brad showed you as far as merging issues and things that we're seeing are important. And what I want to do, though, is highlight that our office does put out, I think, what is the largest suite of buying and bidding resources as compared to any of the topics of resources that we put out from our office. And I just kind of want to break down exactly what you can look for in each one of these so that you can go out, and if you have a part to play in any of these or want to share this information with anybody and know a little bit more about it. As I said, all these are part of a larger, a suite. And so they're meant to go together. They're usually updated together for you to share around. Our buying and bidding guide does go through the complete process from you're going out there and soliciting bids from folks all the way through to monitoring and those closeout process for contracts, for purchases, as well as some of the smaller services and architectural engineering type things that aren't in those major two buckets. We have those breakout resources such as the change orders and the responsible bidder guide, both are which to help you walk through should you have to go through those certain situations. So our responsible bidder checklist, for example, walks you through step by step, asks you about 25, 30 questions to make sure that the bid that you are about to choose is an appropriate bidder for that contract. So we go through and make sure that that bidder has submitted everything they need to, that you're checking and making sure that all the things that they're certifying are true, is true, before you actually enter into that contract. So we see a ton of issues where some things aren't checked, and then you get into that contract and we have these things that we have to report. For that responsible bidder guide, there had been some changes in the past, and so you should expect a new version of that just coming in April or May. So we're really excited that there's going to be a new version of that for y'all to explore. As far as federal requirements go for procurement, we just launched this resource last fall. Has anybody out here gone and take a look at it? Okay. Next year, I want to see more hands up related to this. This guide is essentially for anybody who touches or manages a federal grant. this was developed in coordination with our federal grant specialist. And so what it's meant to do is go through all those common audit areas that we are required to check on as part of a federal audit, such as procurement. And we go through and show you the overview of requirements, what you can expect from an auditor when they go and actually choose a program and go and audit it, which we know a lot of you might be curious about. And we like to show you exactly what to expect so you can have things prepared before hopefully you enter into that federal grant. For procurement, we have in here the federal procurement thresholds and the requirements for each type of purchase that you might need to make. So for example, we have micro purchases, when you need formal sealed bids, when you need non-competitive procurement and all the requirements that go into that. Brad mentioned the most restrictive law. And so we have a nice diagram in here that shows you by the type of procurement. So the one I'm showing on here is for architectural and engineering, what the Washington state law is versus what the federal law is, and then some recommendations for you for every single type of purchase that you might be making under using federal funds for procurement. Okay. So I want to highlight just a few things that's in the guide that Brad mentioned will be good to know that auditors are going to check. So the first thing is they're going to obtain and review written procurement procedures. Sounds like those are getting better and better to have actual guidelines in place for how you are going to procure goods using federal dollars. And so that's going to be checked. The second thing, which we've seen a little bit of weakness around, is just verifying that you have those written standards of conduct. And then finally, our auditors are going to select a sample of procurements and then make sure that they complied with those. So we try to give you for each type of, during the federal grant or the federal audit, exactly what our auditors are going to go out there to do so you can get those ducks in order.
Okay, so federal suspension and debarment. So this was the one I mentioned. Unfortunately, we had the most amount of findings in. So essentially, anytime you're have a new contract, a purchase for over 25,000, or all new subrecipient contracts, you have to check for federal suspension and debarment. There's three ways that you can do this. So you can have a clause in your contract. You can check the status on SAM.gov or written certification from the contractor. So in my role as auditor, I'm never allowed to tell you what you should do. It's always a management decision, but just trying to explain to you sort of what I've seen in terms of when I normally find issues is typically it's when people do that second option. They check the status on SAM.gov, but they don't retain when they checked it, and that so when we come in to do the audit, as he mentioned, we're looking for support to show that you did it. So if your staff are using this, you want to make sure they take a screenshot or print something out that shows the date. So let's say you're entering into the contract on March 18th. They went and looked on March 17th and that vendor wasn't on the list. If there's nothing for us to look at, then unfortunately we have to write that up as an issue. It's kind of like we use the term trust but verify. So it's not that we don't trust you, but as auditors, we have to be very black and white in these kinds of things. So you have to have the support. So the counties or cities or the other places we audit that have that clause in the contract, if you have that in every contract and you're providing that contract to the vendor, that's typically going to be a little bit easier to do because it's already in there. It's something that your legal has already worked into all of your contracts. Again, you'd have to obviously have the contract for us to look at, but typically that's not an issue. And then if you're getting a written certification from the contractor, again, you have to have the support for us to look at. Sometimes I've seen where they, for whatever reason, didn't maintain that documentation. So then that would be an issue. But it's really that second one where I believe most of the time it really is happening. I don't think people are saying that they did it. It's that we don't have anything to look at. And so we end up writing an issue for it, which I hate to do as an audit manager because it's one of those things that could have, you print something out and we're good. So kind of going into the issue. So obviously, if you didn't check it, then that's an issue. Sometimes that happens. Sometimes you just miss it. Maybe it was just over that 25,000, so it didn't happen. But most of the time, it's that not retaining evidence that I talked about. So subrecipient monitoring is another area. So a risk assessment has to be performed for each subrecipient. I think this started to become an issue more with all the COVID funding because a lot of that money was getting passed through to subrecipients. And I think a lot of the times these were subrecipients that typically didn't receive federal money. So Spokane County is the largest county that my team audits. They pass a lot of money through to some of the other cities that we audit. That's typical. The cities know about it. They get federal money every year. They know how to handle that money. With COVID, we were passing money through to people that typically didn't get the money. They don't know the federal regulations. They don't understand the rules. And one of the things that you have to do is have that risk assessment with them. You also have to make sure when you have a contract that it includes all the required elements. So there's things like a DUNS number that's a unique identifier, or a federal award identification number, the FAIN. So there's specific things the feds say has to be in that contract. And then last, you want to make sure you're reviewing those expenditures to make sure they're allowable. So again, as I mentioned, if you're passing money through to someone that's never received federal funds, I think most of us in the room that have worked with federal funds, you know, you can't buy alcohol, you know, you can't buy tobacco, you can't spend money on certain things. A lot of these places didn't know that because with other kinds of funding, they have more, they can spend money on different things. So you're wanting to look at, did they spend money on anything that's pretty obviously not going to be allowed, but also what does it say in the grant? So before that gets submitted for reimbursement, kind of trying to help them out so that doesn't get kicked back or they have a federal audit and now they have question costs they might have to repay. And then some more resources by Niles.
Yeah. And you're going to notice a trend here because Brad's going to talk about common audit issues, and then you're going to see some resources in here that kind of combat those or respond to them. And that's a little bit of the point between our two functions at the auditor's office. And so my little hint there is that when you see us issue new resources, they're good to pay attention to because usually those are in response to audit issues that we see when we go and issue these. So Brad talked about suspension and debarment. He talked about subrecipient monitoring. These chapters come from that federal grants, federal program guide that we have for monitoring federal grants. And inside those, we have best practices specifically for suspension and debarment and sub-monitoring. And some of those are exactly what Brad mentioned. So suspension and debarment, you got to verify that status before entering that transaction. And as Brad said, there's several ways to verify, just like he highlighted. We have those included in the guide. For subrecipient monitoring, our audits typically review for monitoring policies, review subaward documentation, review monitoring effort, and then that risk assessment like Brad mentioned. So again, you should find a lot of the ways to avoid some of these common issues inside of the requirements, both of the grant agreement, but then also in the guide and a little bit more of a plain language feel to it for you to hopefully follow a little bit easier. My one funny story with suspension and debarment is we had a comms representative at the auditor's office who has to review every single finding that goes through our office, right? You make sure there's no typos, make sure everything's formatted correctly, includes all the correct information. And that was the one finding that he hated to review because he had to review so many of them. And he thought they were so easy to avoid just by doing those few simple things. And so he pleaded with us to please stop getting findings over for suspension and debarment. So help him out, allow him to review less findings every year. And there's some good ways to do that. So in the guide, we have just some requirements here for some 7 steps, if you will, for subrecipient monitoring. They're in the slides there for you to reference, but also in that guide. And I just think they're really simple steps that you can do to avoid those issues. Brad also talked about some changes, the uniform guidance and everything that goes into those federal awards that we're both required to audit and governments are required to follow. They do change from time to time. In this last year, there are some pretty significant changes, specifically for new awards that are being issued, right now. And so in the guide, you don't have to worry. We've highlighted for every current requirement whether or not that requirement's changing. And so if you want to go in there and take a look, just look for the little highlighted section that highlights exactly what's going on with that, why it changed, and what the new requirement is. All right. We do have a risk assessment checklist as well. What this risk assessment program risk assessment tool does is asks you some very simple questions about your either existing federal programs that you're monitoring or new ones that you're about to enter into. They're high level, like have you read the uniform guidance? Have you read the grant agreement? Do you have enough staff to effectively monitor the grant agreement? Yes or no? The beauty about these checklists, risk assessment checklists in general, is remember, there's not a yes is a good answer and no is a bad answer. Risk assessment checklists and risk assessments in general are all about grading your acceptance of risk and then how you're going to respond to it. So maybe you don't have a dedicated staff person for a specific federal grant. That's okay. Maybe there are some ways that you are either going to accept that risk, have other staff monitor it, include other activities that you could do to assist that staff member, et cetera. So it's all about documenting your current state and then identifying some things that you can do about it to make it better. So don't worry about putting a no on here on any risk assessment. That's a good opportunity for further monitoring and further controls. Okay.
Okay, so financial statement preparation. So for this one, it's pretty unique to each financial statement audit because there could be all kinds of different misstatements that led to that. But when we're going to issue a management letter of finding, we're going to talk about the controls. So what wasn't present in the review or the control that led to the issues we're talking about. So a good example probably would be leases. That was something that was new a couple years ago. So as we're looking into that, if you didn't present your leases, then we're going to talk about what could have been in that control process to avoid that. One of the things I want to do is kind of give a plug for the local government support team that was here yesterday. So one of the things that they can do, and the center, this actually they can do as well, is that, so if we're coming in to do your audit, once you tell us you're ready for audit, your financial statements are final, unfortunately, if we find issues, then we have to report on it. Me personally, I would rather not report it. I'd rather have you do everything correctly. I'm not looking to find problems. If I find them, I have to do something about it. So the way I look at it, and I think a good example is when you think back to when we were all in school, if you're on the day of the test and you go up to the teacher and you say, hey, I'm not really sure how to do this, can you help me? They're going to say, sorry, you're taking the test. At this point, it's too late. So that's essentially when you're in an audit and we're already looking at the statements. But the center or LGS, they're there to assist you. They're not there to audit you. So they have different levels of independence than we do as an audit team. I can only answer certain questions on how you're supposed to do something. So if you're thinking back to being in school the week before the test, hopefully if you had a good teacher, if you went up to them and said, hey, I'm really not sure, I don't understand how to do this math equation or something in accounting, they're going to help you through it. So if you're not sure if you're doing something correctly, I would put in a help desk. I would contact the center. One of the things that I talked to Heidi about in terms of the help desk is, I know sometimes you might get a response and you feel like it's vague, it didn't really answer your question. Call the person that submitted that help desk back to you. It's typically going to be Vivian or Kaylee or Olivia, it could be Stacy. They're going to be happy to talk through it with you. I think sometimes they may not have fully understood the question. So for example, if you had a journal entry you were trying to figure out and you ask them about it, just call them up. They'll have a conversation. You can explain your specific circumstance and they'll walk through it with you. And they're happy to do that. I think they answer a lot of help desk questions. And I've seen some of them. I've had some of my clients ask and say, hey, they didn't really answer my question or I still don't understand it, but they really are happy to walk through it with you. So before we get there for audit, ask people questions and you can contact your audit team and you can, ask us and I might be able to give you a resource or direct you to someone, but we really want you to make sure before the audit starts that you have all your questions answered.
Brad, can I add something there?
Sure.
Yeah, I love that. I love that idea and that suggesting using the help desk, suggesting reaching out to us. There's two things that you're trying to accomplish with reaching out with a question. One, you want the answer, of course, but two, a lot of times you want documentation of an answer to show somebody right later on, whether that's management team, whether that's an auditor later on that shows, hey, this is the research that I performed for the reason that I'm doing what I'm doing now. But there's a ton of value in the back and forth, right? An email or a help desk question is usually, I give you 500 characters of my question, and you're going to give me 200 characters back in a response. And that's it. That's good, again, for that evidence. But that phone call, that allows you to talk about more of like, well, what ifs? Okay, well, I have this instead. Well, what if I do this instead? It gives you a lot more information than maybe a text response provides. But that help desk text response is really going to be that, again, that evidence that, hey, this is one of the steps that I performed, which is why I did this the way I did it. You know, I'm doing my due diligence, etc. So there's still a ton of value in those help desks and emails, but phone calls are gold in the amount of information you can share with one another. All right, so not a lot to talk about here. We always issue a cash basis and we have a GAP financial statement preparation checklist. These are reflective of the BARS changes that go into the BARS manual every year. So we update these. I know this says updated January 2024. The new one is maybe 2 weeks out now, integrating all the changes that came into the BARS manual this year. So expect that soon. We know these are a big part of everybody's, again, process to file their annual report, process to put together their financial statements. So just know that these, we keep these in sync with what prescription is, law changes, things like that. So make sure to go check it out. Let me see here. For the GAP checklist, you notice that we don't update this one as frequently. We'd still, oftentimes recommend you go out and check out GFOA's checklist for their ACFR. Even if you don't submit an ACFR, although I think many counties do. The amount of information and questions that goes into one of those checklists, it's a ton. There's hundreds of questions. But if you do go through that thing in its entirety, you're going to be in a very good position at the end. So make sure you can check out ours. Ours is going to have some information about whether you integrated BARS updates, whether you're taking trainings, things like that. But then I'd follow that up with GFOA's checklist as well. I always used it back when I was reviewing financial statements. Okay.
Okay, so required risk to assess. So just to give a little background on that. So every year we put together a planning guide for our auditors to kind of let them know what are some potential risks of the county or the city or whatever it happens to be. So what that means is they don't actually have to pick the section, but they have to at least take it to our brainstorm, whereas we discuss, is this a risk you're going to be looking at? So it's one that we see as a bigger concern, potentially more important, something we want them to consider. There's lots of risks in the planning guide. They may not apply to you. Maybe we looked at it last year. These are ones they just have to at least consider. So the first one is investment pool reporting. This is for GAP only. So this is something that just got added recently. So I'm going to touch base on that. And then restricted funds. So that's something we've had for quite a while. We took out the EFTs. I'm going to talk about those because I think it's important. Anytime you see fraud happening, you want to avoid that. But they took it out because we've really looked at it a lot. And so the only time we're going to be looking at it is if you have some sort of issue, and then we're going to follow up on that. But we've kind of, really looked at the controls the last several years. So it's not something they're going to naturally look at for every audit. So going into the investment pool reporting, so what it sounds like took place is there was a few different counties where there were some issues that they found during this process of having an audit completed, and they kind of talked to our technical audit support team about it. So that team decided to do what they call a quality control review of all GAP counties, because they wanted to look at it to see, is this, a problem that all of the counties are having? Is there something that we can do to help get these things fixed up? What I have in bold, which is really important, is none of these appear to be material. So that's a really good thing. If it was material, then you would have to correct it for us to be able to issue a clean opinion. You'd also potentially have bigger issues involved. So a lot of these are pretty minor things, but they're things they're hoping that we can get fixed up. So you're going to have auditors asking you about this when you have your financial statement audit this year. So they asked me to just kind of mention it today so that you're aware of that. What they did is they added a note in each of the audit files for anyone that has a GAP county. And so you may have teams that reach out to you before the audit. I know for the one GAP county I have, we did that just kind of as a courtesy to say, hey, there's a couple things that we found here because they're in the middle of their financial statement process. And then it's a conversation that you'll have of, do you want to make that correction this year? Do you want to make it, next year? What do you want to do with that? That's really up to you and your audit team of when you talk about how you want to deal with that. So because every county has different issues, there's really not something to say every county is doing this one thing incorrectly. There's 6 questions. They found some counties may have had an issue with number 1, but not the other 5. Maybe it was number 2 and 4. So essentially what it was, the primary question was, do the proprietary statements appropriately classify equity and the investment pool as cash equivalent and use appropriate line item titles? So a lot of it is really presentation issues here. It's that you have the information correct on your statements. It's how are we presenting it in the notes? So another thing there was it could also be on your fiduciary statement. So one of the examples I had seen was, is there an investments line on the fiduciary S&P? That was something they were looking at for the county that I audit. The other questions, as I mentioned, they're presentation disclosure issues. So one of the examples I saw is the deposit and investment note for your pool, does that tie out to the statements? So in some cases, maybe there's you look at it and you think it does. So that's something you're going to hash out with the audit team, and you can work with the person that did this review from our quality control team to just try to get an understanding of when they looked at it, why did they think it wasn't done correctly, or what can they do to help you fix it? So the other area I mentioned is restricted funds. So several areas of risk here. That's one of the things that counties receive a lot of different funds that are restricted. So yesterday when they were going through the second presentation they did for LGS, you guys talked a lot about some of the restricted funds. You went through some of those exercises. So some of the examples I had were overhead costs, building permit fees, the interfund loans and transfers. That was the one you really hashed out with them about what are some of the restrictions and how you should deal with that. And then the county road fund. So as they mentioned, if there's a restriction on it and we see that you've transferred the money out, then we may potentially want to look at that and say, was it done for an allowable use? So that's why it just kind of gets red flagged because of those restrictions to make sure it's done appropriately. So then going into emerging issues, as I mentioned before, I'll be talking about EFT controls. I'll be talking about unauditables, audit timeliness, and then the county service project that I've been involved in the last several months. So EFT controls. So just a couple of quick examples. So we had a school district where they were doing a lot of expenditures with one company. They received an email that said, we've changed banks. Can you change where you're diverting that money to? The person that got the email was a little bit concerned. Maybe there's something weird about this. So they called the phone number. They were assured this was all in the up and up. They changed the money. Turned out that email was from the fraudster. The phone number in the email was the person they were talking to that committed the fraud, and they lost over $6 million because of that. And this was sort of early on when this started to happen. The second one that happens more often, it's a smaller dollar amount, is payroll. And I've had this happen on a couple of my clients recently, where you get an email in HR, you think it's from the employee saying, please change where my direct deposit is. Then a few weeks later, the employee says, I never got paid. Turns out it wasn't the person that, was supposed to change the account. So that's kind of what we've been doing and talking about controls. For both of those situations, what's the other way that you can ensure that's really the person you're talking to? In person's the best, but obviously that's not always the way you can do it. Do you have a phone number? You're sure that's their county phone number? You could call them. Could you talk to their supervisor? Is there something you can do to make sure it's legitimate? So going through, so what we were looking at is we were testing those controls on the audits due to the amount of increased payroll and vendor EFT cyber related fraud. So sort of what I talked about, the social engineering that these bad actors are using is they're trying to change bank information for an employer vendor. The other scheme we've seen that doesn't happen too often, but again, they get creative because how can they get their hands on your money, is the one we've seen is, so a superintendent emails their office assistant and says, staff have been really doing great. I want to get them all gift cards. Can you purchase those? Just email them to me. And these are e-gift cards. So they do that. Turns out it wasn't the superintendent, and they use all the gift cards and the money's gone. So haven't seen it as often, but something just to be aware of. And again, it's making sure that email came from the right person. So Washington governance, you're required to report the losses to our office. We've had nearly 200 losses since 2016, smallest governments to largest state agencies. The losses at this point total almost 37 million. So it's a pretty big dollar amount. And again, just another reminder, you have to report those to us. And even if you're able to recover the funds. So sometimes, there's something that catches it and you don't actually lose the money, but you still have to at least report that to us. So just make sure you do that. And then I just put together some quick statistics on this that we have just to kind of show you how it's broken down. So you can see that gift card amount's pretty small. The vendor by far is the largest. That's because that's where the money, it's being batched. So you might make $2 million payment all at once. Payroll, as you can see for the count of the case number, it happens the most frequently. But even if it's your highest paid employee, it's one paycheck versus, buying a lot of expenditures at one time. Then you have it here broken down from the year. So you can see it started off with one case for $89,000. And then we had the one big year where it was almost $20 million in 2019. And since 2020, it's roughly around $2 million a year, essentially 20 some cases a year. 25, we're just getting into it. So we're less, but unfortunately I would guess it's going to be over 2 million by the time the year is over. So it's still something that's happening. And we just want to help you avoid it because it's never fun to deal with the loss. And Niles has some resources on that.
My wife hates it that I tell this story, but she, that's a great start, right? I still tell it everywhere I go. Don't mind you. So my wife almost fell for one of these gift card schemes, and I was helping her out. She brought this text that her boss had sent her. She works in the local government, and it said that, hey, I'm going to a recognition dinner, staff recognition dinner. I need you to buy some gift cards. I'm on my way there. I can't do it myself. So can you just buy these for me and email them to me? And she's like, oh, it's a call to action. My boss needs me to do something, right? All these fraudsters, all these cyber criminals, they try to tap into your emotions and try to get you to do things and act quickly. And so she showed me, she's like, we got to go to the store and do this. I'm like, wait a minute, slow down. And so that's my big tip here for all of these is if you see something strange and out of the ordinary, all you have to do is slow down because all of these bad actors want you to act fast. And as you saw, it's a huge issue. We see millions of dollars being, errantly spent by these tricks that are being played on local governments. And it's seemingly easy to do, but in my opinion, it's also seemingly easy to avoid should we have these good controls in place, which is why we have a couple of best practices here. We've been doing trainings on this topic at several conferences for the past 2 years because of how big of an issue this has been. And again, because of how easy it can be to combat. End of the story, we did not buy any gift cards. We stopped it. And at the very end, we started playing around with the fraudster, asking him funny questions and, leading him on and stuff like that, which, it was a happy ending. So, some reminders on this and some best practices. The first thing that I would encourage all of you to do is make sure that, you have some sort of program or training in place that tells employees that this is a possibility, especially those employees that are in a position of issuing payments, changing vendor information, or changing payroll information. Ideally, and this goes back to our control framework and everything that we go back to review in every audit in these areas is the person who is able to change that information, right? A bank information or an employee's payment information shouldn't also have the authority to issue payments, which is one of those key segregation of duties that we should be separating, right? If somebody did come and say, hey, I've got to change some vendor information because of this email, now you got two people, again, like me and my wife, talking it out like, is this legit? Should we do something? Should we make that call to the vendor's phone number from the file and not in the email? Just very simple things, again, slowing down so that these payments don't go out. Of course, we should have policies that outline that, exactly who's allowed to change vendor information, really making sure those controls in your systems are in place so that somebody can't do it outside of that process. And I think that's really the key here in protecting it. We see payments going out because one person can both change that information without any sort of a review or approval, and then that goes forward and gets paid. You saw, luckily, payroll gets caught pretty quickly because somebody misses a paycheck. So there's a built-in check there, but a lot of times for these vendors, they're being sent to somebody that, a vendor wasn't expecting that payment. This is usually an additional payment that, fake payment that's being requested.
Just real quick, we have one question on that.
Yeah.
Is a call log maintained for the calls to the help desk?
So good question. So what typically happens is, should somebody submit a help desk question and then call in, a lot of times our response will include a sentence saying, we had a discussion on the phone with this person. We talked about these things. Here's our response. So that's usually how the phone calls get integrated into the help desk. There's not necessarily a log other than a manual entry for our staff to just record what's happened, who we talked to, some general information like that.
Should we just keep going in terms of, I know we're a little bit behind on time, but
When do you want to take a break?
Is this presentation would start?
no, we're still finishing the first one, but it'll,
Yes, thank you.
okay. All right.
Yeah.
Okay. Yeah, and one thing you could do for what the question that was asked, I was thinking is something I will tell my staff to do if they feel like the communication with someone they're auditing maybe isn't what they're hoping for, is send a follow-up email that says, hey, thanks for the conversation. I heard you say this, just wanted to confirm that. So if you feel like they gave you an answer, you could send that email. So again, you have something in your hand if we come in to audit you and you say, I did this because Kaylee told me this was okay, and here's the email proof of that. So that's what I would recommend. So go ahead.
I was just wondering if that's going to potentially make you get a final. Sorry. Okay. Hello. Just wondering if we do submit a help desk, does that increase the chances that SAO would issue a finding on something that, is there a better chance they're going to audit that item, I guess is the...
Oh, like using that as a risk?
Yeah.
I don't do that personally. I can't speak for every team, but I can see that kind of concern that you've now brought up, like an issue or a red flag. So it shouldn't be the case, but I couldn't guarantee that it, wouldn't be. So, but hopefully if it's something that you can get fixed, then, then you wouldn't have the issue, but yeah. So unauditable. So these are special purpose districts that we've basically determined are incapable of being audited. So typically they haven't filed for 3 consecutive years and we can't communicate with them. So what'll happen is we try to reach out. We may even work with you to say, do you know who these people are? Is this their contact information? Are you guys in, contact? Are they still submitting things to you? So what happened a couple years back, which the legislature then got involved, is we had done an audit on a small district on the west side, and we hadn't been there for a long time because of this kind of had happened. When we got in, there was fraud all over the place, and it was the governing body that was committing the fraud. There was lots of things that went wrong on that audit. So the legislature really saw that concern and the risk that maybe the reason we haven't heard from them is because something nefarious has happened. A lot of times it's not. It's a small volunteer organization. They don't know the rules, that sort of thing. But what I was asked to talk to you guys about today is an RCW that is in place. So I haven't luckily had to deal with this on my team for any of my counties, but there's other counties that do have these unauditable governments where we issue a report that names them as being unauditable. So if that were to happen, RCW 4309-230 actually prohibits you from issuing warrants for that special purpose district once you're notified. So the legislature wanted to put this in place as sort of a stopgap of, hopefully this is going to be a thing that gets their attention, that you have to submit your records and have an audit. Yes.
Does that go? That's only for issuing warrants. We had a situation where we have a fire district that was unauditable, and then we split our public safety sales tax amongst the districts, and that fire district got it last year. But then we had this discussion: is because they're unauditable, do we send them money? And we actually did reach out to the SAO, and there was nothing that would prohibit us from doing it, and it would probably be helpful for them, that district. And that was a district that it was in the northern part of our county that we did hope that they would succeed because they're the only ones up there. So But that's your conversation, and that RCW is just for issuing warrants, correct?
Correct. Yeah. So that's the one thing that is in statute that I'm aware of is the issuing warrants aspect of it. And like you were kind of talking about, a lot of times it really is, there's a reason that's happening that's not fraud. So, but that's sort of how this all got started with the unauditables is the legislature became very concerned when this all happened. It was in the press. It was a big deal of, hey, what's the deal with these places you aren't auditing? And so we sort of explained, and that's how it kind of got its feet under it.
I bet if you held their money and didn't issue warrants, you'd hear from them real quick.
Most likely, I would think. So audit timeliness. So that's one of the things that we're trying to continue to sort of put an emphasis on. I think with the pandemic, with a lot of federal extensions, a lot of things got behind in terms of audits. So we're trying to do our best to keep up with getting your audit done timely. So let us know when you have your audit team, if you have needs in terms of when you want the audit to start, if you're going to have staff out, if you've had turnover, we'll do our best to collaboratively work with you to try to make sure that happens. I think good communication makes it all happen. So if you're working with the auditor in charge, you don't feel like that's happening, talk to the supervisor. If not, talk to the manager of the team. You know, I know for myself, and I think the rest of the managers, we're happy to have the conversation. So if you don't feel like the people doing your audit are really communicating well with you, talk to their boss, say, hey, I want to get this audit done. This is what's happening. And then they'll hopefully make something happen for you. Okay, so my last topic is the county services project. So essentially what happened here is we had a few different counties that had changed their process. So they had been providing optional services to their junior taxing districts. And then when they decided to stop doing that, we got a flood of concerns from these junior taxing districts. They were sitting in help desk, they were calling our office. They thought a lot of these things were required. And so we really wanted to kind of look into it. What are we at with this? And so we had all these internal meetings, kind of looked at what's required, what's not required. We sort of talked about, so what does this look like statewide? And we realized we really didn't have a comprehensive list of all the counties. What do all the counties do? So then that's when I was asked to sort of take on the project and say, hey, can you meet with all 39 counties statewide? Which, you know, seemed like a pretty big task. So I split it up. So Cheryl, who is a subject matter expert for counties from our Port Orchard team, her and I partnered together. I took 20 counties, she took 19. So all of you guys that we met with, either myself or Cheryl, I appreciate the time that you took. It was really interesting having the conversation with everyone. So just the optional services, and I know there's more than this. We learned about a lot of the things you're doing on top of what these are, but what we started with was payroll and benefit processing, general ledger maintenance, and budget preparation. And then the ones that we saw as required, and now this isn't for every junior taxing district. So some junior taxing districts have a different RCW that you're not responsible to act as their treasurer. This is just for those ones where it says that they have to use you as the treasurer. So for those ones, it would be acting as treasurer, processing warrants, and managing investments. And then these are the state laws. So the 362290, that discusses the county auditor's requirement to process warrants. The 3629-130, that's in the treasurer's area. So that's their requirement to collect and receipt municipal taxes. And then the 58750, that's kind of a collaboration. So it's the county treasurer's requirement to receive the money and then disperse on warrants that are issued and attested to by the county auditor. And then last, that 4309240. So that's the county treasurer requirement to manage the funds that are deposited. So that's sort of when, as we look at things, we look at what are the state laws and we try to audit to those. So the goals for the project is, they were pretty simple in the beginning. So we're just kind of looking at how many counties offered those optional services and which services were actually offered. Determine how many counties charged for any services and the method that was used, and then understand the risk for the junior taxing district. So that was really, I think, the thing that was most concerning to us is when you start learning that there's all these junior taxing districts that maybe don't know how to process their own payroll, have never done their own budget, all these different things. We now have to go audit them. And so we wanted to kind of get a scope of what are we looking at so that we can maybe have NILE provide resources. We can sort of get ahead of it to have an understanding of what is this going to look like moving forward. So the outcomes for the project, so we're hoping to have a better understanding of which services counties are providing statewide. One of the things we're going to do early on when I was doing the project, a few counties asked me, hey, can we get the results of this? I talked to the people above me. They were fine with that. So that's something we will get out when we're completed. And then we want to provide any guidance or best practice to you all and the junior taxing district. So anything we can do to help it be more clear, best practices, that sort of thing. I asked if I could, kind of talk a little bit more about the results today. Since we're not done, they only really wanted me to talk about, sort of this one thing I sort of got approved to talk about because I thought it was interesting. So we've done 38 of the 39 counties. We just have one county we're still meeting with. And 23 of those 38 counties, you provide some sort of optional service. Now, the way I did it was, it doesn't mean you provide every service. It may be that you provide 2 of those. Maybe you provide 1 service to a few junior taxing districts, but there's a lot of optional services that counties do provide to junior taxing districts. And I think one of the things, me being in the county world that I'm sort of hoping to get out to those junior taxing districts is for them to sort of appreciate and realize how much you do for them, because I know there was some of that sentiment from all of you that maybe they don't realize these are not things you have to do. You're doing it to try to help them out and to try to help local government as a whole. So 8 of those 23 counties charge fees. So really only about a third of the 23 counties are charging some sort of fee. And then overall, no counties operate exactly the same. So Justin had the joke that he talked about, and I was like, wow, that's really true. When we talk to each of you, obviously Stevens County and King County are going to be really different. But even if you're same size county, you're both rural, you do things really differently. And so it was just interesting kind of talking about how do you receipt cash? How do you process warrants? What services do you provide? What's the interaction like with the junior taxing districts? So the next steps is we're going to analyze the results from the project. So when we're done with that last meeting, Cheryl and I will sit down, kind of look at what did I gather, what did she gather, and then we're going to meet with Tina Watkins. So for those of you that don't know, Kelly Collins, who was the director of local audit for a long time, she's now the deputy state auditor right under Pat McCarthy. Tina Watkins, who used to be an assistant director, is now our director of local audit. So I used to work directly with her on counties, and she was involved early in the process. So she's still going to be involved. And then Christina Baylor, who used to be the Team Everett manager, who's now my assistant director over counties. The 4 of us are going to meet, look at the results, talk about, what do we need to do? Do we need to change BAR's manual? Do we need to change planning guides? Will we provide maybe new resources for people? Will we do changes for our internal guidance? Anything that would involve anything related to RCW, we're going to run past our director of legal affairs, make sure we're interpreting the RCWs correctly. And then we'll get those results out to you, and then we can have a conversation. So if we get those results out and you have any concerns or anything like that, we can kind of talk through that. All right, the rest is Niles.
So this is actually a good breaking point because this is the second half that'll go into the next session. So do you want to take a break? This is about 30, 45 minutes of stuff here, which is the second session. Okay. I hear it's a 15-minute break. So that'll be about 3:30. Yep.
Hey. City of Prosser. 0, 0, 0. So we get hazard. What 20? Oh. Federal project expenditure. Sucks. Food or something. Sustainable development. Officers on 2.5.
Okay, we're going to get started in a couple minutes. So if you can trickle back to your seats. All right, so we're going to get started for our second session. So I will pass it back to you guys.
All right, thank you. I often get tasked with the closing session of any day, or maybe the closing session of a complete conference, and I take that as a vote of confidence for my abilities to keep people awake, to send people off to a good dinner afterwards. So come on this journey with me, and we'll take it to 4:30 here with the second half of our session. So I'm showing you this right here. I see. Thank you. Scanning it. This is a QR code. Those can be scanned with any camera on your phone, and something will pop up. That thing that'll pop up is a form, a page that you can sign up for our newsletter. Do you already get our newsletter? Who out there gets our newsletter? Yes. Okay, cool. The best thing about this, that little form, is that you can put anybody's email address in there. And so if you have staff that you really think should know all this information, they don't know how they signed up, right? They can opt out, but they don't know how they signed up, but they'll start getting that information. So, little way, plug there if you'd like to. It's on our website. If you go to sao.wa.gov and go to the Audit Connection blog, that's where that QR code takes you, and you can put in your credentials, your name and email address there, and you'll start getting updates from our office. We send these out every 2 weeks, and they contain all the updates from our office, new resources, updates on, a lot of the things that Brad was talking about, emerging topics and things like that. But we also send out a lot of partner information. So sometimes we highlight Wasaka's good goings on in that newsletter as well. So go out there and catch it if you can. So a little bit more about our team. So in this second half, I'm going to do a lot of the talking. I'm giving Brad a break here, but he's still supporting. So thank you very much. What I'm going to do is I'm going to talk a little bit more about the offerings from the Center for Government Innovation. Like I said before, we are a team that is separately funded from all those audit costs that you pay for the audit services. Which means that we have a little bit more freedom in the types of things that we can do and help with and provide. And we have a very specific purpose in providing those tools and resources to governments to help them, help their education, help them perform more efficiently, more effectively, things like that. We've got some major service areas that I'm going to touch on. I'm going to sprinkle in still some good best practices on some of those audit issues that Brad talked about earlier. So I'm going to give you a little bit of an overview. We're going to dive into some good meaty stuff with the best practices. I'm going to jump back over to some, showing off some cool things like that. So like I said, it'll be a fun ride. We've got these kind of 6 general service areas that our team performs. I'm going to go through each of them right now. So the first are our lien services. Again, it's a no-cost service that is customized for your government should you have some sort of process that you think is taking too long, is too burdensome, isn't effective at doing what it's supposed to do, causing a lot of errors, causing a lot of annoyances, issues with team members, things like that are not happy with that process. Well, we have our process improvement specialists that can come in and work directly with you and your teams in improving those services. So I'm sure if you closed your eyes right now and thought about a process that you do back home that takes too long, is burdensome, has a lot of handoffs between teams that don't always go well, that's exactly the type of thing that we can come in and help with. A lot of people ask, well, what does that look like? It looks like whatever you have time for. So again, there's no cost in having a facilitation, somebody come out and actually help you with, say, a payroll process. Maybe it's your AP process. Maybe it's things like records management, things like that. No cost to have somebody come and figure out a service that works well for you and your team. So this could be a half-day training about how to make easy steps, right? Those small wins. It could be a 4-day, 6-hour-a-day workshop where we come in and we break down that process and then help you rebuild it in the way that it should be built according to your needs. So fully customized to help you. I pulled out some recent county projects that we worked on. So again, if any of these bring back bad memories for you, feelings of, yes, that doesn't work well for us right now, or it could work better, free services that our team can come in and help you to perform better, be more effective, efficient, things like that. the nice, again, the compliments to a lot of things that Brad is working on is, a lot of things that we touch, like accounts payable, payroll, maybe it's those EFTs, the process to issue those. We're helping you build those in mind so that they meet the objectives that your government wants to achieve, which a lot of times are the same objectives that our accountability audits or our other audits are also trying to keep in mind, right? Do you have good internal controls? Do you have the right people involved? Things like that. So again, any of these things have an interest to you, all you have to do is ask. And even if you don't know what that thing is, you can always ask and just say, this seems really cool and interesting. Can you help me work through what this might look like for our county? Okay, so the second major bucket of things that our team provides at the State Auditor's Office is our resource library, something that I hope is familiar to all of you. We have, I just pulled this up for another presentation, but we have 84 individual resources, best practices, checklists living in this library right now. You can see that the areas that we have, if you can't see, some of these things include like procurement and federal funds, also things like gap and cash basis financials. So a lot of them are very similar to the topics that Brad talked about that are common audit issues. And so we've tried to highlight things like internal controls, cybersecurity, procurement topics, and then develop a suite of resources to support each one of those areas to help you guys out. Just some things that are coming soon that we're working on. The segregation of duties guide that we created 5 or 6 years ago now is getting a revamp and is including a new section on federal grant monitoring. So segregation of duties essentially for your federal grant programs and what that might look like. This is also one that we always encourage you share with your junior taxing districts, because a lot of times segregation of duties is an almost impossible feat for them. But our guide has options for if you only have one person in an office, what do you do? If you have 2 people, you're lucky. Okay, now what can you do with segregation of duties? How do you have an effective cash receipting process with, say, 3 people? What does that look like in terms of roles? So we try to highlight and lay out like a template design and some options for those small governments. So again, might not be resources for you, but they might be resources to help some of those that that we both care about and try to support, which a lot of times are those junior taxing districts. Okay, so I'm going to go into just a little internal control discussion before I share some of these best practices on some common audit issues. This little phrase up here, to help us get what we want, that's what I always think of when I think of internal controls. That is the way that I define internal controls in any realm. So for those that have gone and taken a full-on internal controls course, it's a whole framework, it's a philosophy. There's 80-page, 150-page books on internal controls. I would encourage you to go out and take a look at those. Those are really beneficial. But if I boil it down to the way that I think about it, that's what I think about. For any process that you have, internal controls are really there to get what you want out of that process. And there's a variety of different things that you might want to get out of a process. It could be high-level things like we want this to, if it's payroll, we want people to get paid, right? You might want people to get paid on time. You might want people to get paid the right amounts. You might want to deter fraud. You might want to make sure that you're not sending checks that are for the incorrect amounts, right? We're trying to comply with law. We're trying to submit the right information to the IRS. There's a ton of objectives here. And that internal control, your process, your policies are all just components to make sure that you're achieving all of these things that you want. You can apply that to your personal life too. You guys got a ton of internal controls that run your personal life. You woke up this morning, you set an alarm, maybe 2, maybe 3, right? You know your risk. I don't wake up early, so I set 2 alarms, right? That's a control that you put in place to get what you want out of your day. So that's just the kind of the way that I think about things. All of our resources, they do have an aspect to them though, where we are trying to prevent fraudulent payments, errors, misuse, things like that. So for those that aren't aware, I'm going to do a kind of a high-level overview of fraud risk and the things that we are trying to avoid. So this should seem familiar to some of you. How many have heard of this fraud triangle? Most of you? Okay, good. So then I'll just touch on it at a high level. So this is a framework that the ACFE, the Certified Association of Certified Fraud Examiners believes that need to be in place in order for fraud to occur. So most fraudsters are able to rationalize the fraud that they've committed, right? There's a reason that they did it. This could be something like, hey, it's public money. I paid taxes. It's my money, right? Bad rationalization, but that's a rationalization that they make. There's pressure. We live in a society that's run by wanting and having and needing more money. So there's just an inherent pressure on people that, hey, having more money might be a cool thing. So this is one way to get it. That's a pressure on them. Maybe it's a competitive pressure. Maybe it's bills. Maybe it's health issues that are causing a lot of need for more funds. So fraudsters generally need some sort of pressure. And the last thing is opportunity. Fraudsters have to have the ability to commit fraud in order to commit fraud. And so the question here is, which one of those can we all combat? Opportunity. So that's the only one that we have control over. So even if I think that I deserve more, I need more because I'm under a lot of stress and pressure, I've got a lot of bills to pay, if I'm not able to commit fraud or make fraudulent payments, it doesn't matter, right? I cannot commit fraud with strong controls in place. And so that's why we talk so much about internal controls, good processes, and good policies, because it's really the only thing that we have to do. And, we're doing this not just to, avoid the loss of public funds, which is a big one. It's an obvious one. But we're also trying to protect our fellow employees. We're trying to protect our county's reputation. A good employee can still commit fraud. A long-term employee can still commit fraud. A lot of times they feel like they need to because of these things. But if we don't allow them to, we're saving that employee from becoming a fraudster, a bad employee. We're keeping that employee in the place that they should be, which is in good standing, right? So we're protecting ourselves, we're protecting our staff by thinking about our policies in the right way with fraud risk in mind. So controls hopefully will lead to faster detection, which often leads to smaller losses. Here's just a chart from the ACFE's. They do a report every 2 years that we monitor. From left to right is time from less than 6 months to more than 6 months. And then we have the percentage of cases in fraud down below, and then the amount of fraud loss up above. And so you can see that the longer fraud goes on, obviously we lose more money. And hopefully the good news here is that most frauds are not lasting more than 6 months, right? 31% are 6 months or less, which again means that hopefully we're catching those quickly so that we're avoiding higher losses down the road. And if you say that we hire good people, right? We have a good vetting process. Well, that's the opposite in the data. The longer that an employee works there, generally the higher the loss once they become a fraudster. So the risk of just having a good, trusting employee for long term doesn't always mean that, should a fraud happen, it's not going to be a big deal. So I just wanted to, scare you guys a little bit and highlight the fact that this risk exists out there. I'm going to try to get the percentage right. It's going to be close, ballpark, but what percentage of fraudsters are first-time offenders? You guys want to throw out a number? 65% are first time. Yeah, so over 90% are this their first crime that they've committed is fraud. The first major crime, arrestable offense. Yeah. So these people are not career criminals that often do these things. They're the people that we work with. And again, if we have controls in place, they are not the people that we work with because we're protecting ourselves. What's interesting about that stat is that about 2% of fraudsters are repeat fraudsters, which means that they've been hired again somewhere. So again, controls and hiring process, good to do that background check and make sure that they haven't also committed fraud some other place. Okay. So when we talk about all the resources, there's two ways to think about controls that you have in place. We have preventative and detective. I think the terminology makes sense to most. Preventative are the things that we can do to identify errors, mistakes, those objectives that we're not going to meet before they happen. So should we have something like a standardized form for a travel reimbursement that we require as part of our controls? We expect that if we're going to process a travel reimbursement, then it's going to come on this form with these things. If that's out of line, if it's being submitted some other way, through an email or some other way, we're going to be able to identify that right away and see, hey, this isn't how it should happen. We need to pause this and see if it's a real thing. On the detective side, these are things like monitoring, reviews, reconciliations, things that we can do after the fact to make sure that something hasn't gone through the process in a way that we didn't want to. And so our best practices kind of include both of these throughout. So I'm going to go and talk about actually some of the common audit issues that weren't as common as some of the top that Brad talked about, but just highlight that we do have resources on them. And so I'm going to go through some best practices around small and attractive assets first, because we did see that is still a common audit issue for counties. So our best practices for small and attractive assets, again, these are the assets that you do not capitalize and track for your capitalization threshold purposes, but are still important enough that should they go missing, they would be meaningful, right? These are things that we are identifying and still maybe tracking like a capital asset. We have some way to know where they're at and who has them, but we might not be calling a capital asset, accounting for them that way, things like that. Our best practice says that, you should every couple of years perform a risk assessment on the types of things that you have. So go through and, take a look at your list of small and attractive assets, make sure, those are the same pieces of equipment, the same small tools, the same things that we have had before. If there's new types of things that you're buying, make sure to consider those in that risk assessment. That risk assessment should also include questions around, how likely is this to be stolen? If it weighs 5,000 pounds, then it's probably not likely to be stolen. And so you're sort of doing an assessment on, okay, how likely is it? Some of the other considerations are, how risky is it if something should go missing? How hard is it to reacquire? We take the sheriff's office. They have a lot of things that probably would not be great if they were to be out in public, right? Stolen, lost, misused, things like that. And so even if they're smaller items, if they have some sort of public risk, potential reputational risk, those are all things that we should at least be considering in how we're tracking them and accounting for them for loss, misuse, fraud. Just as a reminder, as before in our federal grant management guide that we put out, there are different requirements for making small and attractive asset purchases with federal dollars. So just be aware of those. We always consider, I'm sure many of you have separate thresholds for different types of assets. So, a cell phone, for example, might have a different threshold than machinery or tools or something like that. So be smart about how you're identifying things. Don't just say because it's not $500, you're not going to track it. Because if it's under that, but a risky class of asset, consider including it. Just as for those that, because it's best to have an inventory and asset management done centrally while still handing responsibility out to the departments. Just a best practice for efficiency is to be consistent in the thresholds or the asset classes between departments. If it's the same type of an asset, it's just a different team is using it. It should just be as risky as anything else. And so just for efficiency, it's easier to track and manage those if you're setting consistent thresholds. All right, so I have some steps here for considering a risk assessment for assets. I think I kind of talked about most of these. Yeah. All right. So the next common audit issue area that was identified, I think it was P cards, credit cards, things like that. We talked about pay cards. That was super interesting. I think we could spend probably the rest of the session talking about pay cards, it sounds like. Those are a good topic. So for credit cards, though, we're still seeing as a hot topic quite frequently, which I think came from the question from somebody before, was, personal use of county credit cards. So we're still seeing a lot of personal charges that come through on government credit cards. Again, this can be mistakes. It can be something more than a mistake. The idea is to be able to identify those and catch those timely so that they're not made in repetition, again, either on purpose or accidentally. And so our best practices for credit cards, consider how we're issuing credit cards. I've seen several governments, if it's you, that issue P cards or credit cards to everybody that wants one, right? We have everybody gets a card here because that's what's most efficient. Best practices, if that works for you, if that's your policy, great. Consider other ways of determining eligibility for cards, because obviously the fewer amount of cards that we have with fewer, lower limits, the less of a risk of misappropriation that could happen, the less effort it is to manage and track those cards and keep inventory, right? 50 cards is a lot easier to maintain than 150 cards, 200 cards. And so these are just considerations we recommend making as a best practice, so that we're not, Oprahing everything and just everybody gets every card, right? We don't, that's great in some situations, but not in every situation, right? You like that? Yeah, okay. Again, we talk about preventative controls. Standardize the process for what you expect cardholders to submit for reconciliation. We recommend cardholders reconcile their own cards. Seems a little bit antithetical off the top of the mind, but it's important for them to go through, identify whether or not they've made personal charges or there's been some sort of fraud charge, right? They've used the card at some place that's been skimmed and now somebody has the information. That person is going to know, hey, this isn't mine, right? These are not mine. We need to do something about this. So it's always recommended for cardholders to reconcile those and then have some sort of supervisor review that review has taken place. And again, scan to make sure everything looks as expected. And then again, our office is always going to push training. We need to annually, once every 2 years, train everybody on how to use their purchase cards, their credit cards, what a proper reconciliation looks like. And then again, supervisors, allowing them to enforce accountability over cardholders, right? One of the suggested audits, a self-audit of these cards is to look at common mistakes, which employees or departments are frequently not able to submit those or are submitting ones that have a lot of errors, and then being able to recommend enforcement of accountability for those cards. Just something to keep in mind. Oh, see, I put the joke in here. There you go. So before you do it, here's some things that you can do. Another good audit tip for this for yourselves is to take a look at limits that you've set on cards. Let's say it's $1,500 and you see that employee 1 has only ever spent $200 a month and many times it's less, right? So consider setting limits on cards accordingly. I know we always hear, well, what if this event is going to happen, right? What if I do need to spend $2,000 because it happened to me 3 years ago? Well, there's processes probably to go and spend that $3,000 outside of the credit card process. There's probably an approval and some sort of thing that can take place. And again, it's to manage the risk. The supervisory reviews are key though. There was a fraud case that happened, I think it was last year or the year before, where somebody had figured out with their credit card, their government issued credit card, that they could request reimbursement for it without any charges on it. So they could request to say, hey, spent $500 on my card this month. I need you to pay the $500 credit card bill. What it did was it built up a balance on that card. And then once they got up to $5,000, $6,000 balance in the opposite direction on that card, now their $1,000 limit was actually a $6,000 limit, and they could spend $6,000 on that card, and it only showed $1,000 on as needed to be reimbursed under the limit as they expected. So that supervisory review should have caught that there were no charges on that statement to pay for. So just really simple baseline things. And when we hear about these fraud cases, we're always like, that seems so obvious. They're happening still. And so just good to review those processes, think about things that pop up and say, is that something that we could have stopped, right? Do we have a process in place for all those cards that we could have caught that on time? Just a good question to ask. All right, I put this one special. This actually wasn't a common audit issue. I like to talk about it because you guys got a lot of vehicles. I don't know if you have a lot of take-home vehicles. I talked about this with a group of fire districts, and they like their vehicles. They have a lot of vehicles. They like to drive them. They like to take them home. And so we developed a best practice here for take-home vehicle programs. I know they're necessary for a lot of things, responding to emergencies. You know, you might have somebody, public works, that might need to respond in the middle of the night to something, and you know, it's great for that person to have a vehicle to be able to do that with all their stuff on it. They don't need to incur costs on their own vehicle when those things happen. So there's valid reasons to allow these types of programs. Our best practice is just go through and have you make sure that you're doing them deliberately. Again, you're not assigning vehicles to anybody that needs one. You're looking at call logs. You know, how often do these people need to respond, use that vehicle for work purposes? If it's rarely something that happens, they're just driving it home every night back to work, never responding to those needs, then again, do an assessment, ask those questions, consider whether your policy reflects what you're trying to accomplish here. I think, is anybody from King County here? Maybe on the call. I know that we reference King County in this best practice because they have basically a minimums requirement that if you don't use this vehicle for X purpose as you're claiming the vehicle is provided for, then we review the eligibility of it. And that's how you're deemed a vehicle for take-home use. Cool. So these are the ones that I featured. We got about 80, probably 78 more that I'm showing there in the resource library. I encourage you all to take a look at them. Like I said before, we issue a lot of these in response to the things that we're seeing as need-based out there in the world based on audit issues and fraud risk that we see pop up. Should you have any thoughts or ideas about, hey, you don't have a best practice for this or whatnot, you can send that request to us and we can add it to our list of things to research and see if we can incorporate it into a guide or best practice. They're made for you, and we're hoping that you're using them. Cool. Any questions there? Everybody enjoy the resource library? Yeah? Yes? A definite yes? Cool.
I don't have a question, but I just wanted to just do a shout out for you guys coming out and doing trainings for the local governments. I had a training in my county for, excuse me, I invited everybody, all my junior taxing districts and everybody, and it was fantastic. They don't often get the chance to go to these. They don't have the money to go to trainings and things. And unfortunately, it was after we had a really big loss in our county. Wasn't our government. Wasn't county government, but it was a big loss and it really hurt the town. It was pretty sad. So we invited them out. You guys came out. It was really, Debbie came out. She was great. Did a great fraud training. Like I said, we invited everybody. I had a full house for 2 different trainings that she did. So I highly recommend it.
Yeah, thank you. That was certainly a beneficial experience. And if anybody else is interested in doing one of those, regional or county workshops on fraud risk and internal control, do reach out to us. We have materials for you to send out. We have certain ways that you can communicate it to your invitees and advertise it. And so we do a lot of that upfront work, and you just got to have a warm building for us to come into, or a cold one if it's in the summer, for us to do that training. Yes.
If a county was interested in having one of those lean opportunities, what exactly is the process, and is there a waiting list or a line for when you can be called up?
Yeah, great question. So the answer to the first question would be that we have an email address that directs you to somebody who does all of our intake for our team for any service. So if you send us an email to center@sao.wa.gov, it's in the slides as well that I'll show you. That'll connect you with our service specialist who will walk through questions, have that conversation with you about what you think you need or want, what we can provide, when it works best for you, XYZ. We don't have any sort of waiting list. Really the thing that we work with you most on is, are you ready? Right? Do you have enough? Do we have an idea enough to come out and work with you? So that might take a couple of back and forths with our specialists to figure out exactly the scope of the project, what you want to tackle, making sure you have enough time for that to dedicate to it. and making sure you have the people available to do that. And then based on all those factors, we make sure that we can find a time that works best. If we have clients scheduled out, through the end of the year, but it's as works for them. And so we might have one next week, and then in 3 weeks, and then maybe 2 weeks after that. And so there's always a time that we can work with to slot you in should you want it right away and you're ready, or maybe there's some time for us to work through some things, get some things in place, and then we can slot you into some available time. So no sort of wait list at all. It's just dependent on when we're ready and when we have time. Thanks for the question. Okay. So I'm going to move away from our resources for a second and talk about the next thing that we offer, which has come a long way. And I know that we've talked to you several times about it in the past, and that's our financial intelligence tool. So all of the data that local governments submit, including you, and that's Schedule 1 every single year, that gets sent to the online filing system, gets published to our website in the financial intelligence tool, otherwise known as FIT, every single year. And so we have on the website the data for nearly 2,200 local governments now that are submitting reports, including school districts. This has been a long journey. This application started as an Excel database, back in early 2000s. We made it more robust around 2014. We made it its current version, which is available on mobile just a couple of years ago. And again, the idea is to provide your data back to you, back to anybody else that cares about it and wants to see it, and hopefully a really easy to understand way through this application, which required to publish online. So for those that haven't seen it lately, it did get quite a facelift about 3 years ago. We have for example, you're looking at a county's profile right now. We can show statewide county information for all counties for the last 11 years. So who likes this information? Local governments like it to look at their own data. We know that local governments like it to look at their peers' data, their neighbors' data, other people that they might be interested in to do comparisons, things like that. But we also know that, the legislators like this, members of the public like it. So we try to make it easy for people to understand. So you're looking at a county's profile right here. You can drill down into any of those, again, for 11 years worth of information for you that you've submitted to us. Here's just an example too. We have, again, you're looking at the screen here is rankings based on taxes collected. So this is all based on your BARS information that you've submitted to our office. So you're seeing total statewide taxes for counties collected, about 22 billion. And then a ranked list of where all the counties sit based on that revenue. You can go to any BARS account, revenue or expenditure. So you can see who spends about the same as you in any sort of category. You can also see how much you compared to maybe the property tax collections. Maybe it's a very specific type of tax. You can go and see exactly, okay, who collects this much? Who might I reach out to? Maybe it's a unique revenue source or expenditure, and you want to figure out who else is collecting or spending that. You can do it here without too much research. You don't have to go around to everybody's website, do research in their financial statements, things like that. It's all available here for you. Here, of course, the underlying, one of the first things that we put into FIT was our financial health indicators. And again, trying to give you visibility into some of the same indicators that our auditors use as part of their assessment into financial health. But again, the benefit of having it all in one place is that we have every other county's information in here as well. And so I don't ask Heidi, but I always use her. I just say because it's alphabetical, but I also know because she won't throw things at me if I put her stuff up here. So what I have up here is Adams County, just one of their ratios. And then again, shown against average of all counties. I think I put, the mean and then the median of all counties. And you can see how those line up. Again, giving you more information than maybe just your solo statements may alone. Sometimes it helps to have that perspective and that context of other governments as well. Coming in probably just a few short weeks, we'll also bring back that side-by-side comparison. So if you did want to pull up Adams County next to Lincoln County or anybody else, you can do it side-by-side and see that comparison for anybody that you want. Members of the public who we build this for as well. If I live in Olympia, and if I wanted to pull up Olympia, Tumwater, Lacey, Olympia School District, all the ones that I'm kind of by, I can put multiple gov types together. I can see all their information side by side. So fully customizable for you guys to go out and look at in your personal life or your work life. I like to imagine all y'all are driving around and you're like me and you pass by a fire district and you see their fire hall on the left and you're like, who are those people? And you pull up Fit and you can see who those people are, how much they bring in, how much they spend. I like to think you're just like me. Okay, this QR code will take you to Fit. Fit is found on our website, sao.wa.gov, reports and data tab. Fit is right there, one click away, one hover and one click. If you go here, this will take you right to the homepage, which allows you to find your government. You can pull it up. The thing is, if you do it here, we have one of our technical experts that helps maintain this application back in Olympia, and he tracks the Google Analytics. So he knows how many people are clicking on it, where they're clicking from. And whenever I bring it up at conferences or with associations or groups, I like to imagine he's back in Olympia and sees a big spike in user activity and he has no clue why. And he gets really excited about it. So that is Dwayne. Yeah. So I hope, so if you guys do hit this right now and pull it up, you can even pull up your own government and take a look at what it looks like in there. The benefit of doing that in seriousness, of pulling up your government either now or back at the office or at home, right, is that should you want to explain it to anybody, should a member of the public or another county or a government ask about Fit and say, hey, can you help me explain what this is? You'll know about it. And you'll be able to talk about it and have that conversation on the same topic, on the same data. We know that that's an important thing to do, is kind of at least base the conversation on something consistent. And so this is a consistent place that you can have that conversation. I know we have some anecdotal use from some heavy users that use some of the expenditure comparison information for things like contract negotiations to benchmark their salaries, since you can pull up salary numbers in Fit for your government, see how that compares to other governments that you think you're similar to, things like that. So there's an unlimited amount of ways that this has been used, and sometimes we're still surprised back in Olympia when we see somebody using it in a way that we're like, oh, that's really cool. I'm glad that you found that use case for it. We'll share that with other people. Okay. So the final thing that I'm going to tout here, the last kind of service area of our team, again, free, are our team's cyber checkups. So we talked a little bit about the EFT risk and the cyber attacks that are frequenting local governments. And so we put together a quick response to all of those risks in a package that's called the Cyber Checkup. So the Cyber Checkup is, this is the way that I explain it, and it helps me understand as a non-cybersecurity person, is that this checkup is very similar to that of your car's like multi-point inspection when you take it in to get an oil change. So you bring in that car, they give you a report with green, yellow, and red on whether your tires are inflated properly, whether your filters are good or not, your tread, all that kind of stuff. And you get that report back, and they don't really fix any of it right there, but it gives you an idea about what to prioritize either that day or later. Are these things that can be done for free? Can they be something that we're going to need to discuss and integrate into policy? It's basically a high-level 20-point inspection of your cybersecurity program. And I know that a lot of us in here are finance, but this touches finance a lot because your cybersecurity experts, a lot of times rely on, the support to have proper resources to fix these things that would ultimately affect county as a whole should something bad happen. So they're looking out for you. So this is just something that if you're interested in, you're not in the position to undertake the assessment because you've got a cyber person back in the county, this is something good to recommend. Say, have you heard of this? It's free, only takes a couple hours to get done, and can be provided relatively fast within a week or two turnaround to get some really good results and really fast actionable items. So here's that email that I told you about. That'll go right to our intake person. And so if you're curious about any of those things or have questions, we provide technical support on any of those control areas. If you have questions about AP, questions about payroll, Is there a better way of doing this? Is there a big risk here? You can always email us and ask those questions too, very similar to the help desk on any of the topic areas that we have in that resource library. And you get connected with a technical expert to talk through those issues with you. So might not be accounting related that gets submitted to the help desk. You can email us there about any of those like non-reporting things and get in touch with an expert on, federal grants or procurement or any of those other topics. Okay. Any questions?
Well, I have a question, but it's a little bit unrelated to your presentation. We all are aware of the state shortfall, and I was reading where Governor Ferguson is kind of looking at where he needs to make cuts, staffing cuts, program cuts. How does the state auditor, how are you guys feeling about, have you been notified of any potential changes to your programs? And is there anything that we can do to help to speak up for you so that we don't lose all of these great things that you offer?
Well, if I was Pat and I was talking to me, I would say we're still in the monitoring process. So things are changing, as you guys know, every single day, every single week. The House or the Senate or the governor's coming out with some new recommendations. And we've got, of course, our team that's monitoring those. And nothing's final until it's finalized. And we're hoping that gets done, sooner rather than later so that we know any adjustments that might need to take place. You can go and read some of the things that that they're doing and kind of look into the impacts that might happen to our office. Again, I'm not Pat, so I'm not going to speak on exactly how we're treating those or caring about them. Brad, I don't know if you want to add anything, but I think we're in the monitoring phase. A lot of the things that we provide, of course, we've got two sides of this office in terms of, more than that. But when we talk about, at least for this presentation, we've got our audit services, and then we've got these kind of center I-900 services. And so all the changes in the budgets have different impacts on both those sides. I know that Pat said that she, she's been meeting with the associations, and she said that she appreciates the support for all the things that we believe are helping local governments, like all these resources, like our audit services that we provide. So yeah, I think that's what I'd say. That's what I know.
Perfect. You just make sure and reach out and let us know, if there's any outreach that we can do to.
Has Pat, I know that they're out meeting with associations. I don't know if you knew if Pat Kelly have already come out and talked to some of the association or not?
Yeah, I actually was part of the meeting with the county association. So we, talked through those issues. And as I mentioned earlier, Kelly Collins is now, working directly with Pat. And so she really understands what we do. So she's actually been working with the legislature and kind of explaining what we do, how important it is. So I think it's really valuable because that's something where Kelly understands all the aspects of our office. And so she's, making sure that they hear that and they understand what services that we do provide so hopefully there aren't big changes. But as Niall said, I just went to a meeting last week and they still haven't finalized anything. So it's sort of, we don't know what it's going to look like. We have the governor's budget. We actually had Governor Inslee's budget. Then that changed. Then the Republicans had a budget. The Democrats had it. So, I mean, you don't know how it's going to finally end up. But, hopefully, I know you guys are probably all concerned as well when you look at what cuts could there be and what from the legislature. So, but yeah, I think that what Niall said is pretty accurate for where we're at. We're kind of just in a wait and see approach. And then we'll kind of go from there. So.
Because all of the information and the assistance that you could and the resources you provide are so great that I'm hoping that, that all of that will continue.
I thought I'd just add something to the suspension and debarment piece of it so nobody else has to make the same mistake we did. We were awesome, and I thought I had all my bases covered because I had contracts and I had suspension and debarment written certification sent out to everybody, and I thought, whew, look at me. I can't wait till they come in. Bring it. And then they said, hey, how about those vendors that you used for these federal funds over $25,000? And I was like, what? The vendors? Yeah, we didn't get the vendors. We got all the contracts. We got everything else, but we didn't get the vendors. So we got a finding on that. But I went in to change our procurement policy, which was even funnier, and read through our procurement policy, and there it was, right in the procurement policy, that vendors needed to have a form. So, hey, read your policies before before you start a federal project. But vendors are included in that. Any vendor you use over 25,000. Or should we just skip it? I don't think so. I don't think so. No. Okay. We're good. Oh, I have stuff. Okay. We have texts. Just a reminder for those that need CPE. Is this it? Are we good? Do you guys have more? I'm sorry. I just like. It's the end of the day. I'm like, wrap it up. Thank you for your presentation. It was very good. Thank you guys for coming again for the second day. And just a reminder, if you have CPE, please make sure you sign up back there before you leave. And also, Derek and his team has nicely put together some dinner recommendations. So if you're not sure where to go to dinner tonight, he's got little slips of paper back there that you can take with phone numbers and such. We will see you tomorrow, 7:30 for breakfast in here, 8:30 for start time tomorrow for a much shorter day, but some great sessions. He texted me the two things, so I think I got them. All right.
Recording stopped.